Good morning, everyone. I'm Alexis Christoforous. Brian Sozzi is on assignment. This is the first trade for Thursday, December 5th. A step forward on impeachment. House Speaker Nancy Pelosi is set to make a major announcement in just moments. We are live on Capitol Hill with the latest. Athleisure under the Christmas tree. We speak live with the North American president of Adidas about what they're doing to beat the competition like Nike and Under Armour in this all-important holiday shopping season. And oil expectations. OPEC meets in Vienna with the Saudis pushing another production cut, but will the other nations go along with it? And how does the big Aramco IPO play into the future of energy? Let's get a check of the futures ahead of the opening bell. Extending yesterday's rally, as you can see, Dow futures up better than 70. We've got S&P futures up 8 and NASDAQ futures rallying 29 points. Of course, we'll get a full check of those markets for you in just a bit. But first, today's big story. And breaking news this morning from Capitol Hill. House Speaker Nancy Pelosi is about to make an announcement on the status of the impeachment inquiry into President Donald Trump. Editor-in-Chief Andy Serwer joining me now for more on this. So, Andy, should we expect Pelosi, when she comes out to speak, that they are moving forward with the impeachment articles?
Well, that's what we're anticipating, Alexis. There's no certainty of that. And remember, at one point several months ago, she decided not to go forward with the impeachment proceedings. But it would look very likely that she is going to this time go forward. And I think the difference, of course, has been the Ukraine situation and the investigation there. And the impeachment process is a very unusual one. And this would be the third time that a U.S. president would be impeached. And it's not something to be taken lightly by any means. And
just how these articles of impeachment will be written is ultimately left to Pelosi. I mean, we know she's asking many of her colleagues, but she's really going to have the final say here.
Yeah, that's right. And it's not exactly clear which route these articles would take and what they will speak to directly. And, for instance, one question that many people were asking who are sort of in the know here is, will it include any material from the Mueller hearings? Mm-hmm. Or will they stick strictly to the Ukraine situation? And just to read about articles of impeachment, a person of high office must be removed upon impeachment if they had committed, and here's the phrase, a high misdemeanor, a felony, or treason. And they are nevertheless subject to indictment under the law. So this is, very high stakes stuff. And of course, by filing the articles of impeachment, it by no means means that the president will be removed from office.
Right.
That means this goes forward, and then ultimately there'll be a vote in the Senate. And the thinking, of course, right now is that the president would have the votes. In other words, the Democrats would not have the votes to actually remove President Trump from office. But all that's subject to change based on news and based on the articles of impeachment and what they say, if in fact they are filed.
Yeah. Now, among the articles that the Democrats are considering specifically, abuse of power and bribery, obstruction of Congress, and obstruction of justice. If she does come out and do what we expect her to do and say they're moving ahead with the articles of impeachment, what comes next? I imagine a vote which they want to get done, I would think, before Christmas.
Right. And when you're talking about the timing, that's very critical, Alexis, because as we get closer to the election, then the president has actually leverage on his side, because he will simply say, you know what, this whole thing just needs to be decided at the ballot box, which is something he's already introduced, and the Republicans have already said that previously, which is, let's let the American people decide. They're going to have an opportunity in November of 2020, and this whole thing is a witch hunt, to use their phrase. Mm-hmm. And so let's put it directly to the people. And so the longer this plays out, the more weight that argument carries, I think.
Yeah, I think for them, the timing would be a vote before the first of the year, and then it would go to trial in some point in January. But as you were saying, very unlikely that he would be actually removed from office. Yesterday, we had Andrew Card on the show. He's a former chief of staff for George W. Bush, and he said he actually believes that there's enough evidence out there that warranted an impeachment inquiry, but he's very upset with the way the Democrats have gone about it, which is perhaps no surprise from a Republican like Card.
We're right. And the other thing that you're hearing from the Republicans is that, they're moving too quickly. But before it's like you can't move too slowly because then you're going to get near the election. So of course, this is gamesmanship by the Republicans, which is to be expected. That's sort of their job.
And here we have Nancy Pelosi walking over to the podium at Capitol Hill. Let's listen in.
Let us begin where our founders began in 1776, when in the course of human events it becomes necessary for one people to dissolve the political bonds which have connected them with another. With those words, our founders courageously began our Declaration of Independence from an oppressive monarch for, among other grievances, the king's refusal to follow rightfully passed laws. In the course of today's events, it becomes necessary for us to address, among other grievances, the president's failure to faithfully execute the law. When crafting the Constitution, the founders feared the return of a monarchy in America. And having just fought a war of independence, they specifically feared the prospect of a king president corrupted by foreign influence. During the Constitutional Convention, James Madison, the architect of the Constitution, warned that a president might betray his trust to foreign powers, which might prove fatal to the Republic. Another founder, Gouverneur Morris, feared that a president may be bribed by a greater interest to betray his trust. He emphasized that this magistrate is not the king. The people are the king. They therefore created a constitutional remedy to protect against a dangerous or corrupt leader: impeachment. Unless the Constitution contained an impeachment provision, one founder warned, a president might, quote, spare no effort or means whatsoever to get himself reelected. Similarly, George Mason insisted that a president who procured his appointment in his first instance through improper and corrupt acts might repeat his guilt and return to power. During the debate over impeachment at the Constitutional Convention, George Mason also asked, "Shall any man be above justice? Shall that man be above it who can commit the most extensive injustice?" In his great wisdom, he knew that injustice committed by the president erodes the rule of law, the very idea of fair justice, which is the bedrock of our democracy. And if we allow a president to be above the law, we do so surely at the peril of our republic. In America, no one is above the law. Over the past few weeks, through the Intelligence Committee working with the Foreign Affairs and Oversight Committees, the American people have heard the testimony of truly patriotic career public servants, distinguished diplomats, and decorated war heroes, some of the president's own appointees. The facts are uncontested. The president abused his power for his own personal political benefit at the expense of our national security by withholding military aid and crucial Oval Office meeting in exchange for an announcement of an investigation into his political rival. Yesterday, at the Judiciary Committee, the American people heard testimony from leading American constitutional scholars who illuminated without a doubt that the president's actions are a profound violation of the public trust. The president's actions have seriously violated the Constitution, especially when he says and acts upon the belief. Article 2 says, "I can do whatever I want." No, his wrongdoing strikes at the very heart of our Constitution, a separation of powers, 3 co-equal branches, each a check and balance on the other. A republic, if we can keep it, said Benjamin Franklin. Our democracy is what is at stake. The president leaves us no choice but to act because he is trying to corrupt, once again, the election for his own benefit. The president has engaged in abuse of power, undermining our national security and jeopardizing the integrity of our elections. His actions are in defiance of the vision of our founders and the oath of office that he takes to preserve, protect, and defend the Constitution of the United States. Sadly, but with confidence and humility, with allegiance to our founders and a heart full of love for America, today I am asking our chairman to proceed with articles of impeachment. I commend our committee chairs and our members for their somber approach to actions which I wish the president had not made necessary. In signing the Declaration of Independence, our founders invoked a firm reliance on divine providence. Democrats, too, are prayerful, and we will proceed in a manner worthy of our oath of office to support and defend the Constitution of the United States from all enemies, foreign and domestic. So help us God. Thank you.
And there you have it, Nancy Pelosi on Capitol Hill making the announcement I think we all expected this morning that they are going to go ahead. The House is going to go ahead with articles of impeachment against President Trump. And Andy, she said the facts are uncontested that Trump used his power for his own political benefit. She said his acts seriously violated the Constitution. And she called upon our forefathers in her speech, talking about what they had to say regarding impeachment. Does any of this come as a surprise to you?
It doesn't, and I thought that she, as you said, invoked the founders and put this in historical context, and I thought it was very plain and strong language, which I think is undeniable regardless of which side of the aisle that you sit on, whether you agree with Speaker Pelosi or not. And she is the third most powerful person in our political system in the United States. That's something to remember, I think. And it sounds like that she's taking this responsibility very seriously. And I think that it's something that the president is going to have to be very concerned about, quite honestly.
Yeah, and in speaking about our forefathers, she actually quoted George Mason, who was at the Constitutional Convention so many years ago, saying, "Shall any man be above justice?" She said President Trump's failure to faithfully execute the law has left them no choice but to move forward in this way. She said they will do so prayerfully. I want to mention that Commerce Secretary Wilbur Ross actually spoke to Araceli Marcellus a short time ago. He's actually in Indianapolis, where he was visiting a woman's prison, and Sabeel asked him about the impeachment inquiry. We should note that what you're about to hear was before the formal announcement from Nancy Pelosi, but here's what Wilbur Ross had to say.
It's a silly diversion of time and effort. Congress would do a lot better to pass USMCA, the wonderful new treaty with Canada and Mexico. That will bring $30 billion of new capital investment. It'll bring 176,000 new jobs. That's what they should be focusing on, not a witch hunt.
Again, he using the word witch hunt as well. Is this a distraction? I'd have to think a huge one for the 2020 election.
Yeah, it is. And I mean, you know, this is very much uncharted waters here, Alexis. So you're going to have both a presidential campaign and an impeachment proceeding simultaneously occurring. And, you know, the Democratic primaries are not that far away. So fasten your seatbelt.
Yeah, there's a lot more to get through. All right, thanks so much, Andy.
Thanks.
All right, we want to head down now to the New York Stock Exchange and check in with Yahoo Finance's Inez Ferre for an early look at what is going on there. I don't know if what we just heard from Nancy Pelosi is affecting stocks at all, but I do know there is a big change at the top of United Airlines. Looks like Oscar Munoz is out. What can you tell us, Inez?
Yeah, that's right. Well, he will be transitioning to executive chairman of the board of United in May of 2020. He'll be handing over the baton to United President Scott Kirby. Now, Munoz had brought in Kirby 3 years ago, and there had been some speculation as to whether Kirby would be hired by American, where he had been at before. But back in October, Kirby said that he would be staying at United. So President Scott Kirby will become CEO of United in May of 2020. And we're also watching this morning Tiffany. This is after they reported their third quarter revenue and earnings per share, which came in as a miss in light of the agreement to be acquired by LVMH. Tiffany said that it would not be holding an earnings conference call today.
All right, Inez, thanks so much. And again, stock futures are higher across the board, despite news that Nancy Pelosi just came out and said the House is going to move ahead with articles of impeachment against President Trump. Stay with us, much more on that and the United Airlines shakeup when we come back. Athleisure is a big trend this holiday season. Here to share some more insight on the industry is the president of Adidas North America, Zion Armstrong, along with Yahoo Finance's Dan Roberts. Good morning to you both, and good to see you.
Good morning. Thanks for having me.
Let's talk about that athleisure. Do you think that that's going to be one of the big presents as we near Christmas Day?
Oh, without a doubt, we've seen the trends over the last 9 months continue to drive some fantastic growth, be it both sport and sport culture.
Zion, while we have you here, and Alexis brought up athleisure, I'm curious to get your take now that you have been in the job for how long? 6 months, U.S. CEO?
No, 18 months now.
18 months.
Been in the US 5
much longer
years.
than I realized. So when you look at the competitive landscape, when you look at Under Armour and Nike, then there's VF Corp. I mean, who do you think of as your biggest competitors, and what do you think they're doing that you're most closely keeping an eye on?
Yeah, we would like to keep focused on ourselves. And our mission in the last 5 years has become the best sports brand in the world. 40% of the market sits here in the US. And 5 years ago, we were in a struggling situation. Over the last 3 years, we've more than doubled the business. So we're happy with our progress, but we've still got a long way to go.
Yeah, and in fact, North America sales were up 10% last quarter. I think they even outstripped Nike. And I know that you were struggling with supply chain issues, especially coming from Asia, where I think most of your supply comes from, I think over 70%. Are those troubles behind you now?
By the end of this quarter, those troubles are behind us. So then we go into next year with some tailwinds behind us.
Tailwinds, what are some of those tailwinds?
Sport. So we're really pleased with the progress that we're making across American sport. Again, 3 or 4 years ago, that was our real battleground. So we're starting to get some fantastic momentum in football and baseball and basketball, and of course our strength in soccer.
Let's talk about footwear a little bit. What do you see happening in the sneaker industry? What we hear a lot from analysts is that performance footwear has just been in decline for a couple of years now. Sales of things like basketball sneakers you would wear to play sports in, whereas the athleisure trend, as Alexis mentioned, that has been very good for you guys, people wearing running sneakers all day.
Yeah, without a doubt. We actually sat with NPD data yesterday and they shared the same trend lines. So one of our most important choices was open source. And so over the last few years, we've been working with partners such as Pharrell. Yesterday we launched a collaboration with Prada. And in a couple of weeks' time, we're very excited about our new collaboration with Beyonce.
So these trends are not going away, the idea of kind of everyday fashion over performance.
Right now we see that trend line continuing.
You also have a partnership with Kanye West, with the Yeezys. You've got slides coming to market soon from him. When can we expect that?
In the next few days.
In the next few days? All right. Why slides?
When you look at, as we go into the summer season, then obviously, we want to win both on the performance side of things, but also when an athlete comes off the field, obviously they want to be comfortable. So,
was it Kanye's idea to do that, or did you guys? We know you guys have the iconic slides too, or did you guys say, hey, what about a slide?
Well, this is what again we love to give our open source partners creative freedom. So in that case, we want to obviously set trends as well.
You mentioned Kanye, Pharrell, you brought up. Where do you guys sit with kind of your athlete portfolio? Because that, as far as I know, someone who covers sports business, that has kind of shifted recently for companies that, we see less of pay one athlete, a big, long, extensive contract where they are your one big endorser. And instead, I know you guys have pushed the idea of creators and working with a lot of creative types.
Yes, if we start with football, we're very proud of our portfolio. We've more than quadrupled the amount of NFL athletes that we have, and we have the reigning MVP with Patrick Mahomes. If we look at baseball, again, we've had a fantastic achievement of tripling the size of the athlete base that we have. And we have the Carlos Correa, we have Bregman, we have Chris Bryant, Turner. So we're really happy with our progress there. And at the same time, adding the NHL to the family, and of course, extending the Major League Soccer.
What about the acquisition of Reebok? How things were not going too great for Reebok. How are things doing now?
Well, Reebok just announced earlier this week as well one of their first sustainable shoes. So
sustainable shoes.
Sustainable shoes, and you've seen again them returning to growth in the US. And you heard our CEO Casper talk about last year was the first year that they returned to profit. So still immense opportunity for our Reebok brand as well.
With all the upheaval at Under Armour and the changes over at Nike, does this really represent an opportunity for Adidas, perhaps in the Americas like never before?
We'll stay focused on our own game plan, so we won't comment on our competitors that I have immense respect for. We're 1 year away from finishing our creating the new business plan, which is our 5-year plan. So we're just relentlessly focused on bringing that home in 2020.
All right, looking forward to those Yeezys. Zion Armstrong of Adidas, thanks so much. Thanks, Dan.
Thanks so much.
Coming up, a home run for the Mets, the hedge fund manager that's looking to buy the team. That's coming up next. Let's take a look at today's News Bites. At least 2 people are dead, another in critical condition after a sailor opened fire at the Pearl Harbor base in Hawaii. The motive is still unclear, and officials say they don't yet know if the sailor had any relationship with the victims, who were civilians. The sailor, who was assigned to the submarine USS Columbia, took his own life. American military and intelligence officials tell the New York Times that Iran is secretly moving short-range missiles into Iraq amid a wave of violent protests in the country. Officials say it's part of Iran's plan to assert its power and intimidate other countries in the Middle East, including American allies in the region like Israel. Senator Elizabeth Warren is reportedly working on a new law to stop mega mergers. Bloomberg reports the bill calls on regulators to look back on the past 2 decades of mergers and ban any similar deals from happening in the future, while considering the impact on entrepreneurs, innovation, privacy, and workers. It's not clear when it would be introduced or if it will be voted on. And the New York Mets could soon have a new majority owner. The team says it's in talks with minority investor and hedge fund billionaire Steve Cohen about taking a controlling stake in the baseball team. But owners Fred and Jeff Wilpon would remain in the CEO and COO roles respectively for the next 5 years. The deal is still subject to approval by Major League Baseball owners. Coming up here on The First Trade, a big quarterly report from Slack. We'll go inside the C-suite with the company's CEO to see the challenges it still faces. Welcome back. This week's episode of Influencers with Andy Serwer features a conversation with Adena Friedman, the president and CEO of the NASDAQ. Our editor-in-chief, Andy Serwer, is back with me for this one. And Andy, Friedman, the first woman to ever lead a global exchange. Did you talk to her about that?
Talk to her about that a little bit, and there's so many other things to talk about.
Sure.
And of course, IPOs are kind of a lifeblood of an exchange, and I talked to her about the changing landscape there. Of course, we've had a big flurry of IPOs, and it's sort of gone true to form, as you might expect, which is as the cycle gets longer, Alexis, some of the companies coming public have maybe some more issues. And so I asked her a little bit about the latest crop of IPOs. Here's what she had to say.
As companies start to mature and get ready for the public markets, public investors are really focusing on profitable growth. And that has become more and more of a focus for those public investors this year as the year has progressed. And I think so as some of these larger tech companies come out, that's become more of a dialogue than maybe they were expecting as they were entering the markets.
So reading between the lines there. In other words, these companies went public and they're like, don't worry about profitability. We got to do that sometime in 2025. And the public markets have been saying, no, actually, we'd like you to be public in 2020. How about Q1?
Yeah.
And so I think
profits.
it's a bit of a wake-up call for some of these companies that have gone public recently.
All right, good stuff. We know that that was a far-reaching conversation you had with Adena, and you can catch more of that conversation today on Influencers at 5 p.m. Eastern, right here on Yahoo Finance, as well as on our app. Andy Serwer, thanks so much.
Thanks.
The opening bell coming up next on The First Trade. And now here's a look at the action in overseas markets where things are mixed, and we'll be right back. Welcome back to the first trade. We're just a few minutes away from the opening bell. Stock futures holding on to some of the gains we saw earlier this morning. Let's go around the bell now with Erin Gibbs, president of Gibbs Wealth Management, and Lauren Gilbert, president of WealthWise Financial, joining us via Skype, along with Yahoo Finance's Jared Blickery at the Wi-Fi Interactive Board. Good morning to you all. Just a short while ago, House Speaker Nancy Pelosi announced that the House will go forward with articles of impeachment against President Trump. And Erin, I'm going to start here. Doesn't look like the markets are responding much.
No, I think what they're really going to be responding is more about some of the positive news on the China tariffs and any potential further news on the tariffs with, particularly with France. So I think that's what's at the forefront, as well as, of course, retail sales, any numbers that we come out, further looking at this holiday season. I think that's going to be much more at the forefront of investors for now.
Laureen, is this impeachment proceeding more of a distraction for investors? Are they sort of keeping one eye open on this?
I think people are watching it, but as we can see, it has not impacted the markets at all. And it really has been a story about trade, not about impeachment.
Jared, you've got to look at what the world is doing this morning.
Yeah, we have some green in Asia. So overnight, Tokyo is up about 0.7%. So is the Shanghai Composite. Hong Kong, the Hang Seng there is up about 0.6%. Europe is kind of mixed. We see London down as well as the DAX in Frankfurt. And Paris is up, though. The CAC 40 up about 0.2%. In the U.S., we're tacking on some nice gains here, about 0.25 percentage point for the Dow, S&P, and NASDAQ.
Just a few weeks left to the new year. And Erin, are you expecting us to hit perhaps more records as we head into 2020?
It's certainly possible, but as we've seen for much of this year, it's really dependent on the rhetoric that comes out about trade tariffs and how the talks are going. So that certainly could potentially derail us. Fundamentally, it shouldn't. And fundamentally, we're looking at a really strong Q4, good earnings report, very good earnings profit growth into 2020. So from a corporate side, we should be able to at least hold the highs, if not maybe make something a little higher. There's nothing to stop us from there, particularly with stable interest rates. But the trade tariff rhetoric could easily derail us.
Absolutely. Here we have a new trading day underway. SpongeBob bringing things in at the NASDAQ with Viacom CBS about to merge, we know. And Toys for Tots over at the New York Stock Exchange. The Dow Jones Industrial Average up about 90 points right out of the gate. Laureen, Erin talked about fundamentals. Tomorrow we get the all-important jobs report from the government. What are your expectations there?
Well, I think that we're going to see hopefully some good news with regards to jobs. We, as was mentioned about the rest of this year in the next couple of weeks, I would say that December 15th is our real marker to see if those tariffs go into effect. If they do, we're talking about a 15% tariff on $160 billion worth of Chinese exports. And I think that that could derail the markets, at least temporarily, if that goes into effect.
Derail in what sense? Are you looking at a 5% correction or something deeper than that?
I think we could go into a correction territory, 5 or 10%, if that were to happen. And if that were to happen, I would see it as a buying opportunity because fundamentally we do see the economy being strong going into 2020.
Is December 15th a red letter day for you?
I think Wall Street has pretty much priced in that it's going to happen. We don't expect the talks to be resolved. So for me, yes, it's certainly going to be important, but I think most of Wall Street has that priced in, particularly as we look at the differentials between revenues and profits. We've kind of baked in those costs that companies are going to have to eat those costs, particularly in Q4 as well as the first quarter in the year. You can see that there's a big shift. For example, in fourth quarter, we're expecting 8% profit growth for retailers, 8% sales growth for retailers, okay, but 8% contraction in profits in the fourth quarter. So even though you're
for retailers?
Yeah.
Is that because of discounting or?
It's because of higher cost. It's a lot of the tariffs that have already gone into effect, higher logistics of trying to ship everything in before December 15th. All of those, expedited shipping costs money, right?
Right, yeah.
And so you see that in
You're
the
gonna have to pay the
retailers.
price.
And so you see that Wall Street is sort of expecting this to happen when you look at estimates. So I don't necessarily think it might completely just derail the market trends in the last 2 weeks of the year. I think that's more when we're looking at 2020, we see the real impact of those tariffs. We start seeing companies say, this is really going to affect our bottom line, potential downward revisions, and I think that's where we might see it.
All right, Jared, what have you got over at the Interactive Board for us?
I'm looking at some of the earnings that came out after the bell yesterday and this morning. So the big one is TD Bank, that's down 1.5%. But some of the big movers here, we have 5 and below is up over 6%. It's up about 23% on the year, but you can see it's been caught in a trading range for most of this time. Also looking at Michaels, this is off about 10%. One of these specialty retailers, just another kind of sad story, they're down 52% on the year. And finally, we have Signet Jewelers. They are down 41% on the year, but they did get a nice pop, about 12% for today off their earnings. And we'll take a look at the Dow now, and we can see Apple is up about almost 1% here. Microsoft about even. Financials catching a bid here as we see the yield curve up. It was another big day yesterday for the 10-year. So JP Morgan is up about 0.2%. Goldman Sachs up 0.5%. And then some of the big point movers, Boeing is down 0.3%. United Health, the second biggest, just flat right now.
Jared, I'm curious about volatility. You and I have talked a lot about that this week. Is it still continuing to be on the hotter side, I guess?
Well, we saw this spike, and I was looking for something in the range of 18, and we got 17.99 print, and we've backed off since then. This looks like the wrong market here, but nevertheless, volatility has been kind of suppressed, and so when we did get that spike, all we got really in the S&P 500 was a 2.7% drawdown. If that's the worst of it, and that's all we see in December, I would say that's pretty good. We can also look at seasonality. Now, Ryan Dietrich was out with this post the other day, and he's looking at S&P 500 seasonality in December. We can see it's kind of flat until about the 15th, and that's when we're supposed to get our trade news. That will dominate, but seasonality favors the S&P 500 and stocks in the second half of the month.
Laureen, what do you think if we see this increase in volatility, what should investors do to sort of help their portfolios offset that?
Well, this year has been a great year in the markets, in the equity and the fixed income markets. And so what we're talking to our clients about is year-end planning. Normally, we would look at tax loss harvesting, but there really hasn't been tax loss harvesting to be done this year without having many losses. So what we're talking to clients about is, do they want to take some gains, take some equity off the table, especially in areas that have had a huge run-up, like, say, technology or even high-yield bonds, and look at rebalancing their portfolios and rethinking about risk.
So where do they go if they're rebalancing? Where are they going to put some of that money?
Looking at sectors that have not had the same run-up, sectors like healthcare, which when we look at revenue growth and we look at earnings growth potential, we see that as being a potential good sector for 2020.
What about you, Erin? What are you looking at in 2020, early part?
So much to her point, I'm looking at a bigger, more generic type of rebalancing. And so a lot of what we've seen is actually a faster appreciation of value stocks. Okay. So instead of just saying tech, I would say it's more the growth. So if you're overweighted on your growth side, that you back off of the growth because that's had the big run up. I think there's more potential for value within 2020, particularly when we look at the differentials between earning growth rates and valuations. It's definitely more of a safety play going into 2020 if we do hit some bumps in the roads with tariffs or any unexpected changes for the presidential election. I think value is definitely a safer and an easier way to get that capital appreciation without some of the higher prices and higher valuations.
Next catalyst for this market is probably tomorrow's jobs report. What are you expecting? Because it looks like 185,000 jobs is what the street widely is expecting, unemployment at 3.6%.
Yeah, I don't expect a huge change. We know that it's getting harder and harder to add jobs because just we're almost at full employment. So so I don't think that anything under 200 or as long as we're sort of in that 150 to 200 range, I think we're in that safety spot. We know that they're going to add some jobs just for seasonality workers, so end of year workers. So I I think we've been pretty stable. There haven't been any big shocks. I doubt there's going to be any big surprises tomorrow.
Well, we will be here covering it because our show starts a half hour early, so be sure to join us at 8:30 a.m. Eastern. I want to thank Erin Gibbs, Laureen Gilbert, and Jared Blickery for joining us this morning. Thanks to you all.
Thank you.
And coming up here on The First Trade, the future of OPEC. We'll see what can come out of today's meeting and how that might impact you at the pump. Stay with us. We're less than 10 minutes into the trading day. Let's see what is moving the markets now at the open with Yahoo Finance's Inez Ferre at the New York Stock Exchange. Inez?
Lexus Express reported a better than expected quarter with comparable sales down 5%, but that exceeded their prior guidance. Also an adjusted loss of 3 cents a share, but that's narrower than what was expected. And I just got off the earnings call where their CEO talked about better control of inventory in the quarter and also highlighted their strong balance sheet, having $168 million in cash and no debt. Dollar General reported a strong quarter with better selection and revamped stores, which helped their same-store sales increase by 4.6%. The company says it's been their customer traffic and same-store sales increases was the best in almost 5 years, and the company raised its full-year guidance. And GM and LG Chem are partnering up to invest $2.3 billion by the year 2023 to form a joint venture where they will be producing battery cells, forming a plant in Ohio, and the construction of that plant is expected to start mid next year. And this was one of the points that GM had made during its negotiations with the UAW, that they would be constructing a plant for battery cells in Ohio.
And creating jobs in the process. Inez Ferre down at the exchange, thanks a lot. Oil is holding on to gains as OPEC ministers meet in Vienna today. Yahoo Finance's Jared Blickery is at the Wi-Fi Interactive Board with our commodities report. Jared.
Yeah, we have crude oil up 1% at $59 a barrel. This is the highest price we've seen in 2.5 months, and it couldn't come at a better time because guess what? Saudi Aramco is pricing today, and the higher the price of oil is, the higher the value of the company is going to be. And we're looking at Brent here. That's at $62.50. That's going to be the main contract that they're looking for. They need it above $60. If we look at the overnight price action, we saw some volatility right around 8:30, 9 a.m. And this is on news that looks like we're going to have additional cuts that are recommended to OPEC Plus. They're meeting today and tomorrow, and it could be as much as 500,000 barrels. Now, that's not necessarily going to affect what's already happening because the Saudis are already cutting by over that amount. And so basically it's kind of a wash, but it is lifting the price of oil right now.
And that it is. All right, thanks so much, Jared. I want to talk more now about oil and the state of energy with Ashley Peterson, Senior Oil Market Analyst at Stratus Advisors. Good to see you as always. So you just heard Jared's report. Are you expecting production cuts today to come out of Vienna?
You know, it's looking more and more likely. Had you asked me a week ago, I'd say they were just going to be flat until June. It seems now that they've backed themselves into a corner and they have to announce some sort of cut just because that's what's being baked into these higher prices.
What do you make of this report that the Saudis could boost production unilaterally to sort of get back at these OPEC countries?
So they could, and that's actually being looked at as how they're negotiating because a bigger cut is going to have to come from Saudi. Saudi. So if they do announce a cut today, it's most likely going to be Saudi Arabia pledges to cut X amount, assuming compliance reaches Y amount from everyone else. It's really going to need to be a bit of a quid pro quo for them to get everyone on board.
Does the action that we've been seeing in the crude oil markets, does it show you, is it proof that this market is very headline driven right now?
Oh yeah, we've been chasing headlines all fall, and we're going to continue to through the end of the year. You know, first it was about the trade announcement and the trade deal. Now it's all these headlines around the OPEC supply agreement, and then I'm pretty sure next week we'll be reverting back to headlines around the trade deal.
I'm sure you are right. Is there anything OPEC can do at this point to really get crude prices to move higher?
No. So here's the problem. The cuts are certainly helpful. They are helping balance markets. But all year, the story has been demand. What is demand doing? What are consumers doing? Are they driving? Are they flying? Are they shipping things? Are we building things? That's going to be the story for 2020 as well. So even though you're taking this extra supply off market, you have non-OPEC growth, not just from the U.S., Norway, Brazil, Canada, all expected to go up a bit next year. And you have an economic slowdown looming. We still don't have a trade deal. Now we're hearing it might not happen until after the elections even. We still don't have an agreement between U.S., Canada, Mexico. And on Monday, we got more tariffs from Brazil and Argentina on the metals.
And now that's France, too.
And France. And that's the real scare next year. It's what's happening on the demand side. Is that growth going to appear? More so than are we going to be hit with all this extra supply?
Where do you see gas prices as you look into your crystal ball for 2020?
So I actually think they'll be fairly similar to 2019. We had a good year, and we didn't have quite the volatility in oil prices, which didn't translate into volatility in gas. So next year for drivers, prices will still be fairly moderate. I think they'll have decent situation in terms of pricing. You know, we're going to see some of those regional dislocations. That was a big thing this year. The West Coast had some spikes due to midstream issues. That'll continue to be an issue in 2020 as well. But overall, it's not like we're looking at a big increase in gasoline prices. It's just, are people still choosing to add miles to their trips?
Want to talk about Saudi Aramco's big IPO, which we've been waiting and waiting for. Looks like it's finally going to happen. They're saying around December 12th. It's expected to price today. It's going to go live on a local exchange in Tuttawal. What kind of an impact, once they do go public, what kind of an impact is that going to have on the energy markets?
Not a huge one, not when it comes to actually crude oil in tanks and what we're pulling out of the ground. You know, it's certainly going to be interesting to see who decides to get involved in this, what the appetite is from international investors especially, because there are other oil companies you can invest in that are maybe a little more transparent, a little more diversified in their operations. So what is Aramco bringing to the table that something like maybe Exxon or BP isn't? You know, that's the big question.
And what are they bringing to the table, or what are they at least saying they're bringing to the table?
Very low cost of production and low carbon intensity of production. So they actually do have, you know, one of the lowest costs of production in the world, and the carbon intensity is not bad. And as we're more and more worried about carbon intensity of production, you know, that is a selling point. You're also in a geopolitically tense area. The government does mandate a lot of what the company does, and they're involved in a cartel. I mean, Saudi Arabia is meeting today to set next year's oil price, essentially.
Yeah, the risks are definitely there for those who can stomach them. Would be the largest IPO ever.
Yeah, it sounds like they might price towards the top of their range, so it'd be larger than the Alibaba one.
Incredible stuff. We'll be covering it here at Yahoo Finance. Ashley Peterson, thanks as always.
Thank you.
Slack is raising its full-year outlook on the heels of its third-quarter earnings report. The stock right now coming under some pressure, off nearly 2%. For more on the company, Brian Sozzi went inside the C-suite with co-founder and CEO Stuart Butterfield.
Hi, Alexis. So Slack's quarter definitely checked a lot of boxes. Sales beat guidance, earnings beat guidance. They racked up more wins with big enterprise customers that have those deep pockets. I even liked how co-founder and CEO Stuart Butterfield hopped on the phone with me and said, yes, Microsoft Teams is causing disruption in the marketplace, and it's up to them to counteract that narrative. You have to give a thumbs up to any CEO that is coming out there and owning the situation. So look for them to course correct that. All in all, if anything, Wall Street will take a little issue probably with the slowing revenue guidance from Slack, and maybe a little bit of a slowdown in overall billings. But all in all, a lot more wins for Slack in the quarter than losses. Alexis, back to you.
All right, thanks so much, Brian. Taking a look at Slack over the last 3 months, as you can see, the stock is down nearly 29%. Coming up on the first trade, accelerating into the future. GM's new partnership to help it take on Tesla. Your companies to watch are next. And here's another quick check of the markets. We've got the Dow Jones Industrial Average higher, or actually on the lower side right now. Yep, we're just going to call it the flat line, okay? The S&P 500 up about 3. We've got the NASDAQ Composite gaining 21 points, and we'll be right back. Now for a look at some of the companies and stocks the Yahoo Finance team is watching for you today. A not so glittery quarter at Tiffany. Same-store sales were flat and revenues came in below expectations. The CEO blamed softness in the Americas, but said they saw double-digit growth in the Chinese mainland. And he said they were looking forward to becoming part of the LVMH family when the acquisition closes next year. A strong quarter over at Dollar General. The company beat estimates and is raising its full-year guidance. The discount retailer's CEO called same-store sales the best in nearly 5 years. Dollar General is now expecting more than 8% sales growth for 2019. And General Motors has a new partner to build batteries for electric vehicles. South Korea's LG Chem is launching a joint venture with GM, with both companies set to invest a combined $2.3 billion. They'll also build a new factory near Lordstown, Ohio, which will add some 1,100 new jobs. That's where a huge GM plant shut down earlier this year. And the FTC is expanding its probe into Amazon. Bloomberg is reporting that the investigation has extended beyond Amazon's retail business and is now looking into its cloud computing business as well. Amazon is currently the biggest cloud services provider. It's expected to bring in nearly $35 billion in sales this year alone. And Instagram is now requiring users to enter their birth dates in order to use the app. The Facebook-owned service says the new policy hopes to keep young users safer and will recommend different privacy settings, but of course it will also allow Instagram to send you age-targeted ads such as things for alcohol products. And those are your companies to watch for this Thursday, December 5th. Still to come, a C-suite shakeup at United. We'll look at what it means for the airline now that Oscar Munoz will step down in the spring. A big shakeup at United Airlines this morning. CEO Oscar Munoz is stepping down to become chairman, with President Scott Kirby set to take over. This is all scheduled to take place in the spring. Yahoo Finance's Adam Shapiro is here now. And Adam, you actually spoke to both gentlemen in October. Are you surprised by this move?
I don't think anyone's surprised by this, because eventually there was going to be a transition. In October, there were the rumors that Kirby might be going back to American Airlines. Munoz hired Kirby out of American Airlines roughly 3 years ago, and there were rumors that he might be lured back to American to replace the CEO there. He actually put an end to those rumors back in October, saying that is not going to happen. So when you look at the way they've made this announcement today, this is a transition that will take place in May. Munoz, by the way, got the job, not expecting to get it back in September of 2015. Jeff Smisek, remember this?
Yep.
There was the Port Authority scandal here in New York City. There was the private flight, essentially, to his vacation home in a state south of here.
Right.
It was a big scandal.
Messy.
He had to go. And then Munoz gets plopped into this airline, which had really, let's be honest, it was a horrible experience for a lot of customers. The stock was in a tailspin. Fast forward to today, that stock since September of 2015 is up 56%. They've rebuilt the airline. We were just there in October where they were talking about all of the plane upgrades. They've retrained all of the flight attendants. All 25,000 flight attendants have gone through. And I remember Munoz actually saying to all of us a story about when he went on that tour of the airline, speaking to the employees and the flight attendants about what could they do. And one of them, he says, started to cry and then said she was just tired of telling passengers she was sorry. Well, they don't say that anymore. The airline's doing very well. They've expanded service. This is a lot to do with Kirby, too, by the way. They've increased flights at some of their hubs. There's concern that they've grown capacity too fast, 4 to 6% a year, that there might be a price war coming. But right now, Kirby is going to have to deal with all of that when he takes over in May. And the airline seems to be poised for success. You know, when I interviewed him, I asked him about that issue, and he said, look, we are doing this more efficiently. They actually removed seats from planes and put in more expensive seats because the margins are better on that.
Sure, that makes sense.
So they seem to be on top of it.
Munoz was head of United since 2015?
Yep.
Is that right?
He had a heart attack, so he was out from until about March of 2016. That's when he really got back in. He had a heart transplant.
If we're seeing this turnaround, though, why have him leave?
Well, he was never intended to be the CEO. Remember, he was on the board, and when Smisek had to go, he was the person who was put in. But what you'll hear from people on the inside at United is that this is a part of any company's transition, that all companies have to have a transition plan. Nobody's going to be there forever. And Munoz, I speak Spanish, I should be able to pronounce his last name, has steered the company from, we all know the horrible public relations image from 2017.
Dragging the
right,
passenger
which, by the
off
way,
the plane.
and wasn't necessarily, that wasn't a United flight, it was a United flight, but it was the partner airline.
And it was the way the airline responded, if I remember correctly, that a lot of people took issue with.
Was very upset with Munoz. So
yeah,
they've turned that situation around. Now is a good time to execute the next plan, and that's also why they brought in Kirby.
Yeah, it sounds like he's the right guy for the job.
Oh, he's got huge experience in the commercial airline industry.
And been with United. All right, Adam Shapiro, thanks for the insights.
Yep.
And that's going to do it for us here at the First Trade for this morning. I'm Alexis Christoforous. Before we go, let's get one more check of the markets now with Inez Ferre at the New York Stock Exchange. Hi, Inez.
Hi, Alexis. We're watching Tiffany this morning. This is after they reported their latest quarterly results. With revenue coming in flat, earnings per share came in below what the street was expecting. The company says it saw some softness in the Americas, where net sales were down 4%, but this was offset by double-digit growth in mainland China. And in light of agreeing to be acquired by LVMH, the company says that it is not holding an earnings call today. We're also watching Dollar General. Dollar General says that better product selection and also their revamped stores helped their same-store sales grow by 4.6%, saying that this was the best customer traffic and same-store sale increases in almost 5 years, and the company raised its full-year guidance. And then just looking at J.Jill, it is plunging this morning. This is after a leadership change and also soft third quarter results. Comparable sales were down 7%, and the company announced that CEO Linda Hazley will be stepping down. The company has appointed Jim Scully, who is a member of the board, as interim CEO. Right now, we're looking at the Dow that's down 4 points. The S&P's up 1 point. Make sure to stay with us. Wi-Fi AM starts right after the break. Don't go anywhere. We will be right back.
Good morning and welcome to Wi-Fi AM here at Yahoo Finance on this Thursday morning. I'm Dan Roberts. We've got Scott Gamm and Julia LaRoche here on the couches to go over the business news of the day. So much to discuss. Let's start with the markets. You can see it on your screen. It's a mixed picture for now. Yesterday, we saw a big update on some positive, encouraging indications about the trade talks. Right now, the Dow is down almost 40 points. The Nasdaq is flat mostly, and the S&P basically flat as well. But the big news this hour is coming out of Washington, D.C., where just about an hour ago, House Speaker Nancy Pelosi formally asked the House Judiciary Committee to proceed with articles of impeachment against President Donald Trump. Now, she made the announcement from Capitol Hill saying that in America, no one is above the law and that the president has given Congress little choice but to act.
Facts are uncontested. The president abused his power for his own personal political benefit at the expense of our national security by withholding military aid and crucial Oval Office meeting in exchange for an announcement of an investigation into his political rival.
Now, even before Pelosi's announcement, President Trump tweeted this morning, you see it on your screen, the do-nothing Democrats had a historically bad day yesterday in the House. They have no impeachment case and are demeaning our country, but nothing matters to them. They have gone crazy. Therefore, I say, if you are going to impeach me, do it now, fast. And after Pelosi's comments, the White House press secretary responded by saying, we look forward to a fair trial in the Senate. So we are moving forward, guys.
Well, we also know this was pretty much par for the course as expected. So the most likely outcome is that, the House, the Democratic-led House will, vote in favor of the articles of impeachment. But as Trump was suggesting in that pair of tweets that he wants a fair trial in the Senate, well, we know that the Republicans have control of the Senate, so they're very unlikely to convict. And my guess is when he's saying we want it to get over and done with, probably just wants it, early in 2020. It's not going to happen before that, I doubt. The election's right around the corner, guys. So.
Well, and I agree that this was par for the course, bound to happen. Also because you have Christmas coming up, and if they didn't do this before the holiday season and they waited until 2020, I think they would lose a lot of credibility. And not to mention a month. I mean, we've got less than a year until the election. Mm-hmm. Clearly, the Democrats want him out of office, impeached, removed from office before the election. Probably not going to happen because he has so much support in the Senate. I mean, it's so hard to believe that anything there would flip, given how we've gotten past the bulk of the hearings so far.
Even impeachment will not necessarily mean removal from office. I think the Dems just hope, we can impeach, and then maybe he won't get reelected.
And then, I don't even know if that's, even like historically, I mean, we're a business show. We talk about the market impact of impeachments going back to Nixon, Clinton. Nothing really happened to the markets. Those things were totally separate. Each issue is unique to the situation, whether it was, out of control inflation, oil embargo of the 1970s, or, 1998, you had like the whole long-term capital management blow up, the Russian debt crisis, the Asian crisis. I mean, right now, markets are basically still at all-time highs. Who knows? The economy's still looking good, consumers looking good, housing's looking good. So I don't even know if it'll even affect the election at this point.
Scott, you spend every day on the floor of the NYSE. You tell us, but it does seem like, in contrast to how much the market has whipsawed based on trade talks, stocks have not really cared at all about the impeachment proceedings.
It's exactly right. And you could even argue with trade, stocks have really shrugged that off. On a day-to-day basis, not so much. But when you look at the broader trend of the market, you wouldn't even notice that there's a trade war. When it comes to the impeachment situation, I mean, Julia, to your point, when you look back at past impeachments, forget what the reaction was then. The sample size is so small. We don't exactly have a lot to look back in the past. So this is really uncharted territory for the market. And I think when the market doesn't know how to react, it just doesn't react.
Yeah. And again, guys, it goes back to the consumer. And until the consumer's impacted and housing's impacted, those are the shining stars. Hasn't happened yet.
And we had a very positive, encouraging holiday shopping season. Well, huge change coming to the C-suite at United Airlines. Longtime CEO Oscar Munoz is stepping down as CEO and will become the executive chairman. That will happen in May 2020. The current president at United, Scott Kirby, will take over as CEO at that time. Yahoo Finance's Adam Shapiro, the co-host of On the Move, joins us now. And Adam, you spoke to both these executives recently.
Yeah, we spoke to them during United Media Day on October 25th. And already there were rumors that American Airlines was trying to woo Kirby back to replace replace the CEO there. Because remember, Munoz hired Kirby away in 2016, and it's Kirby who has helped rebuild United. Think of Munoz as being in charge of employee morale and customer service, and we remember that video.
Yes.
But he has been, look, they have rebuilt the airline in so many ways, and it was, the flight attendants, all 25,000, went through new training. They brought them all to Chicago for this. But then you look at Kirby. He's expanded their hub system. We used to talk about the hub system that the airlines use about a decade ago. They've expanded it. They've increased capacity 4 to 6% a year with an intention to continue that for 3 years. So when I spoke to Kirby then, he had already said, I'm not going back to American Airlines. That obviously today is an absolute confirmation. But he talked about the risk to United because of the shares. As they increase capacity, would there be a price war? Here's part of what he said in response to that.
We've increasingly seen, as we've invested in the customer experience, as we've invested in the customer product, that customers are choosing to fly United Airlines. And so we're able to outperform even in a difficult macro environment because of the investments we're making and the improved operation and customer experience that are causing people to choose to fly United.
Part of the way they did that, they removed seats from aircraft and put in more expensive seats because the margins are larger.
I was going to ask you about the customer experience because in the last couple of weeks, I've been on 2 different airlines to California. And I got to say, my experience on United was so much better. So aside from the legroom, the seats, what is it when it comes to the training of just the staff that you've seen a difference and heard from the management there?
I'm going to share a story that Munoz told us back in October. He went on a tour of the airline after he had his heart, by the way. He had a heart transplant in 2016. He spoke with different flight attendants and all of the personnel, the baggage handlers. And he tells a story about a flight attendant who started to cry. And he was listening to what are the problems, what can we do? And this flight attendant said to him, I'm just tired of saying to the passengers, I'm sorry. So they don't do that anymore because they don't need to. I mean, customer service has improved, the on-time arrivals. They've rebuilt the airline, but it was a team effort with Kirby in charge of the planning and the hubs and the aircrafts, and with Munoz in charge of employee morale, but restoring customer service. I think everybody can find something to complain about when you talk about flying. But the share price, it's more than double. It's 50% since Munoz took over September of 2015.
Yeah, I was on a United flight about a couple weeks ago, and the guy next to me, it was his birthday. How did I know that? Because the flight attendant announced it to the entire cabin.
Hey, that's a little too much.
Real quick, people say this is a big surprise, but this is a transition that's being announced to the shareholders. It's not going to happen until May, and Munoz isn't leaving. He's going to be the interim chairman for a year because Jane Garvey is going to be leaving the board.
Cultural transformation right, which is one of the hardest things to do in business, is to get the culture right, the training, the morale of your employees, because that's who you interact with.
And who better than Kirby to run this thing? He's an Air Force Academy grad. Let's start there. So.
Well, and now in hindsight, you wonder if it means that from the moment Kirby was brought on, this was the plan.
It's a great question. And we'll get an interview with him and we can talk about that.
All right. Thanks, Adam. Good stuff. Coming up here on Wi-Fi AM, California Governor Gavin Newsom slams the bankruptcy plan that PG&E is looking at. We will explain what's going on there. Welcome back to Wi-Fi AM at Yahoo Finance. Let's go right down to the floor of the New York Stock Exchange, where we have Ines Ray to tell us what is happening with stocks right now. Hi, Ines.
Hi, Dan. We're watching Express this morning, up about 20%. This is after a better than expected quarter. The revenue came in above estimates. Their adjusted loss per share was 3 cents, but that's narrower than what the street had been expecting. Same-store sales were down 5%, but that's still better than what the street was expecting. The company highlighted its balance sheet, $168 million in cash and no debt. And I was just listening in on their earnings call, and much of this has to do with better control of their inventory. Executives highlighted some changes that they made to the store, whereby the product placement, where before you would maybe have a blazer next to a matching skirt, they switched that around to be much more modern, a blazer next to jeans. So this has a lot to do with their performance in the quarter. Remember that they have a relatively new CEO, Jim Baxter, who started just 6 months ago. He has a lot of retail experience, formerly from Macy's, and has brought on his own executives as well.
All right, thanks, Inez. We'll check back in with you soon.
Thank you.
Well, let's turn to the U.S. trade war with China. Markets, of course, have been whipsawing based mostly on statements and headlines every day about progress or lack thereof that are coming out of the White House. But our colleague Sabeel Marcellus went directly to the source, or one of them. She spoke to Commerce Secretary Wilbur Ross in Indianapolis. Here's what he had to say about the ongoing trade negotiations.
The most important thing is that we get a proper deal. We're trying to roll back decades of inappropriate trading relationship with China. That's a hard task, and it's more important to get it right than it is to get it on December 15th or any other particular date. And there are 3 buckets to it. First, more current trade, reducing our deficit. If that were our only objective, we could have had that 2.5 years ago. Second bucket is structural reform. Respect for intellectual property, no longer forcing technology transfers, no longer subsidizing state-owned enterprises, the whole panoply of activities about which we've been complaining. That's a little harder because that takes legislation in China. The third and most difficult, enforcement. Their record of living up to things is not superb, so we really need a good enforcement mechanism. And that's the hardest thing of all to get. So we need to fill all 3 buckets eventually to make a proper deal. There are, in effect, deadlines on China. The President has announced that if nothing satisfactory happens comes December 15th, he'll put more tariffs on more products. So that's not a set in cement deadline, but it's a data point for which they will pay attention.
That was Wilbur Ross, and Sabeel Marcellus joins us live from Indianapolis now. Sabeel, good get. What else did Ross have to say about what we're hearing about trade day to day?
Yes. Hi, Dan. Good to see you. So I'm here at the Indiana Women's Prison, and I sat down for that interview with Commerce Secretary Wilbur Ross, and I was asking him, is there a deadline for a trade deal with China? Are we going to see something happen by the end of this year? And he was saying that, yes, President Trump has pretty much already set a deadline for China. That's December 15th. If he doesn't see what he likes, then he's going to escalate tariffs on imports from China. So that's the data point. That's what China is looking at. So we'll see if it actually works, but it's definitely being used as a bargaining chip because he's saying that December 15th deadline is not set in stone. But I also asked Commerce Secretary Wilbur Ross about the overall economy and what we can expect over the next couple of months. And here's what he had to say.
Trade wars are not the only thing that affects how business is doing. Reality is the consumer is doing very well, both as a recipient of income and as a spender of income. You saw the results for Black Friday, Black Monday, excellent, excellent results. Consumer is around 70% of our economy. As long as consumer spending holds up, our economy will be fine.
I asked Commerce Secretary Ross if he has a specific GDP growth number for the end of the year. He wouldn't give me an exact number, but he said that directionally the U.S. economy is moving in the right direction, and he's basically focused on the strength of the U.S. consumer, mentioning the fact that we had record online sales when it comes to Black Friday and Cyber Monday.
Hey, Sabeel, just a quick question. I mean, is there any sense that you got from the interview just how involved the Commerce Secretary is in these negotiations, because there are a lot of parties in the negotiations, right? You have Robert Lighthizer, you have Peter Navarro, maybe even Larry Kudlow.
Yes, so I got a sense that he is very much involved, very much up to speed in terms of what's going on with the negotiations with China. And he said that the hardest part is not just reaching this phase 1 trade deal, it's reaching the overall deal and finding some kind of mechanism to enforce the deal afterwards. He said that China's track record when it comes to holding up to promises is not that strong. So that's really where the biggest hurdle is for the U.S. and for President Trump in getting a deal on paper.
All right, Sabeel Marcellus in Indianapolis. Thanks so much. Good interview. PG&E is clashing with the governor of California as it zeroes in on a bankruptcy plan, while it is also figuring out how to reach a settlement with the victims of those wildfires. Governor Newsom's lawyer spoke out in court yesterday against an $11 billion deal that will bind a powerful group of creditors to support PG&E's Chapter 11 exit plan. That would also force that same group to oppose the rival strategy that is supported by the wildfire victims. Now, Newsom has not yet made clear which plan he supports. But guys, this is the story that will not go away. And PG&E, I mean, that bankruptcy finally happened now a while ago, but there is a lot to sort through, because they have to both, figure out the bankruptcy, but also reach the settlement and get the funds to pay off those victims' families.
Yeah, but also, okay, so I think one of the challenges here is you have creditors, you also have shareholders, and there's a tension between the two of those. And I got to say, it's not very good PR for the hedge funds involved in this situation, whether that's right or wrong. I mean, if it's, that's how it is in investing. The creditors are going to get paid first, not the shareholders.
And you don't want to be on that side.
But I mean, this is really shedding a light on the broader hedge fund industry. I mean, this is not going away anytime soon. So there are a lot of different moving parts to this. As you mentioned, the victims, shareholders, creditors, and just the whole wildfire issue to begin with. Have they actually even solved this issue? Are they going to be able to prevent these from happening in the future?
These are the risks of investing in a utility, too, which they're very vulnerable to disasters.
Well, and to your point, what is your goal with investing in this stock if you're a hedge fund, if you're an investor?
You're a creditor, probably.
Are you trying to make up the spread based on the volatility that we see from the headlines surrounding the stock? Because about 2 years ago, PG&E was trading at $68 a share. It's now at $9.
But a lot of funds were getting in right after the fires. But I think a lot of it was the play on being the creditor side of it, not necessarily the shareholder side of it.
Or you could have a short thinking that when they come to some kind of settlement, the stock will pop, right?
Yeah. But again, not a good look for the hedge fund industry, because you keep seeing op-eds coming out in California against them. I mean, hedge funds aren't just about okay, I'm the hedge fund manager, I'm gonna make a ton of money. They're investors a lot of times. They're pension funds, they're endowments, they're you name it. It could be
other places that
will be benefiting. But it just sometimes, guys, there's the optics of the situation. Not
totally.
Good.
I keep thinking of the Billions plotline where Axe gets in trouble because right after 9/11 he invested. Remember?
The optics of it,
exactly. And this has a tragic spin to this story just because there were wildfires.
Well, and if you're Gavin Newsom, it's an easy,
and you're going to defend
support and defend, the victims' families.
California.
Getting their money first. Yep. All right, coming up here on Wi-Fi AM, we'll tell you what stocks right now are trending on Yahoo Finance. Think beer and coolers.
All right, welcome back. Time for today's trending tickers. The first one is Yeti. The stock right now is up. Goldman Sachs upgrading the stock to buy from neutral on the company's relationship with Lowe's, calling it, quote, a key catalyst for the brand. So there you see the stock up 5.6%. We were just talking about how expensive these coolers are. I honestly did not realize.
Cooler.
$400, $300?
Well, it varies based on the size. There are different sizes. I have the smallest size, which I still think is nice and plenty big, and it tells you the size based on how many beer cans you can fit. So I have the one, I think it's called a Rambler. They each have some kind of cool Ramblin' Man name or Ramblin' Woman. And the one we have is just a 20 cooler. A 20 can, which you might think only 20, but that's still pretty good. And you know, it's so thickly insulated, so everything stays nice and cold. We've got some of those Yeti freezer packs. It's great. It looks great. You sit on it, so it's also an extra seat. I really am a happy customer with my one Yeti cooler. Now, I'm not like our colleague Brian Sazia is like all in on all the Yeti things. He's got the coffee mug. He's got the hat. It is a lifestyle brand.
You are such a millennial, and I like this. So let's talk about the Lowe's play here. Is this a retail distribution play? Because I'm also thinking, guys, you know what's looking good? The consumer's looking good. Housing's looking good. Millennials are getting a little older, starting to settle down. You know, get into the house mold. It's a great. It seems like there's, I hate the word, synergy.
No, I like that. But if you can get millennials into Lowe's via Yeti, maybe they pick up a power drill, or maybe they pick up something else.
I think millennials like home improvement. Yes. Although we might not have the same skills as our parents. I certainly don't. Not like my mom and dad, but.
Unfortunately, I'm realizing I am the example of the, you know, straw man thing you just made. So it's not a straw man, which is millennial. I moved out to the suburbs, so I have a house now. And I bought the Yeti at the time. No, I got it as a gift. At the time we were moving to a house, so we use it in the backyard. And I've been going to Home Depot a lot, but not Lowe's.
And you're raking leaves.
They're like two camps. It's like the Home Depot camp or the Lowe's camp. It really depends.
I just think there's high loyalty in that. Now, to your point about, maybe if they can get people in the door at Lowe's to buy a Yeti, maybe they'll buy other things. Well, Kohl's thought the same thing about allowing Amazon returns, and I don't think we've necessarily seen that trend happen.
That is
the whole retail industry, totally
but
different
it's Kohl's.
issue. Yeah, it's
exactly.
like Macy's. Like, could they get more people
to drop
in?
a return? I'm not going to stay and shop. I'm just
I'm
in and out. All right, I made my
going there for Amazon,
Kohl's.
and you're not looking at anything else. All right, we have another trending ticker today, Peloton. The stock has had a rough day yesterday, and that decline continuing today, down over 3%. Now, the recent volatility in the stock comes amid reports that Peloton is lowering its subscription pricing. Now, separately, there is controversy over its recent TV commercial, which sparked a lot of debate on social media. And now, Peloton has released a statement about the ad saying, "We constantly hear from our members how their lives have been meaningfully and positively impacted after purchasing or being gifted a Peloton bike or tread, often in ways that surprise them. Our holiday spot was created to celebrate that fitness and wellness journey. While we're disappointed in how some have misinterpreted this commercial, we are encouraged by and grateful for the outpouring of support we've received from those who understand what we are trying to communicate."
Oh, guys.
So no apology in this.
A lot going on there.
I mean, I don't know. I guess what
a lot to unpack there.
What do they have to apologize for?
No, there's no apology, but did they have to say the outpouring of support? First of all, I don't know what normal kind of human being would, contact Peloton and
I
say,
love you.
Don't worry, don't give in to the haters. Thank you for everything you do. And
thank you for your $5,000 bike.
Yes, I'm a little skeptical. There was an outpouring of support, but if there was, okay. But no need to mention it in the statement. And then we're disappointed that I tweeted this out yesterday, and I said, translation: we're disappointed the internet is so mean. And by the way, the ad is a stupid ad, but the controversy has gotten, there's no controversy. It's just a stupid ad.
Right. Yeah,
for an expensive exercise
Everyone's
bike.
going to, if you have a stupid ad, expect the internet to just shred you.
Should have left it alone.
I think the other thing we're not talking about, guys, the subscription
yes.
falling.
I think that's gonna be smart
that's the bigger stock
really?
issue.
But isn't the bike still expensive? Does that
but lower the price? You might sell more. Even if
are you
only sell a few
grandfathered
more,
in? If you have, if you're Sazi and you have your bike, are you grandfathered in with your current rate?
Well, the problem with lowering the price.
So you pay the fee to buy the bike, but then you pay a monthly subscription fee.
But did your monthly subscription, if you already own the bike and are already subscribed, go down?
Or are they lowering the price of the bike or the price of the subscription fee?
No, subscription. at least from this report.
I think it's smart.
But no, I think a better idea would be to lower the bike price, keep subscription the same, because it's like $20 a month, and you don't really realize that you're even being charged
make it up
because
on the
they bill you every month.
Yes, you'll make the money up on the subscription
I
fee.
think it's just the bike's a little big. Where am I going to put it? It's kind of expensive. Like, no.
Got to put it in as the previous ads, the first wave of ads that got ridiculed showed. You've got to put your bike on your beautiful veranda overlooking the beautiful
Yeti nearby.
Income gap. All right.
You reach down for the water out of the Yeti while cycling. All right, coming up here on Wi-Fi AM, we will talk to the author of the powerful new book that just won the Financial Times Business Book of the Year. Welcome back to Wi-Fi AM at Yahoo Finance. Markets right now, for the moment, in the red across the board. Now let's talk about big data and gender. A new book lays out how the data that drives every system, from seatbelts to cell phones, is all built around men. Surprise, surprise. The book is Invisible Women, Data Bias in a World Designed for Men. It was just named the Financial Times McKinsey Business Book of the Year. And the author, Caroline Criado Perez, joins us now to discuss. Hi, Caroline.
Hi.
Thanks for coming on.
Thanks for having me.
Congrats on the honor.
Thank you very much.
There you go. Let's talk about the book. Was this a book directly born out of the Me Too movement, or is this something that you saw and were researching for a long time before that? How has that affected this conversation?
No, it was well before Me Too started. I think I'd pretty much finished by the time the Me Too scandal hit, actually. So, yeah, I mean, the book took me about 3 or 4 years to write, so I wouldn't have been able to do it so quickly. And I guess, I mean, the Me Too movement has been a really sharp wake-up call for, I think, a lot of people. And I think it probably has made people more open to hearing about the ways in which women are disadvantaged and forgotten about. Because part of what Me Too really showed was not so much that all this stuff was happening, so much as that it was happening and we didn't realize it was happening.
It was all around us. I want to talk about the biases that you are finding, seatbelts being made for men. Give our viewers some of these examples of everyday encounters that we women are going through that are actually just designed for men.
So, well, I'll start off with cars, since you mentioned that. So, basically for decades, the only car crash test dummy that was used, and it's still the most commonly used one, was based around a 50th percentile man, as if the 50th percentile man is the 50th percentile human, which is generally what you find in all sorts of areas, from medicine to economics. And the problem with that dummy is that obviously it doesn't represent women, and cars in all sorts of ways, when they are designed for safety, are designed to protect the safety of a 50th percentile male. So, for example, women sit further forward on average than men in order to be able to reach the pedals, quite an important part of driving, but that puts them at a higher risk in a frontal collision. You add to that, as you mentioned, the seat belts, which haven't been designed to accommodate breast tissue, so women are often seen as wearing seat belts improperly. You know, I would argue perhaps the seat belts are the problem, not the women, but, you know, that's the way it's represented. And, you know, things like the seat backs are too firm. This isn't an issue of comfort. This is about throwing women forward further because the impact is not absorbed by the seat as it would be for someone of an average male height and weight. And so when you put all those things together, what it ends up meaning is that women are 47% more likely to be seriously injured if they're in a car crash, and 17% more likely to die. And this is based on data collected for about a decade in the US. So that's one sort of very glaring and obvious example. But you also find this in the medical field. The vast majority of medical data is being collected on male bodies, and that's male cells, male animals, and male humans. And the result is that a lot of medications just don't work as well for women, or that women may have different symptoms for various diseases, and we don't spot them as a result. So, for example, if you look at something like heart disease, women are 50% more likely to be misdiagnosed, and they're more likely to die following a heart attack. And part of that is because, first of all, women don't realize they're having a heart attack because they haven't been taught the symptoms that they might be more likely to experience. But also the diagnostic tests we've developed aren't necessarily picking up heart attacks in women. So even if a woman experiences chest pain, which she won't necessarily experience, but say she does experience chest pain and therefore she gets sent for a diagnostic test, one of the most commonly used tests is looking for blockages. But actually female heart attacks may not present with blockages in the same way. So you get women sent home with something called undiagnosed chest pain, when it turns out actually they've suffered from a heart attack.
Well, just very quickly, what kind of change, how do we change this?
Yeah.
What's the next step
The good
after
news
reading the book?
is it's very simple. We just have to collect sex disaggregated data. You know, that's it. We just have to start collecting data on women. And we need to move away from the idea that, you know, default man, as I call him, is default human, which is a bias that we all suffer from. Women suffer from this bias as well. If you ask women to think of a person, they're more likely to think of a man as much as men. And all sorts of gender-neutral terms. Actually, what we're picturing men. If you think about someone hands you a stuffed toy, you're more likely to refer to it as he. If you see a dog, you're more likely to refer to it as he. Of course, you know, it doesn't really matter that much that you misgender your dog. No one really cares about that. But it highlights, well, maybe your dog cares. My dog doesn't care. She's a girl, she gets called a he all the time, and she's cool with it. But, you know, exactly as you say, it's symptomatic of how we just assume everything is male unless it's been specifically highlighted as female.
Wow. Really important book. Congrats. Thanks for joining us.
Thank you very much.
Caroline Criado Perez. Appreciate
Thank
it. Well, Instagram is now asking new users for their age in order to sign up for the app. Facebook says it is doing this to create a more tailored experience that is more age-appropriate and safer, and it is looking to offer account controls and recommend privacy settings for younger users. This will also help Facebook enforce its current policy, which is to keep users under the age of 13 off its platform. It also says, don't worry, it won't start showing users' ages on their profiles. But guys, I feel like if you are under 13 and you want to get on Instagram or Facebook, you're gonna find a way to get on it. You're gonna be able to do it.
I didn't realize they don't already ask for your birthday.
Me neither.
I didn't remember.
Well, I knew it was an option, but I didn't realize that it wasn't required, and now it will be required, I guess.
You would think a company like Facebook, which owns Instagram, would be asking for everything when you sign up for these things. No?
Yeah, and by the way, I was sure that I had a little cousin who had a Facebook page before he was 12.
Aren't there
maybe that's going to change.
Kid influencers on Instagram? I guess if you have your parents' permission,
I guess they're 13 at least.
I've
Or
actually
it's run by a parent.
I've tattletaled before. I found a 7-year-old. I knew her father, and she was following me on Instagram. So I was like, you know what? I'm telling your dad that is way too young.
Narc.
I don't care. You're in first grade.
Yeah. I mean, look, you're right. There are these little kid Instagram accounts. I think usually they're run by the parent, which is fine. But I guess this is a good step towards safety. So
yeah,
that
I
when
think
an 8-year-old tries to sign up, they can't do it?
This is nothing. This is just table stakes. It should have been this way to begin with. There are way more issues they have to deal with. So.
Facebook stock in the green right now. And of course, despite all the news stories and scandals and issues and regulatory headaches and lawmaker threats about Facebook, stock has done very well recently. Ad sales doing just fine.
Yep.
Back at 200.
Still 200. Sticky.
Well, with 2020 approaching, we at Yahoo Finance have been taking a look across the board at some financial trends of the 2010s. And today we are highlighting the best and worst deals of the past decade. Lots and lots of M&A activity, obviously. And Yahoo Finance's Crystal Hu is taking a look at the best and worst M&A activity. So, Crystal, what were some of the best deals that went well?
So like one of the best deals is actually Verizon, our parent company, who bought Verizon Wireless from Vodafone, the European company who owns 45% of the share. And that deal was $130 billion, which is largest in history. And then there are other deals like AT&T bought Times Warner. That deal was completed in 2018, and it was a $100.8 billion deal. And that's a clear sign of how companies trying to diversify their revenue through mergers and acquisitions.
Now, how are we judging the best? Like, this says most notable, but are we just making a judgment call, or are we using some kind of metric? Because arguably with AT&T, Time Warner, the jury's still out. I mean, we've heard that HBO is really going to have some, culture shakeup.
You have Elliott Management involved. They're kind of criticizing their acquisitiveness over the years, that they've built this massive conglomerate that doesn't necessarily make sense. It's also one of the most indebted companies right now. And so, I mean, the jury's still out on that one.
Yeah.
Is how do you manage your debt?
Right. So what's our methodology here?
Yeah, so we just look at the deal size, basically, because they have like a clear number, a price tag on it, basically, because it's very hard to judge a deal whether it makes sense from the business sense, because it could make sense at that point, but when you look back 10 years later, but it could be the deal itself is a bad deal, but it also could be the management who runs the deal didn't do it well. So we look at from the deal size, and then we have also looked at the flopped deal. Basically, the companies who go on the record saying they want to acquire this company or they want to go merger, but it didn't happen. For example, Qualcomm and Broadcom.
Yeah.
And that was a deal failed mostly because of U.S. regulators.
Well, I also feel like you could argue that the bulk of these deals don't work, right? When you look back, at some of the past ones, a lot of them flop.
Well, Disney, though, has had some big successes with M&A. And it's interesting to me, the reason I mention that is right now, some people are already starting to say, oh, Disney overpaid for Fox, that was a mistake. Give it some time, because you just wait and see what they do with some Fox franchises. But it's funny that people are so quick to say they overpaid when Lucasfilm was a success, Pixar was a success, Marvel was a success.
I think,
or that they should have bought Netflix.
I think Bob Iger has been a very good deal maker and very pragmatic about his deals. I saw Kraft Heinz up there. Ooh, that one.
Ooh, Kraft Heinz.
Well, I could think of some others. But you know who's the winner in all of this? The bankers who got the fees, y'all. Let's be real.
It's true. Well, and the bankers tend to pitch the deals to companies, even if they're not even looking for an M&A deal. They just say, okay, you should buy this company.
Right. Well, Crystal, your story's up on the site right now.
Yeah.
Best and worst deals of the decade. Check that out on yahoofinance.com. Thanks, Crystal.
Thanks.
Coming up here on Wi-Fi AM, we will talk to the author of the book about Oculus VR and that company's acquisition by Facebook.
Welcome back. I'm Ines Ferre here with Matt Aronowitz. Matt, right now we're looking at the markets which are flat. Speaker Nancy Pelosi announced that the House was going to go ahead with articles of impeachment, but this doesn't seem to move the markets too much, even when the hearings were going on.
Yeah, the markets came off slightly on the announcement, but I think this was something that was pretty much expected. The markets are doubting that he's going to be thrown out of office or confirmed by the Senate. So it's something that the market sort of shrugs off as something that they kind of expected him to be those impeachment proceedings to proceed, but not necessarily something that would impact his presidential status.
And yesterday we saw a bounce back with the market after a positive headline about the U.S. and China, despite what the president had said a day earlier when we saw that the markets had been down. So as far as the December 15th tariffs are concerned, the expectation is that these tariffs aren't going to go through, do you think?
I think there's still some uncertainty there. I think the other day when Donald Trump was speaking off the cuff and saying that he would possibly a deal might not come through even till the election. I think he wasn't necessarily speaking about policy or his negotiating stance. I think there's still, it's very likely that a deal will end up coming through with China. Just the timing of it is probably uncertain. But I think the markets are basically baking in that something will happen, and it's going to happen probably before the election.
As far as volatility is concerned, when we spoke a couple of weeks ago, you'd seen some low volatility. Right now, we're off those lows?
Yeah, market volatility has inched up slightly, but we're still pretty far below historic norms. So we're still in a period of relative calm, upward trajectory for the S&P.
Matt, thanks so much, and make sure to stay with us. Wi-Fi AM continues after the break. Don't go anywhere.
Welcome back to Wi-Fi AM at Yahoo Finance. Well, as we approach the end of the year, we will soon be sharing our staff's favorite business books of 2019. And I'll give you a sneak peek. One book that will be on the list is The History of the Future. It is all about the company Oculus and its acquisition by Facebook. Joining us now to discuss is the book's author, Blake Harris. Blake, thanks for coming on.
Thank you for having me. Thank you for selecting the book. I'm pretty sure it will end up being the most important thing I ever do with my life, writing that book. So
really?
It's nice to help.
More than now, your first book was Console Wars, which was a big success.
Yeah. But this is, we'll get into it, but this is crazy stuff.
Yeah.
Important story.
Yeah, let's talk about Oculus. It's such an interesting founder's story. But then for me, the moment that Oculus sold to Facebook, and of course you lay out in the book, the fans of the Oculus VR headset were not pleased. Right away they say, and they say, shame on you guys, you sold out. And it seems to me, now I'm not as steeped in the company as you are, but it seems to me that acquisition by Facebook, it hasn't necessarily gone so well. What do you make of it? Where do things stand now with Oculus?
Yeah, absolutely
not.
I mean, Oculus was founded by a 19-year-old kid named Palmer Luckey, brilliant, genius, Tony Stark-like, and he sells to Facebook. The people who would love Oculus and made them successful hated them, and sort of understandably so, culture clash. And I do think that really changed the trajectory for VR. It was a thing that was on the cusp of happening. Oculus was going to make it happen, and the way they made it happen was by going after gamers. And Facebook changed all that because gamers, that was just a small market to them. They wanted to be the everything company.
Everyone.
It's almost like as if someone went to Zuckerberg in college and said, no, don't make Facebook just for college students. Make it for everyone. But you don't get to everyone unless you do a niche first.
Right. Yeah, and when you look at VR today, I think you lay out nicely in the book that when Palmer Luckey and the crew are creating Oculus, they keep making the pitch that VR still isn't really here. It hasn't gone mainstream, but we're so close, and there's been so many failed products along the way. Where are we now in 2019, heading into 2020 with virtual reality? It seems to me it still isn't mainstream, and yet you do see there are a number of headsets on the market. Samsung has something, Oculus, and there are people buying the headsets. But where are we with VR and how big it is?
Yeah, so it's always been a big chicken versus egg problem, technology aside. It's like sort of the invention of television, where having a TV without television shows back in the 50s is irrelevant. So you need the content. And so in addition to Facebook investing $3 billion in Oculus, they've been investing billions of dollars in more hardware and software over the years. But still, it's not profitable. And the weird thing is that there's a lot of reasons to dislike Facebook and to be skeptical of them, especially based on how the story ends. But without them, VR would be dead. They are single-handedly carrying the industry because Mark believes in it as a long-term vision and doesn't want to miss out on the next big thing like he felt like he did with mobile.
Okay, we're going into a new decade. 2020 is coming here. When you think about VR in the future, what does that look like? And because I'm thinking, when I think of Oculus, I know Walmart uses it as part of training for their employees. But how do you make it mainstream? I don't have a VR set.
Right, and I'm not interested.
I ever have one. I don't know.
Yeah, how will they get it to us?
That's a great question. I mean, at the end of the day, there's always the challenge of putting on a headset or putting on glasses and being in this isolated environment. I think the solution, and this was sort of something that Mark presented in his 10-year roadmap a few years ago, so we're probably 6 or 7 years out from what he thought. It's a pair of glasses just like this that does augmented reality and virtual reality. You can toggle between AR, where it would be that sort of creepy or convenient Black Mirror sort of thing where I see you and it's like has your whole biography and what you got for your grades in 7th grade and the girl you dated then and all that stuff. And then also it can easily toggle between a fully immersive VR experience. So I mean, as the technology gets cheaper and more affordable and there's more content, that's what's going to happen. That's what's going to happen if it's ever going to take off. But I think that what's so interesting is that we don't know. You know, we talk about the future as if it's this thing that you're digging out of the sand to get to, but in reality, it's based on the present dictates the future. There's a lot of different futures out there, and it could be any various possibility. I thought it was going to be VR, and that sort of got botched.
Wow. Do you think the consensus for most of the people at Oculus is we shouldn't have sold to Facebook?
I think the easiest way to answer that question is that almost every single person who was at Oculus before the acquisition is no longer there, mostly by choice.
There you go. Well, really interesting book. Thanks for joining us, Blake. And the book is The History of the Future. Now, in the latest episode of Influencers, Yahoo Finance editor-in-chief Andy Serwer sat down with NASDAQ CEO Adena Friedman, and they talked about the interest rate environment.
I think in general, though, obviously the interest rate environment continues to be extremely appealing as an equity investor, right? So if you're thinking about where are you going to get a return, you're going to get a return in the equities markets more than you're going to get a return on a debt instrument. So therefore, it kind of pushes people into dividend-paying companies and companies where they can get a good, steady return with obviously the equity risk that comes with that. And so therefore, I do think that it's kind of pushing investors to come into the equities markets and underpin, kind of using that as a marker for the health of the U.S. economy.
That is Adena Friedman, the NASDAQ CEO, and you can catch the full interview on tonight's Influencers with Andy Serwer. That's at 5 p.m. Guys, we've had Adena Friedman at a number of our AMS events, All Market Summit. She's always a good talker, female CEO of the NASDAQ.
She's awesome. And can I just say, fun fact, she's got a black belt, I believe, in Taekwondo. Yep. She's awesome, yeah.
Wow.
Yeah.
Yeah, and it's interesting because as we talk about all the unicorns that have gone public, that hasn't gone so well. But, you know, the story, the question for each one is always, NYSE or NASDAQ.
I love that we have two high-profile women leading both of the exchanges now. I think that just speaks to the future.
And the exchanges are dealing with this sort of flood of direct listings, which is kind of a different dynamic, and it's something they haven't really had to deal with in years past. And now all of a sudden you have all these issues surrounding profitability of these unicorns. So do they not go public because they're not profitable, and they're scared to get the scrutiny once they do go public because they're not profitable?
Or they go public, but they do it via direct listing because you have a little bit less of the hype, a little bit less pressure. Spotify, Slack, and surely Airbnb.
Or the profitable ones go
do
that route, and maybe, you know, this is kind of bottomed out, the messy IPO market, and there is going to be more scrutiny, and your S1 can't be a goofball S1 like WeWork. I'm sorry, but
CC, WeWork.
Yeah.
CC, Peloton to an extent.
Yeah.
Although
Elevate
I also
the
thought
world's
Snap's
consciousness.
original S1 was kind of crazy, but Snap has kind of bounced back. All right, we will be right back in just a second here at Wi-Fi AM. Welcome back to Wi-Fi AM at Yahoo Finance. Big baseball ownership news. The New York Mets could soon have a new majority owner. The team has confirmed publicly that it is talking to minority owner, he owns 4% currently, and hedge fund billionaire Stephen A. Cohen about taking an 80% stake in the team. Now, owners Fred and Jeff Wilpon would remain as CEO and COO of the Mets for the next 5 years, even if this deal comes together, and the deal is subject to approval by Major League Baseball. Guys, to me, that is the biggest part of this story. First of all, it does seem like the deal is happening. I mean, it's not official, but the team confirms that it's in talks. But to me, okay, you're going to sell 80% of the team to someone, but still you get to stay in charge. Unbelievable.
No, that might be part of the deal is Steve Cohen, look, he's running a massive hedge fund empire. It's .72 asset management, and he's very much going to stay at .72. I mean, this person
he doesn't have that much free
a legend in the trading world. So yeah, he doesn't have free time, but if you have the right management in place, great. He's also a lifelong Mets fan, went to the first Mets game in 1963 with his grandfather, as you were just referencing, already owned a stake. He's got a net worth north of $13.5 billion.
This is not a big purchase for
I mean, this is not a huge purchase, but this is something like, these are the purchases that people of that level make. They buy football teams. Yeah, you buy a baseball team. I mean, come on, that's like the dream toy.
Well, look at Mark Cuban. Dallas Mavericks. Stephen Ross, a real estate magnate, Miami Dolphins. So there's certainly a playbook for these billionaire investors in other categories to enter the sports world if they so choose.
And in addition, some of these guys, or most of them, hold on to the team for years and years and years. However, it is also a rare investment where you can flip it 2 or 3 years later and make more than you paid.
Sure.
I now am convinced that no matter how bad the team is, I mean, even say the Marlins, and we know that Derek Jeter is running things over there now, the Marlins could be sold in 2 years for more than they were initially sold for last time, because it's like an investment that every year gets more valuable.
And do you look at it as an investment, or is this more of like, this is your passion? Like, imagine, so Steve Cohen comes from pretty humble beginnings. You grew up, you went to your first game, and I mean, come on, you've made it. And you own the team that you've loved growing up. I think there's something to that as well. Not just, okay, I'm going to flip this in 3 years.
Right. Yeah, I'm sure Stephen A. Cohen will stick around. But man, if you're a Mets fan and you see this news, oh great, the team is selling, and then actually you're still stuck with the Wilpons for 5 years. The Wilpons with all that Madoff baggage. We'll see what happens. McDonald's and Ford are teaming up. Ford is planning to use coffee chaff. That's the bean skin that comes off during the roasting process as materials for plastic headlamp housing used in some of its cars. And it will use McDonald's coffee suppliers to get that coffee chaff skin. Now, Ford has been implementing more sustainable practices, like using soy-based foam in its cushions, for nearly a decade. So this is another effort for Ford to say, look at our ESG, look at our social conscience, look at the environmentalism.
Gas in our SUVs.
I don't understand this at all.
Okay, so can I tell you all about coffee?
It's made from coffee skin.
Okay, so coffee comes from a coffee cherry. There are 2 beans in each little coffee cherry, and the chaff is the skin, basically, of that cherry. So I guess transforming that, using plastic in that process to transform it into a more sustainable product. I mean, it's kind of like a nice little experiment ESG project.
It's just something to be able to say, look what we did.
It's not going to move the needle and save the planet.
Right. It's just something to be able to say, look what we did. But I think it's kind of cool. I'll give you 2 other similar examples, just anecdotally. Years ago, I went and did a story in Under Armour for Fortune. It was my first big story in journalism in like 2011. And I went to see Kevin Plank's personal horse farm he owns, Sagamore Farm outside of Baltimore. And the person who runs the farm mentioned to me that, by the way, the racehorses here are trained on and run on a track that is made from Under Armour fabric. Torn up little pieces of Under Armour fabric, like Under Armour shirts, are on the track. I said, wow, so what does that do? Is that like better for the environment, or it's easier on their hooves? And they said, no, it's just a cool thing to be able to say. So this kind of reminds me of that. And I'll give you another thing. I remember years ago, I did a story on GM using recycled ocean barriers from the BP oil spill in their manufacturing process. So we did a whole graphic on how they pull the oil separators from the water after an oil spill. They're like, big foam things that soak up spilled oil. And then they put them in like massive dryers to wring them out. And then they crush it up and they put it in materials that go into cars.
Have you ever been on a ski lift and it's like this ski lift is made from like recycled plastic bottles?
No, but that's great.
Just,
love it.
More of that.
Let's do more of it.
We need to save our planet.
I'm not on the paper straw train, though, I have to say. I know I want to help the turtles and everything,
they don't
but
feel good.
They just don't work.
I had like a quasi-plastic one that wasn't. It was like it almost felt like a noodle.
Yeah.
It was a cheese press. It was great.
The wooden forks?
Hey, we need Silicon Valley to get on this problem.
Hey,
and
you can
find
make a
some of the
lot
other
of
plastic
dough.
that
Figure it out, though.
doesn't dissolve in the coffee. Ugh. When I have my iced coffee.
In California,
no
you just
paper,
get the sippy cup from Starbucks, no straws.
Oh,
Sippy
that's
cup
a
works
good
well.
idea.
Yeah.
All right, we'll leave it there, and we'll be right back here at Wi-Fi AM after another quick break. Welcome back to Wi-Fi AM at Yahoo Finance. Martin Scorsese's The Irishman has now been named Best Film by another group, this time the New York Film Critics Circle. Now, Joe Pesci also took home a supporting actor win from the New York Film Critics Circle. Now, the 3.5-hour epic has certainly stirred up a lot of conversation about streaming and about how Netflix releases and distributes its Netflix original movies. I am one of the folks that saw the movie in theaters during its limited release. And I am of the opinion, and I'm not a movie snob, but I think that it's a movie that deserves to be watched in a theater.
I disagree.
What makes me sad, I know it's convenient that you can just watch it at home now, but it makes me sad, the idea that so many people now are just watching it on their couch. They take a break, they're on their phone, they're texting, they go to the bathroom. It's an excellent movie, and it deserves to be watched in one sitting.
No, I mean, I hear you on that, but I also like the choice. If you want to go to the theater, fine. Or, you know, you can get a better deal, but it'll be cheaper to just watch it at home, and I can lie down on my couch and take a nap.
No, see, that's
it's too long. It's too long. It's 3.5 hours.
I couldn't do 3.5. I haven't seen it.
Yeah.
But that is way too long.
Are you going to watch it?
No.
And you did watch?
I mean, yeah, but I took a nap, so I need to go back and finish it. But
Oh
Alex
my
said it was
goodness! See,
great.
that's my whole point.
Yeah,
so you
but I
started
would
and
nap
you
in
didn't.
the theater,
You got to take a week off. And
Oh,
then finish.
Julia, you started and you didn't finish.
It's great. That's how I watch like all my TV shows. Is I fall asleep,
are
and then
proving
that was a great show.
My point.
Yeah, it was awesome.
And by the way, Netflix could have made some more money if it had kept it in theaters longer. Now, I understand it's like, let's just get it on our platform, but could have had it in wider release. I mean, it was in so few theaters and for such a short time.
So are we going to see more of these streaming services double down on original movies like this? I mean, is it going to move away from the TV series and solely become...
See, that's a good question. I mean, they're spending a lot of money on everything, but I feel like if all quality is equal, and we're comparing apples to apples here in terms of quality, I still feel like a show gets you more mileage as a streaming service than a movie does.
I think you have to do both, though. You have to.
I feel like we don't talk about many Amazon Prime movies.
No.
Now, I know Amazon has backed some big pictures, but I feel like we haven't seen many Amazon Prime original streaming movies, whereas Netflix is certainly doing a lot more Netflix original films. But we talk more about the shows.
That's true.
Yeah. Irishman is great. You gotta finish,
I
Julia.
know, it was great. It put me to sleep.
Joe
so
Pesci
I like
is
it.
just terrific and understated in the
Yeah.
movie. It is really good. I do think it could have been half an hour shorter. It really could have. It's okay.
It's always that last half hour.
That is Wi-Fi AM for today. Thanks for watching. We'll be right back here tomorrow for the Friday show. But don't miss On the Move. That's our next Yahoo Finance Live show. It starts in just 2 minutes.
7 a.m. here in New York City, about 90 minutes into the trading day. We've got stocks a little changed after a bit of a bounce in yesterday's session. Staying on track, Commerce Secretary Wilbur Ross tells Yahoo Finance just where things stand as China and the U.S. work towards a trade deal. Another top exec is out. What's next for United as CEO Oscar Munoz announces plans to step aside next year. And Huawei fights back. The Chinese company sues the FCC over its, quote, unconstitutional ban. Welcome to On the Move. I'm Julie Hyman.
And I'm Adam Shapiro. Our top story right now, progress on trade. China says negotiations with the United States remain on track and that tariffs will be reduced if a Phase 1 deal is reached. U.S. Secretary of Commerce Wilbur Ross sat down with Yahoo Finance's Sybil Marcellus and spoke about what needs to happen to reach a successful deal.
The most important thing is that we get a proper deal. We're trying to roll back decades of inappropriate trading relationship with China. That's a hard task, and it's more important to get it right than it is to get it on December 15th or any other particular date. And there are three buckets to it. First, more current trade, reducing our deficit. If that were our only objective, we could have had that 2.5 years ago. Second bucket is structural reform, respect for intellectual property, no longer forcing technology transfers, no longer subsidizing state-owned enterprises, the whole panoply of activities about which we've been complaining. That's a little harder because that takes legislation in China. The third and most difficult, enforcement. Their record of living up to things is not superb, so we really need a good enforcement mechanism, and that's the hardest thing of all to get. So we need to fill all three buckets eventually to make a proper deal.
So let's introduce this hour's panel to discuss what Ross just said. Yahoo Finance's editor-in-chief, Andy Serwer, as well as Miles Udland, joining us right now. Andy, let me start with you. You've interviewed Wilbur Ross before. He's just laid out an agenda that, regardless of Phase 1, yes or no, will take more than a few days, weeks, months, even years to accomplish.
It's an ambitious agenda. I was sort of rolling my eyes as he was talking, for instance, just about one particular point about China ending the practice of SOEs, or state-owned enterprises. Not going to happen. I mean, that's just a fundamental part of their business system, of their political system, of their economic system, of their society. I mean, you're telling the nation of China not to have businesses where the government has a stake in it. That's just how they do things. And I don't even think we have the right to tell them not to do that. Who are we to tell them not to do that? I mean, I know it's extremely difficult for us to compete against them, but that's the nature of the game.
Well, there are things that we probably have a better leg to stand on when it comes to IP theft and things of that nature. But you continue to have this sort of dual track, right? You have the president on one hand, tweeting and speaking, and then you have the people who are actually doing the work.
Yep.
You know, and Wilbur Ross, I guess, is involved more on that side of the equation.
In theory, yes.
To some extent, right? But we still don't see a deal.
I think the difficulty from where we sit following the markets every day, trying to make sense of the trade war, is that really we just look at the Dow, and if it's up, then the trade war is going well, and if it's down, it's going poorly. But I think what the president said earlier this week, where he's like, well, maybe it'll last through the election. I don't really know. It could last forever. To Andy's point, I think the issues Wilbur Ross is laying out, it is going to go forever, right? There's not going to be some sort of negotiation, whether Trump wins re-election or there's new administration. The trade agreement with China, or trade status with them, has changed kind of irreparably, right? So I don't really know where we go in terms of thinking about what Wilbur is talking about. The market just wants to know, Phase 1, going to delay? I don't know.
We might get a Phase 1, but really then...
What does that mean?
What does that mean? They'll buy the $50 billion that still has been purchased of agricultures and corn and other stuff. But let's talk about enforcement. What does that look like?
Yeah. That's really hard, and I agree with him. I mean, that's extremely difficult. And I think that we can make inroads in enforcement in some of the more difficult things, which is to say IP theft. And I think that the point that as China becomes a mature economy, they're going to want IP protection as well is a really valid point, and I think there really is a way forward there. I think when you talk about enforcement, Adam, you can only talk about enforcement in terms of things that are practical. Like, we need to enforce that they don't have SOEs. So let's forget about that one. But in terms of IP protection, I mean, let's try to lay it out to the Chinese so they want to buy into that
The
as well.
SOEs create the IP.
Right.
Yeah.
So the Chinese government's going to enforce actions against itself?
Well, but IP theft is different. How is that specifically connected to an SOE? I don't get that point.
When you partner with them, you have to lend
Well, but they can simply say that they're not going to do that.
Right, but I guess the thing is,
they could say that.
It's how they define it. I mean, like what they would see as how you do business in China, we're defining, I think, in many cases, as like theft of IP.
Right. I think that some of those things could be parsed. I think the bigger thing of saying you can't subsidize business is more difficult than saying you can't steal Ford's F-150 pickup truck design. I mean, right?
Well, they already have it.
Yeah.
Right. Well, the next one. The Tesla pickup.
Yeah, no, the Cybertruck, sure.
Right.
All right, well, let's move on to what's going on in the markets today. We've got shares of Slack. They're just up marginally today, and that's following the company's, actually now they're not doing anything, following the company's third quarter earnings report. Inez Ferreira on the floor of the New York Stock Exchange. Inez, what are you seeing there?
Yeah, Julie, Slack's fourth quarter bottom line guidance came in a bit light of what the street was expecting, even though their loss per share for the last quarter came in better than expected, narrower than what the street was expecting. And their CEO, Stuart Butterfield, in their earnings call last night, and also talking with our own Brian Sozzi, spoke about the competition with Microsoft, saying that Microsoft likes to market its Teams product as a competitor to Slack, but in Butterfield's view, Slack is a superior product. They're very different tools, and he says that the proof is that the company has been adding clients who use Office 365. Remember that Teams comes bundled in with Microsoft's Office 365. We're watching Dollar General this morning. This is after the better product selection and revamped stores helped their performance last quarter, helping drive traffic to their stores with same-store sales up 4.6%. That company says that that's better customer traffic and same-store sales increases in almost 5 years of what they've seen. And the company also raised its full-year guidance. And then just passing on to Tiffany. Tiffany's third quarter revenue came in flat compared to the same quarter last year. Their earnings per share came in below what the street was expecting. The company says that it saw some softness in the Americas, but that was offset by growth in mainland China. And in light of the deal, their agreement to be acquired by LVMH, they canceled their earnings call today.
Inez, thank you very much. There is a new pilot at the controls of a large U.S. company.
I'm so happy to and glad to announce that Scott Kirby, we could become your new CEO, our new CEO.
Not to be too corny, but I wanted to start and thank you. Thank you first for taking a chance on me 3.5 years ago. But more than that, for mentorship and friendship. I will be a much better executive today, will be a much better CEO and a better person.
No turbulence just yet at United Airlines after announcing CEO Oscar Munoz will leave his post in May, and United's president Scott Kirby will become the new chief executive officer. I actually had a chance to sit down with Scott Kirby in October to talk about the future of United Airlines, especially with the return of the 737 MAX to the fleet as some of its competitors prepare for all of that. Here's what he had to say.
Look, we feel really good about the uniquely United opportunities. And a lot of this is that the growth plan was part of it. And you've already seen how that's worked in the last few years. But we've increasingly seen, as we've invested in the customer experience, we've invested in the customer product, that customers are choosing to fly United Airlines. And so we're able to outperform even in a difficult macro environment because of the investments we're making and the improved operation and customer experience that are causing people to choose to fly United Airlines.
But you don't worry about, I mean, it's an increase in supply that's going to be a huge increase in supply when those MAX jets go back in the air, because a lot of them are just sitting waiting to go.
Yeah, look, there's going to be a big increase in capacity next year. And all we can control is what we do for what is best for United Airlines. And we're confident in our ability to fill the aircraft and to do so in a profitable way.
All right, let's talk about this with the panel. Andy, you just brought up the fact that there had been the rumors that American Airlines wanted Kirby to come back. He left 3.5 years ago. He said last fall that no, that wasn't going to happen. He was staying at United. One of the things, though, a lot of people say, well, yeah, they might have rushed this transition. But the other thing is, it's been a two-tiered leadership of United. Munoz has been in charge of rebuilding customer morale as well as employee morale because of the customer service issues.
Yes.
And it's Kirby who's rebuilt the airline as far as the hub system, the fleet upgrades, and the efficiencies.
True that, and by all means, apparently it's done a pretty good job of it. And if you're Kirby, it's nice to be wanted, right? And so he's in a pretty good position. But he has executed. I think that airline still has issues. I know because I'm a customer. They're my airline of choice, and I have to say, unfortunately, over the past several years, And I think the airline with the momentum right now is Delta, which is the other one of the big three.
Yeah, but their stock is up since Munoz took over in September of 2015. The stock has doubled.
But they still have a long way to go from a customer service standpoint. Just one person's opinion.
Well, and I think on the, thinking about Kirby's role there at United, obviously the 737 MAX is a huge issue for them and for Boeing in general. And I think for me personally, thinking about what the 737 MAX has meant for how trusting we are of the U.S. Aerospace industry, right? I mean, what's the path forward here? Are we so sure that Boeing planes are the way to go? And this is a fleet. Now, they signed a deal yesterday, I think it was 2 days ago, for those A350s, for some of those longer haul flights. But this is a fleet that is largely Boeing. And so what does the United fleet look like over the next couple of decades? I think is a very interesting question right now.
To me, what's also fascinating about all of this, to take a step back, is here we are in December. This has been a big year for CEO departures. We thought we were winding down. And not only do you have Munoz announcing this today, the CEO of J. Jill announced she was leaving today. The president of Macy's is going to be the CEO of Tractor Supply. And Mark Weissman, I know you're going to talk about this later, Andy, is leaving BlackRock. So it's just been, and I know there are a lot of different reasons that are driving all of this. This situation at United is a particular situation. But it's been pretty remarkable.
Maybe in December it's akin to tax loss selling for CEOs. You know what I mean? It's time to
let's get it in before the end of the year.
With United, don't forget that Munoz took this position, never wanted it. Jeff Smisek got caught in the scandal involving the private, well, it wasn't private, but the flights to North Carolina. And then you also had the fact that Munoz had a heart transplant just after he took the reins of this.
You know what I'm going to say? This is what we always say with airlines. Bring back Gordon Bethune. Right?
Well, they love the Continental,
right?
Yeah, but you could also bring back Frank Lorenzo. So.
Well, I don't know if you're going to do that.
No, you don't want to.
No, right.
All right, well,
we'll end on that note.
Another big corporate story and commodity story going on today. That's Saudi Aramco pricing on the high end of estimates. The company, which is forecast to be the world's largest IPO, has priced its share at 32 Saudi riyals. It equals roughly $8.53. It has now raised $25.6 billion from that IPO, or is going to. The valuation overall is expected at $1.7 trillion. All this, by the way, according to Reuters. Joining us now for more on this is Anshin Managing Director Lami Ajibisen. Thank you for being here, Lami.
Good to see you.
So I want to move to OPEC in a moment because that's going on also, but let's talk about Saudi Aramco and this pricing because it is at the top of the most recently announced range. It's still below the initial plans for Aramco, right? Is this sort of the right pricing for the company?
That's very interesting that you mentioned that. It is, according to the Crown Prince, below his expectations. So we know that they're valued between 1.6 and 2.3. So they're expecting it to be around 1.7 based on that high range, which is around $8.53. And it's very good to know that the market is actually watching the way they're valuing the business. And I can tell you that it's not right or wrong. There's a wide range because if you're looking at the other international oil companies like Exxon or Chevron or Shell and their multiples, for instance, Exxon has a 10 times multiple. And if you compare that to Saudi Aramco's EBITDA, you can get that 2.3. So it depends on how they're valuing the company. It's not as far-fetched as we thought. However, even if we go into the fundamentals, where we're saying that is strong, there are other concerns, which is the story they're crafting. What is the governance surrounding this
Oh yeah.
company?
What about the concern?
And the transparency.
Transparency is key. Absolutely.
All of that, but why would this be a good or perhaps a bad investment for somebody going into a future where over the next 10 to 20 years we're going to see demand for fossil fuels not stop growing, but the acceleration of that's going to peak
it's going to slow down.
Right.
And we're going to see an effort to go greener. I mean, maybe the growth will reverse.
Absolutely, and that's a great question because it depends on, the short answer is it depends on your risk appetite. If you're comfortable with companies like Exxon and Chevron and what they're delivering, I think investors can get around being comfortable with Saudi Aramco. One, because they're the largest integrated oil and gas company in the world, period. They have proved reserves that will last a long time. So if you're looking at a 10-year range, it might be okay for some investors, but you're right. Going into a longer time frame where we're thinking of alternative vehicles and alternative energy sources, it becomes more of a problem and potentially a decline.
So, Lami, is that scale the sort of differentiator why you would want that versus an Exxon or a Shell or a BP?
I think that's the story they're crafting.
Right.
So they're saying that the scale is significant.
Yeah.
They're saying they're also, the lowest carbon emissions producer. And also they have the lowest lifting costs, which is your cost to produce the actual oil and gas. And they have better geological formation. So they have a very beautiful story, but people are concerned more with governance. Can you separate government from the company?
I want to ask about actual oil and gas for a minute because the OPEC meetings also going on. The latest reporting I have seen is that Saudi Arabia might be pushing for an additional cut of 500,000 barrels, but it wants the other OPEC nations to adhere to the cuts and behave themselves. Saudi Aramco, of course, is, because of the scale, it's also more leveraged to the price of oil than the others. So what do you think happens out of this OPEC meeting? We've seen oil rising in recent days.
Right. I think that is yet to be seen. Based on the demand, it's kind of slowing down. So everyone knows that Saudi Aramco is going to try to make sure this doesn't impact their IPO. We all know that. But if you look at the prospectus, there's a lot of incentive for them not to really cut back production. And then even the government gave them reductions in royalty fee, for instance, if oil goes over $70. So they really want the oil prices to go up at some point. But I think that's going to be extended a little bit to the end of next year, 2020, to make sure the IPO and the effects has gone smoothly. I think that's what the analysts are saying and what we've been saying. And from my clients that come to me at Anchin, and when they're trying to value their company, they're thinking about the cycle and how that would impact their pricing as well. So it's hard to say, but we just have to wait and see.
We do. All right, we will. All right, Lami Ajibison, thank you so much for being here. Appreciate it.
Thank you.
Coming up, Huawei's revenge, why the Chinese telecom company is suing the FCC. Plus, a new player in the Gucci gang, how Kering could pay big bucks to add a new brand to its portfolio of luxury.
Welcome back to On the Move. I'm Jared Blickery, and stocks are just treading water here, down to up. It depends on which market you look at. Dow is down 14 points or 5 basis points. S&P 500 up 2. We're going to call that unchanged. And then the NASDAQ is up even less, just 1 basis point. Here's the intraday price action. We gapped up a little bit, came down a little bit in the red, but a pretty narrow range, less than 10% or less than 10 points in the S&P 500. We have climbed back into the green. Looking at the 10-day price action here, we can see that we've retraced, as of yesterday, maybe about 2/3, but not quite. So still looking at 31.22. Close over that kind of is the all clear for equities here. Otherwise, we might roll over and test the lows or go even lower. We have the 10-year T-note yield up again today. That's after a big bump up yesterday, but only 3 basis points today. And as such, we can see which markets are leading. This is our canaries list. Home builders are in the front, and then we have regional banking, and then emerging markets, expanded tech software, etc. We're going to go back to our major markets here because I want to show December seasonality. And to do that, we're going to pull up a tweet from Ryan Dietrich at LPL. And we can see that in December, we kind of tread water going into the middle of the month, and then we launch higher. And the very end of the month is a Santa Claus rally. Now, it's important to say that right around the 15th, that's when that tariff deadline is. So that's probably going to govern what actually happens to stock. But seasonality is worth about 2/3% here, excuse me, about 30%. So here's our heat map for the Dow. We can see Apple is up about 1%, Microsoft only up about 10 basis points. Financials doing well today. We have JP Morgan up about 0.3%, Goldman Sachs up less than 1/10%. Home Depot retailers not doing very well today. It's down 0.5%, and then J&J Pharmaceuticals, they are down 1/3%. And on that note, we'll be right back in about 1 minute.
Huawei has filed a fresh legal challenge against the U.S., the company asking a U.S. court to overturn a decision by the Federal Communications Commission that bans carriers from using federal funds to purchase equipment from Huawei. Joining us with the details is Yahoo Finance's Crystal Hu. This is obviously the latest development in the whole back and forth between the U.S. government and Huawei. How significant is this one?
Yes, so this is one of the few legal battles Huawei is fighting against the U.S. government agency on U.S. courts. FCC just banned the U.S. carriers for using Universal Service Fund, a fund that's significant for carriers in the U.S. to purchase telecom equipment, and they're banned from using that fund to buy equipment from Huawei and ZTE. And here is Huawei's argument to challenge that decision. They say that the FCC is not doing its job by singling out Huawei as national security, because the FCC's job is to regulate telecom industry, not identify what is national security and what is not. And then Huawei also argues that almost like half of the telecom equipment in the market is made in China or made with the joint venture in China. So why single out Huawei and ZTE, who are Chinese companies, not the other companies that made their equipment in China?
Do you think that Huawei has any kind of chance here, or is it just sort of a pro forma thing they're doing as an act of protest? I mean, do they really believe they can get relief in the U.S. courtroom?
Here's the interesting thing, that the U.S. market is insignificant to Huawei because they sell only like 40, sell to only 40 telecom equipment here, carrier companies here. And the revenue in the U.S., like North American and South American combined, only accounts to 6% of Huawei's revenue. But the reason they're fighting so hard in this is that they don't want other countries like in Europe to see it as an example that, the U.S. identifies Huawei as a national security concern. So what we need to do with them, should I follow the U.S. in making that decision?
Okay, so they're trying to make the statement as a warning perhaps to other, sovereign entities and governments. But at the end of the day, the article again that we saw earlier, they're making phones without U.S. chips. They don't need us. And it doesn't sound like they just don't need to do business here. The Europeans will take whatever steps they want to take regardless of what we do. So what happens if Huawei loses this?
So we don't know if Huawei will lose this case or not, and because the legal proceedings will always take years. Of course, Huawei said they think they have a pretty good case here because they think the FCC is just being arbitrary in making that decision. And of course, they have the best teams of lawyers. One of their lawyers, I looked it up, is the former head of the legal office in the Department of Justice. So they do have some good people like backing them up. But like you said, even if they lose the case, they lose out the U.S. market, it won't have a fundamental difference or impact on their business. Like even within this year, with all the Department of Commerce blocking their access to Google service, they're still managing to sell their phones and doing businesses in other countries except the US.
Crystal, isn't it true that President Trump has put pressure on other countries not to do business with Huawei, right?
Yes, that's what the U.S. government is trying to do.
Right. Yeah. So that's actually makes it a little bit more complicated.
So in a way, they're basically suing for their ability to still do business in Europe by just making it the FCC
or everywhere else outside the U.S.
Sure. Australia and New Zealand had agreed. They went along with what the U.S.
Yeah, to a degree, mostly. Yeah, almost completely. Yeah. Huh. Wow.
All right. Crystal, thank you. Stocks are choppy today as investors continue to monitor the U.S.-China trade stalemate. The Dow, the S&P, and the NASDAQ are, as you can see, trading slightly lower. They've been going back and forth as we've been in the stream. But the Russell 2000 index of small caps, well, look at that. It's trading higher, finding opportunities in small and mid caps in an environment where large caps have done better can be a challenge. That's an understatement. We are joined now by Sandy Valliere, portfolio manager of the Valliere Balanced Fund, to break it down for us. Why is the Russell 2000 doing so well? Or doing well, let me say it that way.
Yeah, well, it's still underperformed this year, but it has a nice recovery. So small caps in general do better, probably in a rising interest rate environment rather than one that's falling. So it's been an underperforming year for small caps, but it's I think that's the opportunity to pick apart the rubble and try to find some opportunities here.
Do you think, though, that on a broad scale that anything is going to change more profoundly for the small caps? I mean, it's not just been an underperformance this year, it's been a pretty dramatic underperformance of the S&P 500.
Yeah, and I think that's where the opportunity is. So we're very stock specific. So we're going to find individual stories that are mispriced for whatever reason. It could be trade war related. Maybe a semiconductor name could have something to do on the political front that gives us an opportunity to buy, a healthcare name or something like that. So we want to dig through and find these diamonds in the rough.
So semiconductor-wise, On Semiconductors, one you guys liked, and you actually rotated into On from Cypress.
Yeah, we own Cypress, and they got bought out by Infineon, and so we moved our money into On. It was almost as cheap. It was about 10 times earnings, but a little bit different. It's a play on the 5G build-out. So we think this is going to be exciting because you look at 3G and 4G, they had anything on any of those base stations, and now they've got $100 of content on all the base stations. So we think that's a 5 to 7 year build-out.
Do they have the ability to take on what we're going to miss out from Huawei and to fill that gap? And is that where the opportunity was, or is there something else we're not?
No, I think they could, but we just love the end markets. Even in auto, if you look at, it's been weak in China, it's been weak in Europe. So their competitors were down about 9 or 10% this last quarter. They were only down 2% because each iteration of the electric vehicle, et cetera, is getting more and more content per vehicle from On. So we think it's between 5G and between auto and even some exposure to iPhone that we love their end markets.
Now, Sandy, when I think of small caps, I mean 20% of the Russell is basically regional banks, right? So it's a big financial sector there. In some ways, the KRX just kind of trades in kind with the Russell. Yeah. When you look at financials, and it's a weird environment for them, right? Because we have the economy continuing to do okay, but the shape of the yield curve has been, to say the least, a problem at various points this year. What do you see in that space in the names you're looking at?
Yeah, so we've got a small bank called First Hawaiian that we think is going to do quite well. So we're very, again, stock specific there. But you're right. As you get a flat yield curve or inverted yield curve, very difficult for these banks to have any sort of net interest margin. So it is something to keep an eye on, and something that hopefully you can find some opportunity.
So how does something like a First Hawaiian navigate that? I mean, it always amazes me that when you have something that all the banks are pegged to, something like the yield curve, that some of them manage to do better than others. I mean, what operationally differentiates a First Hawaiian from another bank that is not doing as well?
Yeah, one thing is First Hawaiian has extremely sticky deposits, and very interesting there. So people in Hawaii are just extremely loyal to those banks and keep those deposits. And so I think it's one that it truly differentiates itself, and a big disparity gap from a valuation perspective to Bank of Hawaii as well.
Sandy, you guys are based in New Orleans, right? And we've had your colleague on, George Young, and what's sort of the investing thesis of your firm, and what do you guys look for, just sort of generally speaking?
Yeah, so we have a very concentrated portfolio. We only own 20 stocks. And right now we've got about 15% in cash, so we've only got about 16, 17 holdings. So we wait for that opportunity for a valuation correction, something that allows us to buy growth at a reasonable price. We love things that differentiate themselves from any of their competitors, and that's the type of thing we like to buy and hold for 3 to 5 years.
Oh, that was going to be my other question.
Yeah.
All right.
Yeah, truly invest.
You probably told us about a quarter of his portfolio right now.
Yeah.
That's good.
Right.
Andy Valere, portfolio manager at Valere Balance Fund. Thank you for being here on The Move. Come back.
Thanks for having me. Thank you.
Well, coming up, Shinzo Abe's $120 billion plan to stimulate economic growth in Japan. Plus, before we go to break, let's take a quick look at some of the top trending tickers on Yahoo Finance today. Sage Therapeutics plunging after a trial. I'll give you the details in just a bit.
11:32 in New York City. We're 2 hours into the trading day. Here's what's happening with stocks. We're trading down, and we're going to keep an eye on that to see what's moving the markets. We've also been watching oil on the day that the Aramco IPO prices, and you can see there that oil's trading higher, $58.79 a barrel. Shinzo Abe makes moves. Japan's prime minister announced a massive stimulus package to combat economic risk. Another fashion mega deal. The details as Gucci's parent company sets its sights on Moncler. And holiday toy rush. We'll talk to the man behind the product at the top of most kids' lists. We had that toy last year in studio. How do you top that?
The toy show of Yahoo Finance.
There you go.
Apparently.
I'm Adam Shapiro. Welcome to On the Move.
And I'm Julie Hyman. Thanks for sticking with us. Well, the luxury retail giant behind Gucci is in talks indeed to buy the Italian ski wear maker Moncler. Moncler's market value is $12 billion. Both stocks are higher on this news. Moncler's up by about 7%. Yahoo Finance's Oscar Williams-Groot joins us now. Oscar, I'm amazed that Moncler is worth $12 billion. I had no idea. I guess it was first made as ski wear. Now it's become sort of fashionable jackets, right, that people wear around New York City. But $12 billion?
That's right.
Well, the stock has surged actually 200% over the last 5 years, in part riding this wave of sort of streetwear becoming a luxury brand and really making its iconic jacket one of the must-have items in fashion weeks around the world. Now, that's not the only reason that Kering are swooping for this company. There's actually a lot of consolidation going on in the luxury sector right now. Just remember, a few weeks ago, we had LVMH, the parent company of Louis Vuitton, making a deal to buy Tiffany & Co., the jewelry retailer, for $16 billion, which was the biggest ever acquisition in the retail sector. Now, Kering itself, the parent company of Gucci, they are facing some headwinds that mean they could be on the acquisition trail themselves. Now, Gucci is their biggest brand, and they make 80% of profits from that luxury house. But sales are slowing, and as a result, investors are getting nervous. Kering is trading at a 20% discount to luxury peers, so it makes sense for them to go out and try and buy a successful, growing brand like Moncler. Analysts think this deal could get done. Both UBS and Bank of America said it makes sense for both sides. For Kering, as we've discussed, there's the obvious appeal, but for Moncler, there is a risk to being a solo brand house, and so going into the fold of something like a Kering would buy protection, and also they could command a pretty good price given the dynamics. UBS said today in a note that they think Kering may have to pay a premium of up to 46%, which obviously would be very attractive to shareholders. Now, as yet, both sides are yet to comment on whether they're even in talks, let alone confirm whether they are interested in a deal. So this is one to watch.
We will watch, and we'll ask you to pass the Grey Poupon. Thank you very much, Oscar Williams-Groot. Japanese Prime Minister Shinzo Abe's cabinet approved a $120 billion stimulus package. That program will go in place to counteract the effect of an increase in the national sales tax, which is going from 8% to 10%. Here with us to discuss it is Paul Grunwald. He is the global chief economist at S&P Global Ratings, and specifically on the stimulus package. What does that truly mean for us in the United States? I mean, it didn't get a whole lot of play when it passed.
Well, Japan's mostly a closed economy. It doesn't trade a lot with the rest of the world, despite, automobile plants here in the U.S. I think it's probably marginal in terms of the U.S. outlook. But you're right. It was kind of a funny sequence where they put in a consumption tax increase from 8 to 10, which has been in the works for a while. That was slowing the economy down, and then they offset it with a stimulus plan. So kind of net it's zero on the fiscal. But I think Japan's doing okay on a kind of per capita basis. It's kind of flat on a macro basis. But the impact, I would think, U.S. and globally is probably small these days. Japan's very rich, but it's also very high and very flat. So it doesn't move the growth needle very much.
But do you think it sort of tells us what our future may hold in the rest of the globe?
Are there lessons for us?
In the sense that their monetary policy effectiveness has sort of reached its end. Now they're going to fiscal.
Right.
And yet they're still running in place, as you said.
Has a crazy amount of the public debt as well on their balance sheet.
Right, exactly. So are we indeed going to see more fiscal policy? This is what central bankers have been calling for around the globe, and yet it hasn't materialized.
Well, I think the first point, the so-called Japanification of the world, I think that hits Europe first. It's already happening where you have societies that are aging quickly, the workforce is shrinking, potential growth's going to zero. Then you're kind of in a low nominal world forever. I mean, fiscal stimulus, if we have low interest rates, which is the bond market sending a signal to borrowers that, hey, you can maybe borrow a bit more, and you do it in a way that produces productivity and growth, that's a green light from the markets. I think you should do it. So the fiscal message, I think, is pretty clear.
I want to get even more metaphysical than that, if it's possible, Julie.
Go for it.
And so, people complain about Japan. Oh, it's terrible. It's terrible. I went to Japan first time this year. I thought it was great. It seemed like people had a pretty good quality of life to me. Are we measuring the wrong things?
Economists always measure the wrong things.
Okay, good. I'm glad. Gotcha.
The way I think about Japan, when you go to Japan, it looks like it's bustling. Lots of people on the street. They're shopping. On a per capita basis, they're doing fine, but the population's shrinking and they have, no inflation. So the nominal growth rate doesn't look very impressive. But output per person, which is really the long run measure of prosperity, the Japanese are top half of the OECD. So they're doing okay. As I said, they're just going to be flat for a long time, kind of fade into the horizon. The population's going to be shrinking and they're not going to be driving growth, but I think it's a very successful country.
Forgive me for, again, being myopic coming back to the United States. You actually think that the U.S. Stands to grow next year around 2%. And I'm curious, everyone seems to put in the caveat,
China trade. But if the fundamentals are in place for us to grow, why does the China trade issue really matter?
Well, go back to last year. Last year at this time, maybe mid-2018, we had a synchronized upturn. Remember, we were talking about the Fed normalizing. Would they go to 3, maybe a bit more? Then we had another round of U.S.-Chinese, kerfuffle around the trade and tech, that bigger issue. And that took down global confidence, which took down global investment, which took down global demand, which took down global growth. So then central banks readjusted, and we had a round of rate cuts, and now we're smooth again. So you're right in the sense that it's a very mature recovery. We're 10 years in after the global financial crisis. 2 is the speed limit for the U.S., so we're at the speed limit. Labor market looks good, right? The unemployment rate's 3.6, so that's your kind of textbook steady state or cruising state for the economy. If we get a shock to the relationship between the 2 largest economies in the world, and we're worried about how they're going to fit together, or what the investment environment's going to be, or what's going to happen with tariffs, and where do we locate production, that just runs the risk of pulling down growth. It doesn't need to be a dramatic drop in growth, but it's just this ratcheting down of kind of risk appetite and sentiment.
What about the relationship between the U.S. and everybody else, though? Because I want to bring up the NATO summit because President Trump is just back from there. He tweeted tremendous things achieved for the U.S. on my NATO trip, proudly for our country. No president has ever achieved so much in so little time. Without a U.S. increase, other countries have already increased by $130 billion, with $400 billion soon. I'm not sure what he's talking about, but he also raised the specter of retaliatory tariffs against France because of France's digital tax. And what was clear from that hot mic situation with Trudeau of Canada is that other leaders are learning how to push back against him.
Yeah, I mean, as a macroeconomist, I try to look through a lot of the market and political noise. I'm not sure that moves the macro needle. The one thing you did say that concerns us is tariffs, and specifically the weaponization of tariffs, if that's the right term, because we've gone through, 7 decades since the end of the Second World War. We had a system based on markets and rules, and everyone played by the game, and you tried to lower tariffs, and globalization was a good thing, and intra-regional country trade was a good thing. Now we seem to be moving away from that, and we've made a lot of assumptions around our longer-term growth and prosperity and trade policy, which now don't seem as valid as they did before. So one of the challenges for the profession is how do we think about the world, and if this is the so-called reaction function of the U.S., whenever we have difficulty with country X, we put tariffs on, then we have to think about the way we kind of forecast growth and model behavior and things like that. It's a new world. It's a new world for us, too.
Global Chief Economist at S&P Global Ratings, Paul Grunwald, thank you very much for being here.
Well, coming up, Wall Street goes global, maybe going opposite the trend, why the NASDAQ CEO says it's in America's best interest to keep its doors open to international listings. Plus, LOL surprise, how the creator of toys like Bratz and Poopsie is making his company more friendly toward the environment. We've got some big movers for you in the drug industry in today's spotlight. On the upside, we've got Acadia Pharmaceuticals. Now, the company presented new data onto its antipsychotic treatment. Now, that treatment's already out there, but there are now potential new indications for dementia patients, and the results of a study that was related to them came in better than expected. The company says it could help expand the pool of patients who can be treated by this by 10
time. So you see why the stock is going up so much. On the flip side, we've got Sage. Now, Sage shares are plunging after its experimental treatment for a major depressive disorder failed to reach its primary target in a key study. The shares have fallen to a 2-year low because a lot of expectations were baked into this particular drug. So we'll keep monitoring Sage to see where they go from here. We'll be right back.
Some trivia for you. There are more than 60 international listings on the NASDAQ. Yahoo Finance's editor-in-chief had a chance to sit down with Adena Friedman, president and CEO of the NASDAQ, to discuss what's important and, to keep the doors open to international listings.
Yeah, well, we were talking about that and within the context of the trade war. And, there's been some talk, generally speaking, but also from the administration about ways to put pressure on the Chinese through our capital markets by restricting access to those markets as a way of trying to get our way with them when it comes to the trade war. Mark Cuban also weighed in on this. And I talked to Adena Friedman, who is the CEO of the NASDAQ, about that specific issue. Here's what she had to say.
In our opinion, it's in the U.S.'s interest to keep those doors open because there are other exchanges out there in the world that could also be the home to international listings. But for us to be the place where companies from all over the world, whether it's from China or Israel or Southeast Asia or Europe, for them to congregate here in the United States is in the U.S. economy's best interest in order to make sure that we stay that land of opportunity.
It's interesting. Everyone's for us standing up to China and being tough, but, leave my business alone. I mean, there's a little bit of that there. In other words, we should use sort of, the farmers as a way to get at them, not the exchanges here. I'm being a little cynical, but I can understand what she's saying. And I think the argument does make sense. I mean, if you're going to have a global exchange, it probably should be global. And, we've seen what happened with Alibaba's secondary offering just the past week or so when it listed in Hong Kong. It always wanted to do that. Couldn't because the Hong Kong exchange wouldn't allow dual classes of stock. They reformed. Now Baba's going there, and maybe other Chinese companies as well.
All right, so for the full interview with NASDAQ President and CEO Adena Friedman, be sure to tune into Yahoo Finance tonight, 5 p.m. right here on yahoofinance.com.
Well, this holiday season, many parents are concerned about the amount of plastic waste that's included in the packaging of toys. That's why the toy maker behind one of the hottest toys this season, LOL Surprise Dolls, is out with plans to use biodegradable plastic and paper starting next year. The CEO of MJ Entertainment is back with us, Isaac Larian. Thank you so much for being here. He's in Chatsworth, California. Isaac, part of the whole appeal.
Good morning, Julie.
Good morning. Part of the whole appeal of the LOL Surprise is all the packaging, right? It's that people unwrap the one piece and then everything else is sort of in its own packaging. So it makes sense to transform it. What is this going to do to the manufacturing process and to the cost of the thing to make things biodegradable?
Thank you, Julie. Yeah, as you know, LOL Surprise is the #1 selling toy again this year, and it's actually bigger than Disney Frozen 2. And every other product out there. And we as a toy company are responsible with dealing with children to make sure that we leave this planet better for my grandchildren, for other children in the future. So what we have done right now is all the wrapping that you see inside the doll is going to be paper starting next year. We are, as you mentioned, we are working on the biodegradable plastic, which is going to be more expensive, but that's okay. We are private, so our profit is going to be down a little bit. But in the big picture, I think it doesn't matter.
Isaac?
And thirdly, we have, yes.
I got to ask you real quick, because I think a lot of people applaud the steps you're taking environmentally, but you know toys, you know kids, and I'm watching the video. Last year, you had us with Poopsie, the unicorn with the slime, you know what. Is one of those dolls barfing? It's throwing up. One of those dolls is throwing up.
Spitting. I believe it's spitting.
What's going on there? And what,
Spitting.
I think it's genius. Kids love this kind of stuff, right?
Andy is spitting. It's spitting. It has 3 different surprises. Spitting, it's bubbling. So it has. Those are surprises that the kids love. I mean, this is a brand new one that we have now called the LOL Hair Vibes, where you can change all of her hairstyles over and over again. And so we have number 1 right now, the OMG, all the number 1 selling fashion. Again, there's a lot of fashion play with the product. So that's what the kids like. That's what the kids enjoy. And we will keep on doing it. We will keep the barriers, break the barriers, and keep on doing it.
Isaac, let's also talk about where the toys are sold, right? Because I know that you had made an attempt to sort of revive Toys R Us. It looks like it has now been revived, at least to some extent. So I'm curious what you think about that whole situation with now people, for example, in New Jersey being able to go to a Toys R Us.
I think it's a great effort for Richard Barry and Toys R Us to do that, but there is a long way to go to have Toys R Us the way Toys R Us was here. I still believe there is a void in the USA market for self-standing toy retailer, where the kids can go and interact with the product. And yes, there is two stores is the step in the right direction, but it would be much better if there was 400 or 500 stores.
Let me ask you about this. We know that Mattel is going to be picking up a page about creating content in movies, and I imagine, obviously, we'll see Mattel products in those movies. And then you got Baby Yoda, you know, from the Mandalorian series. What advice would you have? Is there any way you're going to be a part of the Baby Yoda? You know, I know Mattel and Hasbro are trying to get in with Disney, but where did they miss the ball because they didn't get ready to sell this thing in time for Christmas? And how do you get in on that?
Well, good question. First of all, I am a betting man. I bet you $100 that none of these movies that Mattel is talking about will ever come to the screen. I think that's a lot of smoke and mirrors. And as far as Baby Yoda is concerned and Star Wars and Frozen, we are staying away from that because, frankly, the only company who makes money on these licenses is Disney, and I applaud them. I'm a shareholder. I make money on that, but everybody else loses money on these licenses.
Isaac, could we see an LOL surprise movie or show at some point?
Yes, well, there was one, Julie, this year by Amazon. Amazon had a Winter Disco, LOL Winter Disco exclusive movie, which is doing fantastic on the Amazon Prime for them. And we have more coming, but we are not going to make just movies first. We're a toy company first, and if there are movies and entertainment that can go on and enhance the brand, so be it. We will do that. But we are not in the movie business. I don't know the movie industry. And, you know, when you look at Mattel, Yunnan, okay, was in the content business. He sold the Makers Studio to Disney for over $170 million. Where is Makers Studios now? They basically wrote it off. So
right.
That's a good thing that I'm not public because I can speak my mind and I don't have to spin it.
And we love you for it, Isaac. Isaac Larian, the CEO of MGA Entertainment. Great to see you as always.
Thank you, Julia. Have a happy holidays.
You as well. Thanks.
You could put some of his products in Terrence and Phillip from South Park. Oh. Do you know Terrence and Phillip?
Yes, I do. I remember.
Poopsie and the barfing kids from that we just saw, that would all fit in perfectly. Coming up, the SEC repealed its lifetime ban on hedge fund bad boy Steve Cohen last year, and now he's stepping up to the plate and buying the Mets. Plus, proof of purchase, the reason New York City lawmakers want to ban paper receipts.
A U.S. sailor shot and killed 2 civilian employees at Joint Base Pearl Harbor Hickman in Honolulu late yesterday. The Navy says the sailor then killed himself. A 3rd civilian was injured in that shooting and is listed in stable condition at an area hospital. Takata issued a new recall of 1.4 million airbags after discovering a new default in the manufacturing process. Those airbags were installed in cars that were built between 1995 and 2000. More than 40 million Takata airbags were recalled in the United States as part of a separate recall when a defect was discovered and linked to 29 deaths worldwide from defective Takata airbags. Hedge fund billionaire Steve Cohen is buying the New York Mets. The Wilpon family agreed to sell controlling interest in the team to Cohen for an undisclosed amount of money, and they'll do this over a 5-year period. Forbes valued the Mets at $2.3 billion. Cohen's firm SAC Capital Advisors pled guilty to insider trading a few years back, and they paid an almost $2 billion fine. New York City lawmakers are considering a proposal to ban paper receipts if the paper is coated with the chemical BPA. The proposed regulation would require stores to email receipts to customers. Scientific studies have raised concern that BPA can cause problems with human reproductive systems. The proposal would allow paper receipts if they're printed on chemical-free recycled paper. We'll be right back.
It's time for Word on the Street, where we check in with our panelists to find out what stories they are watching. Andy, you and I both watching this story closely. Mark Weissman of BlackRock is out after disclosing a consensual relationship with a colleague.
Yeah, Mark Weissman's kind of a high-profile person on Wall Street that maybe you never heard of, paradoxically. I mean, he's a big deal. He ran the Canadian Investment Pension Plan Board, which is one of the giant pension plans in Canada, and his wife actually worked for BlackRock, was the head of Canada for BlackRock, so they were sort of a power couple.
She still works there, I believe.
That's correct. And then he was hired by BlackRock and was seen by some as an heir apparent to Larry Fink, and then just stepped down because he acknowledged having a relationship with apparently a subordinate at the firm, and Larry Fink said that's not tolerated and was dismissed. So it's an interesting story just on its own merits, but then also when you consider BlackRock and Larry Fink, and I don't think he's going anywhere anytime soon, but it does run $7 trillion, and he was a top guy there. And it's interesting that people continue to trip up at work too, I guess.
Real quick, human nature is human nature. We've seen this play out in different companies. Is it the right thing to require the dispatch of the individuals, or is there a better way
what
to
if the person was in another department?
There's a very simple answer, which speaks to what you just said. It's a case-by-case, very specific thing. You know, if the person wasn't married, if this person's not married, if you didn't supervise the person, everything has to be looked at on an individual basis.
There's some very talented people who these companies lose. I mean.
Right, but we don't know all the circumstances.
We don't know the circumstances.
That's what you have to leave it at
there. The
there.
thing is, you probably can't then go be the CEO of the company if this is in your, you know?
Right.
Like, you could be a mid-level person, and you could probably find ways to move departments, but you can't be the CEO and have this kind of stuff.
Well, maybe, I mean, again, you don't know. I mean, maybe he gave this person a raise last week. I mean, I'm sure he didn't, but I don't know.
Yeah.
But again, you know.
Let's talk about a $2 billion fine. It was $1.8 billion.
Yeah.
Steve
Speaking of people in finance, everyone knows.
And he was banned for life, but then the SEC last year said, no, you can manage people's money again.
Yeah.
But he had taken his his wealth's like $14 billion. He'd taken it all private, but now he's back in business.
Well, I mean, I think I look at...
he's more than back in business.
Buying the Mets.
So over the next 5 years, Steve Cohen will buy 80% of the Mets, and the Wilpons will eventually be gone, which I think a lot of Mets fans will be happy about. They haven't been thrilled with the Wilpon ownership. Of course, Andy, we discussed this yesterday. The Wilpons really caught up in the Madoff scandal and never really recovered from that. But I'm thinking about, the guys like Stevie Cohen. David Tepper owns the Carolina Panthers, and he took Appaloosa to a family office structure. And there's a lot of these wealthy hedge fund guys out there, and it seems like buying a sports team and then trying to do hedge fundy things with the sports team is where this is going, right? David Tepper fires his coach this week and says, we want a hard reset with the Panthers. What do the Mets look like in 5 years when Stevie Cohen can bring in whoever he wants to bring in to make the Mets more Metsy? I mean, the Astros are basically the McKinsey of baseball, and they've won a championship and been to another World Series. So just very interesting things as the business world tries to find more ego plays, and those are in those.
What are the Mets players going to start smashing their cell phones and throwing them out when somebody? That was what the Capital.
Right. Yeah. I don't know if they'll end up cheating, but. Yeah.
Well, I bet they'll have some nice art hanging in the clubhouse.
That's right. Yeah.
If he's borrowing from
Damien
his collection.
Hirst, right?
Yeah, exactly. All right. Thanks so much, guys. Miles, Andy, thank you so much for being here. And coming up, SpaceX set to launch a rocket from Cape Canaveral, Florida. We've got a live picture here of the launch site with a nice eagle or hawk flying in the foreground. The rocket is delivering mice and beer, among other things, to the International Space Station
like an
today.
apartment
the
in New York.
essentials. The launch was originally planned for yesterday,
all you
but
need.
it was rescheduled for this afternoon, so we'll be watching it. Plus, before we go to break, let's take a quick look at some of the biggest losers in the Dow today. As we see the Dow overall, little change. 3M is falling.
All right, it is 12:03 in New York City, 2.5 hours into the trading day. Stocks are still trading down. We're watching that for you, but also take a look what's happening with the 10-year Treasury yield. The Treasury yield right now is going higher. It's at 1.8%. Impeachment takes another turn. We're going to speak with Commerce Secretary Wilbur Ross about the latest drama surrounding President Trump. Another top executive is out. What's next for United as CEO Oscar Munoz announces plans to step aside next year? And Huawei fights back. The Chinese company sues the FCC over its, quote, unconstitutional ban.
Welcome to On the Move. I'm Adam Shapiro.
And I'm Julie Hyman. Thanks for joining us. Let's get to our top story today. House Speaker Nancy Pelosi said Democrats will proceed with drawing up articles of impeachment against President Trump. It's their next big effort to remove the president from office. The House could vote on impeachment as early as December 12th. Pelosi spoke about the decision to move forward this morning.
The facts are uncontested. The president abused his power for his own personal political benefit at the expense of our national security by withholding military aid and crucial Oval Office meeting in exchange for an announcement of an investigation into his political rival.
Let's introduce this hour's panel to discuss. Yahoo Finance's Akiko Fujita and Dan Roberts are both with us here. As Nancy Pelosi, this whole process has been somewhat swift, Dan, that they're now moving to.
I guess compared to other processes that we've watched play out, it hasn't really had much.
Or perhaps compared to the
Mueller.
Well,
I was talking about the Clinton
Yeah.
impeachment.
Or I was going back further than that,
Watergate.
Nixon, right?
Sure. It hasn't had much of an impact on stocks.
No.
So in terms of the Yahoo Finance angle in markets, almost surprisingly so. I think people have kind of shrugged it off. Traders have shrugged it off. It's really more about trade and the economy, but it is something to watch. And obviously, everything going on here with the impeachment inquiry and everything happening in D.C., it's sort of hard to separate it from trade talks in a sense because it's all got the same person at the center of the drama.
Before we keep talking about this, Wilbur Ross, the Commerce Secretary, actually sat down with Yahoo Finance's Bill Marcellus, and he said the Democrats should not waste their time on impeachment.
It's a silly diversion of time and effort. Congress would do a lot better to pass USMCA, the wonderful new treaty with Canada and Mexico. That will bring $30 billion of new capital investment. It'll bring 176,000 new jobs. That's what they should be focusing on, not a witch hunt.
Akiko, the wonderful new treaty, it sounds like an old 1970s ad. New and improved NAFTA, but legitimately, Congress does have to act on this.
Well, can they walk and chew gum at the same time? Can't they do both things?
Well, we think they can, right? I mean, not surprising that Wilbur Ross says that. I mean, he works for this administration, for the president who is now going to be up for a vote likely on impeachment. I mean, the USMCA, I think it's going to be interesting to see how that kind of factors into where the market move is, because I think even though we've been focused on the China trade issue, there are so many sort of trade landmines that are popping up, right? We think about what's happening over in Europe. We heard this week that the president may be picking a fight with Argentina or Brazil on steel. So I think the faster that USMCA is resolved from a market's perspective, that's a positive.
It is interesting, though, that even with all of this, we're still near record high. So you wonder, it seems as though USMCA happening is already priced into the market.
Yeah, I think you could argue that's pretty much priced in. I have been of the mind, looking at where the markets are, that I think I have to wonder if there's a level of complacency that's kicking in, especially on the China trade issue. There are so many risks that still exists, and it's not about a phase one deal. I mean, if you look at where things are headed between these two countries, there is a decoupling that's happening, and I do wonder how much of that has actually been factored in investors' minds as they look to see where these two countries are headed.
Right. There's no reason for things to be this good in stocks right now, and yet I think the consensus is that these other geopolitical issues.
Well, we just had the guest on last hour who said, look, we're going to have 2% growth in the United States next year.
And globally, I think people
fundamentally,
glass
you've
half
just
full or
said,
half empty.
Well, that's why you have a market, and that's why you have a market.
Still 2%. All right, let's get to what's going on with stocks. Shares of the fashion retailer Express are surging after the company reported third quarter results. Inez Ferre has the details from the floor of the New York Stock Exchange. Inez.
Julie, listening on the conference call earlier this morning, executives said that their performance was driven by better control of their inventory and changes with the layout in their stores. Same-store sales were down 5%, but that's still better than what the street had been expecting, and revenue came in above estimates. Remember that this company has a relatively new CEO, Tim Baxter, who started just 6 months ago. Also moving in the opposite direction on the downside is Michaels. This is the arts and crafts company company under pressure after a disappointing quarter with a drop in comparable sales of 2.2%, giving also weak fourth quarter guidance because of the shorter holiday and the liquidation with AC Moore. And then a leadership transition at United with CEO Oscar Munoz handing over the CEO reins to President Scott Kirby in May of 2020. This is a move that was expected within the industry. Munoz had brought in Kirby 3 years ago from American.
Inez, thank you. Huawei filed a fresh legal challenge against the U.S. The company is asking a U.S. court to overturn a decision by the FCC that bans carriers from using federal funds to purchase equipment from Huawei. Akiko, you're the expert on this. It's been filed. What's going to happen?
Yeah, I mean, I think for Huawei, this is more about reputation management, you know, because if you think about what exactly is being claimed here, they're saying that Huawei did not get the required due process protection, essentially, that they were singled out as a national security concern. Now, I had a chance to speak with some of their legal team yesterday who said, look, we just didn't even have a chance to respond to some of these claims. There's a number of arguments that are in the actual legal document, but at the end of the day, it's not a big business for Huawei. When you look at how much they sell to rural carriers, it's a tiny portion. But I think within the company, the concern is that this could create a precedent for what could happen outside of the U.S. once they are deemed a national security concern.
Is there any sign that that is going to happen? Has there been any, have they started, I know that the U.S. has put pressure on other countries to cut off relationships, business relationships. Has that started to happen?
I mean, aside from Australia and those like Japan, we just haven't seen the U.S. pressure amount to something. What we've seen more of is a place like what a lot of European countries are doing, which is essentially to say, we're still going to use the equipment, just not in critical infrastructure, things that have to do with the military and other national security issues.
Yeah, I think it's about optics. You're right. I think that's why they sort of have to take this step, just so that it doesn't look like they're shrugging it off. But you make a good point about the size of Huawei's U.S. business. I think it's about sending a message to other countries where Huawei either does business or would like to do business to try to say that what the U.S. is saying about our company and our security is wrong. But I don't know what will really come of it. It is interesting how Huawei has become a real central core part of the ongoing trade talks. I mean, remember at first when Trump went against Huawei, and before Huawei was the other, not HTC, what's the other
ZTE.
ZTE, thank
Which
you.
is also singled out in the FCC ruling.
Right, but now it has really shifted to Huawei. But remember at the beginning of all that, people said, well, that's kind of a separate story. That's like over here. Not anymore, really. I mean, I think Huawei has become kind of mixed up in all the trade talks. You can't really separate those issues.
And what we heard from the chief legal officer yesterday is kind of the argument that Huawei has been making, which is if you're really concerned about equipment that's made in China, what about Nokia? What about Ericsson? They have factories there.
Pick your example, yeah.
You know, and then that's part of the argument that they're making. Now,
what response have we gotten a response from the U.S. government to those kinds of charges from Huawei?
No, I mean, they have said that it's a national security concern, right? They're talking about a particular Chinese company. I will point out, though, Alexis Keenan, who covers a lot of our legal issues, has said that, look, this has already been decided in the appellate courts, which is to say that Congress, as well as these federal agencies, do have wide latitude to determine what federal funds can be used for. And if a company is deemed a national security concern, they can say, you just can't do business with these companies.
All right, well, we got to move on to what's going on with oil and with Saudi Aramco, which is priced on the high end. The company, which is forecast to be the world's largest IPO, priced its shares at 32 Saudi riyals. That equals about $8.53 and has raised $25.6 billion from the IPO with that pricing. The valuation then expected at $1.7 trillion. All of this, by the way, according to Reuters. Joining us now for more on this is Sierra Constellation Partners Managing Director Basil Karampoulos. Thank you for coming in. And I should mention the backdrop for all of this is that an OPEC meeting is going on as well. So obviously a lot happening in the oil patch at the moment. But let's focus on Saudi Aramco's pricing for a moment. What does that $32, or I should say 32 rial pricing tell you about demand for Aramco?
You know, there's an old Greek saying that clever people and merchants weigh everything. And I think the Saudis are, fit both counts. This deal is being done at what the Saudis believe to be the right time, meaning I don't think they believe prices are going to be up next year. And so they're basically taking this opportunity to essentially export equity instead of barrels of oil. And that has some significant implications, I think, for the year ahead in terms of oil prices.
Well, what are the implications for investors who buy other oil companies, whether it be Exxon or Chevron? Are there implications for this? I would imagine there are.
Absolutely. I think, one of the things that I think there's a real risk of right now is that the Saudis are using this first tranche of the IPO as a test market to see what kind of appetite there is for their equity. And if they see that they can raise capital doing this, they have an opportunity then to build up a war chest, which would allow them to go out and try to take market share away from what they believe to be weakened U.S. domestic producers. And that will have significant effects for the likes of not only the majors, but the large independent oil and gas companies that we have here in the U.S.
Is that right, that the thinking that the U.S. producers are weakening? Because what you hear on the other hand is that with kind of the influence of OPEC falling, that the U.S. is becoming much more of a power in this.
They're becoming a power, but the question is whether they have pricing power. And I think right now, from the assignments I'm working on, which span the gamut of refining to oil field services to oil and gas exploration and production, we're seeing a lot of weakness in the sector. And what's happened, interestingly, in the last few weeks is that weakness has even spilled over into the Permian Basin, which has kind of been the last bastion of strong performance. So I think it's a really interesting time, and we really are going to have to tread cautiously here in the U.S.
I mean, I'm curious, though, when you talk about the demand, the take-up outside of the region hasn't been good for this IPO. I mean, what does that say about how investors see the future of Aramco, given sort of where oil demand is headed? I mean, they had to cancel some of the roadshows, right? In New York as well as London. That seems to suggest that this grand vision they had when they started floating the idea several years ago just isn't there.
I think a lot of it has to do with the transparency and the type of disclosure that they're making relative to other companies in the space. And I think they have an opportunity to use this as a way to titrate what type of transparency they're going to have in the future. They will get multiple bites at the apple. And so I think they're going to do this in an incremental, measured way.
I also want to push back a little bit further or get you to explore a little bit further this idea that they'll use this war chest to compete better with U.S. producers. Given the current protectionist environment of the U.S., how far is the U.S., even under a different administration, because we've heard a lot of the Democratic candidates still express some of those protectionist policies, how far will the U.S. let them go with that?
Well, you don't have,
or is that an investment risk, I should ask?
I think right now what you've got is a situation where the oil markets, unlike the natural gas markets, are truly a global market. And so the supply and demand dynamics are global. And what that means is you've got a situation where if the Saudis want to capture market share, they have the ability to not only sell here to the U.S., but to sell elsewhere at lower prices. And even if they're not selling to the U.S. at a lower price, if they're pushing prices down globally elsewhere, that's going to spill over to the U.S. The markets are going to adjust.
All right, Basil Karampoulos, thank you very much for joining us, and you're joining us from Sierra Constellation Partners. Come back.
Thank you. Happy holidays, everyone.
Thanks.
Coming up, from Hong Kong to Chile, there has been plenty of civil unrest across the globe this year, but is it hurting your portfolio? There are ways you can protect yourself, and we're going to talk about them just ahead. Plus, take a look at some of today's trending tickers on Yahoo Finance. Look at that, Slack. Slack's trading up. We're awaiting news from them after the bell.
Welcome back to On the Move. I'm Jared Blickery. We got all three major indices in the red. Russell 2000's in the green, but nothing is moving that much. The Dow is just barely down 13 basis points. S&P 500 down 6. NASDAQ down 7. We'll look at the price action, but again, not much has happened. not only over the last hour, but the entire day. So this is today. We can see we're in the green, dipped a little bit into the red, and just kind of oscillating just a few points off of the Unch line, which is a dotted yellow close from yesterday. And let's take a look at the 10-year T-note yield, because that is up again 2 basis points, was up a little bit more, up about 3 basis points earlier. Financials catching a bid from this. Also looking at the U.S. dollar index. This is the 6th day of dollar declines, and let's take a 1-year look at the candlestick chart, because we have a trend in place here, and it has been slowly sloping to the upside. And notice that we are at the bottom end of this trend channel. Every time we've hit it in the past, a lot of people calling for a sell-off in the U.S. dollar, a break of it, just hasn't happened. Instead, it just rallies to the upper end. Nevertheless, we are at that critical juncture, so we are going to keep watching it. Gold futures are up just marginally. Not a bad situation here for gold. We've held support at 1450, trying to get that next catalyst higher, but with 10-year T-note yield, interest rates rising, hard for gold to catch a bid. Now we'll take a look at the NASDAQ 100 heat map, and we see Apple is up nearly 1%, while Amazon is down nearly 1%. And if we sort this by price action today, the returns, we can see Biogen is up 3.5%. This has been a very volatile stock, not only year to date, this is a year to date chart, but also today. They had some news on their Alzheimer drug, didn't exactly go as expected with their latest trial or their examination of the trial, and it had been down. We'll look at the price action, and then it was up. So good for Biogen. We're going to be right back in 1 minute.
Well, with civil disobedience in places like Hong Kong and Chile, our next guest says it's time to investors for them to reconsider taking defensive moves in their portfolios. Western asset product specialist Robert Abad joins us now to talk more about this. So, Robert, I feel like investors in the U.S. have been sort of watching the news flow out of places like Hong Kong and Chile, but haven't necessarily been making investment decisions based on it, right? It seems sort of far away. Why would that not be the case?
Well, I think that people are still seeing it as an isolated event here or there. For example, if you look at the headlines, they might look, for example, at Venezuela and say, okay, you know what, that crisis has been brewing for some time. Or they're looking at Argentina and saying, okay, you know what, that crisis has been brewing for some time. But if you step back for a moment, what they should understand is that there are about 7 out of 12 South American countries that are experiencing some kind of duress at this point, whether it's social or political. And the last time we saw that kind of wildfire in terms of social unrest was back in 2012 with the Arab Spring, where we had a number of countries in the Arab world experiencing the kind of things we're seeing today. So I think it's just a matter of time before people really start to connect some dots and, you know, really recognize that social unrest in Latin America isn't necessarily related to just the emerging markets, that we do have concerns in Hong Kong, as you know, as you pointed out, that we have concerns in the UK, that we even have concerns even in the US concerning impeachment. So social risk is something that is global. And it's just one more thing on that, almost like that yield curve of risks out there on top of trade risks, on top of what else is happening with, you know, economic concerns around the world.
All right, so Robert, you making me a little anxious. So what do we do about it as investors?
Well, you know, at the end of the day, diversification is your friend, right? You know, you step back for a moment, people have been concerned about, you know, negative rates. They've been concerned about the global growth outlook. You know, maybe there have been idiosyncratic concerns about different pockets in fixed income, like high yield or investment grade. And that's all warranted. But you need to step back and consider that, there are going to be golden nuggets in each asset class. So the name of the game here is diversification. You want to have a portfolio where you have, different exposures to different parts of the market where you see value. And I think, when you have periods of fear and some of that fear becomes a bit excessive, and you see prices on securities move away from what, one could argue could be fair value, those are investment opportunities. But I think that the biggest struggle for investors is to decide which asset class to be in. So better at this point in an uncertain time to have a very diversified, let's say, multi-asset class portfolio.
Robert, Dan Roberts here. Thanks for coming on. As we parse through the headlines every day about trade and out of D.C., obviously we keep debating and discussing just how much it is affecting stocks day to day and whether it should be to that extent. And obviously stocks have been whipsawing based on trade headlines, and yet we also have the impeachment proceedings going on, and the markets have appeared to shrug all that off. I mean, as we look toward the next year, how much do you expect what happens in D.C., not just with the election, but with trade and with China, to keep affecting stocks? And should we be comforted by the fact that we're seeing these all-time highs, even when there are all these issues overhanging things?
Well, there are reasons for optimism, and I think that's the main message here. There is concern about trade war risk. There's concern about social strife. There's concern about valuations. But if we step back for a moment and look at the global picture, I mean, we're starting to see green shoots in Europe. That's been an area of concern for some time for investors. The U.S. growth story isn't, deteriorating in a market way, in a markedly, or let's say in an aggressive manner, right? People are starting to pull back from this view that we're not going into a recession. And we still have China moving, at least, in some kind of like stable trajectory. So the global growth picture really isn't as pessimistic as perhaps we may have argued about a year ago. Now we're seeing green shoots, and that backdrop is very supportive for not just stocks, but it's supportive for credit. I think that's been the big issue in the past, that, perhaps we're seeing some kind of deterioration in key parts of the global economy. And then what does that mean for valuations? What does that mean for fundamentals within certain sectors? But net, when you have a backdrop that's very benign, and you've got inflation that's pretty moderate, and you've got central banks really in accommodative mode, and you've got some governments even discussing the possibility of introducing fiscal stimulus, as we saw more recently overnight with Japan announcing a very large fiscal stimulus package, that presents a backdrop that's supportive for financial markets.
Robert, thank you very much for joining us. As we leave this decade and transition into the 2020s, Yahoo Finance's Crystal Hu is taking a look back at some of the biggest deals and the deals that failed to close. Crystal, tell us first what's on the list.
Yeah, so there are some deals that you're probably very familiar with. Verizon, our parent company, bought 45% of the stake from Vodafone that the company used to own Verizon Wireless since 1990, and that was a $130 billion deal, one of the largest deal in history. And also there are mergers like Kraft and Heinz, which creates a big food and beverage company. And then we also looked at the failed deals in the past decade. Among them, one of the notable ones is Broadcom and Qualcomm. That deal has been spread over years, and then Broadcom finally withdrew it last year after President Trump blocked it.
What I find most fascinating, too, is not just the deals that were canceled, but those that happened that maybe shouldn't have. I mean, if you talk about Kraft Heinz now, the company's not been doing that hot, right? So that's always interesting to me as well, looking back over the decade of the huge deals that happened. I think that the AOL Time Warner one is the classic example, but there are always some that maybe should have been left well enough alone.
You're right, Julie. So it's really hard to judge whether a deal was successful or not. It also depends on from what point of view you're looking or what time frame you're looking at, right? Whether it's within 5 years or within 10 years. But the trend in M&A activities in general, though, is that we're seeing much more deals and much more mega deals in the last decade than the decade before. Mega deals is defined as deals that's over $5 billion deal size. And I think from the decade to 2000, 2010, on average every year you see about 70 mega deals, but now you see over 90 in the past decade, and that means that we have fewer companies and there are more consolidation going on.
You know what I think is kind of interesting when you look at sort of how M&A deals have been shaping up and where we're going in the future. It seems like increasingly it's going to be a tougher environment for multinational companies because the approval doesn't just need to be here in the U.S., but it needs to be abroad. And we've seen countries like China sort of use that as a weapon or leverage, if you will.
Yeah, totally. So the last I talked to some deal makers, and in the first decade of the 21st century, the only two regulators they need to pay attention to is the US and the EU. And the EU have more like antitrust laws that they need to pay attention to. But then China come into play, and China starting to use more its power in regulating multinationals, and sometimes that's complicated by national security risks and the geopolitical risks. So we see the example in Qualcomm wants to bid for NXP that got approval elsewhere, but then China decided to ban it. So that deal never happened.
All right, Crystal, thank you very much.
Thank you.
All right, coming up, that shade of blush may have a different foundation than you think. We'll speak to the CEO of Beautycounter about her mission to warn consumers about the harmful ingredients in some of their favorite brands. And that's the SpaceX rocket. Look, there it goes. It is just launched. Again, taking mice and beer to the International Space Station. Dan Roberts looking at me like I'm crazy, but it's true, Dan Roberts. And there it goes, the SpaceX rocket heading up to the International Space Station. This is a live picture of its takeoff.
$12:32 in New York City, 3 hours into the trading day. Stocks are trading down. We're going to be talking about that in a second to see what's actually driving the markets a little bit further into the negative zone. Also, gold right now. Gold is trading higher. It's $1,484 an ounce. Done deal. CBS and Viacom have officially merged. We'll break down what that means for the sector. Plus, the stage to the small screen. Actor Billy Porter joins us to discuss his long road to stardom. And new perk at 30,000 feet, edible coffee cups? The airline that's offering the new snack ahead. Welcome to On the Move. I'm Adam Shapiro.
And I'm Julie Hyman. Thanks for sticking with us. We want to show you some live pictures once again of that SpaceX launch rocket from Cape Canaveral, Florida. The rocket delivering mice and beer, among other things, to the International Space Station today. The launch was actually originally planned for yesterday, but it was rescheduled for today. And you see there, it looks like it is zipping along there as we see the footage of it after its takeoff. Well, switching gears, the $90 billion beauty business in the U.S. is one that goes largely unregulated, meaning all those ingredients in foundation, blush, lipstick, lotions for that matter, are not subject to stringent federal testing. But the House Energy and Commerce Committee Subcommittee on Health held a hearing this week on reforming the cosmetics business, and Greg Renfrew, founder and CEO of Beautycounter, which is a company that has led the charge for safer cosmetics, testified at that hearing. Greg, thank you so much for being here.
Thank you for having me.
When you're talking about sort of natural beauty or clean beauty, none of these things really mean anything beyond what various brands say they mean, because there aren't these federal standards. So what was your message to Congress on this front?
Our message to Congress was it is time to act. We have not updated a major federal law regulating the cosmetics industry since 1938. The FDA has no ability to screen ingredients for safety before products are put on the shelves. They are not able to recall products when there are known things are harmful to health, and they are not regulating what claims are being made on the labels of the products that we're all using every single day.
So there's no standard for organic, or what is the actual
Those are
term?
meaning
Organic or natural? What is that? Yeah.
So when someone says, I mean, it may be natural, but for an example, there was a study done a couple of years ago where they tested 38 aloe-based products across drugstores and department stores, and not a single one of them had any aloe in them at all.
Why is this way? Especially since it hasn't changed since 1932. I mean, women have been wearing makeup in the intervening years.
I also wonder how much of the fact that it's now being raised is the market dictating that consumers are a lot more conscious about organic products and things that are not tested in animals.
When I started Beautycounter, we were the first company to really pioneer the clean beauty movement, and I saw an opportunity to bring products into the market that were both high-performing and significantly safer for health. And I had learned that the EU had banned or restricted 1,400 chemicals. The United States, at the time when we launched in March of 13, had only banned 11. Now we're up to a whopping 30. And so what's happened, I think, over the number of years is that there was a brief moment in time where we were had legislation that was comprehensive and kept us safe, but we've introduced over 85,000 chemicals into commerce since then, and no one has really done anything about it.
But your products, you actually will not use, it's 1,800 chemicals that other manufacturers might be using.
We really decided the first step was to create a restricted list, which we called the Never List, and for us that's 1,800. We looked at the 1,400 that had been banned or restricted by the EU, and then we've added a couple hundred more that are linked to cancer, reproductive toxicity, neurotoxicity. We're trying to keep people safe, and we're also trying to give them products that they love.
Now, I know you're a private company, but I'm curious what your growth has been like. And also, there are a lot of other entrants in the category right now that have been growing as well.
We are a private company, and we're a B Corp, so we are really growing quickly, as many B Corps are, because we're a company that's mission-based, that puts into emphasis people and planet and profits. We have enjoyed explosive growth, as has our industry. I mean, I think the clean beauty industry is slated to be about $22 billion in revenue by 2024. And, you know, we always set out to get safer products into the hands of everyone and to lead the industry to a better place. And we are thrilled to see so many other companies joining forces with us to move the market in the right direction.
How much of that growth do you think is driven by e-commerce as well? You know, I think about just sort of the makeup industry years ago. A lot of it was just sort of the big name counters, and now increasingly you can read some of the blogs that bring up names that maybe are not as big. Do you think you've benefited on the back of that?
I think we've benefited because we were the first to take true leadership position in clean. I think having built a direct-to-consumer model that's powered by people, both on and offline, has made us successful. I do think that the traditional ways of distributing products through department stores and specialty stores is waning, and I think that consumers are trying to build direct relationships, whether it's with a blogger, whether it's an individual consultant who's selling the products, or, you know, just having a relationship with you online.
How hopeful are you that Congress is going to act on this?
I'm hopeful. I think that there is bipartisan support for cosmetic reform. I think that there are I think it was clear in yesterday's hearing that the FDA is inadequately resourced, that everyone agrees that they are not protecting consumers, and most consumers think that they are, and they're not. So just people should know it's not like the food industry, it's the wild, wild west. And when the FDA spoke, they agreed to that. I think where we need to do a little bit of work are, you know, on things like state preemption, or who has the final say. Is it the federal government or states like California that have taken things into their hands?
Greg, thanks for being here. Greg
Thank you for
Renfrew
having
is
me.
founder and CEO of Beautycounter.
Thanks so much.
Billy Porter partnered with PayPal this holiday season. The award-winning actor and activist joined PayPal as a part of their Giving Tuesday initiative to give back. So we had the chance to sit down with Billy Porter, and I should mention that I am a very big fan of his.
Well, I believe that when we give,
it's the spirit that makes the world a better place. I grew up in the church, and that was one of the first sort of morals that they taught us from the moment I can comprehend thought. That's what I've always known. It was always about giving back. It was always about giving more than receiving. And so it's a part of who I am. It's a part of my DNA. And I'm very, very thrilled that PayPal chose me.
You have given to me, you've made me laugh, you've made me cry twice. You made me cry in Kinky Boots, the reconciliation with your dad, and your Tony Award acceptance speech. I actually wrote down what you wrote about your mom when you said your willingness to embrace that which you don't understand with unconditional love is a template that the world could benefit from employing. You don't hear many people talk that way anymore. And I was so moved at, what was it, 2013 when you first said that when they told me I got to meet you.
You're getting ready to make me cry. You ain't supposed to be making me cry this morning.
So the team knows that I'm a big fan of certain people, and you're one of them, and I jumped at this. But we don't talk this way with one another. I mean, we talk about giving and the financial giving, but what you said in 2013, that's the essence of this message, isn't it?
Yes, it is. And it's the essence of, for me, it's the essence of life. We as human beings have to remember that everyone on the planet is a human being. Mm-hmm. And everybody deserves to be respected as such. That's it. We can have our differences. We can agree to disagree. I think the greatest gift of being an artist is that, you discover early observation. And observation reminds us that every single day is another day to learn something new. And the more that we open up ourselves to learn something new, the better off we are spiritually and mentally, and the better we are and the more we have to give and to contribute to humanity. So actors, and for that matter, people who work in television news, there's constant rejection. How do you keep picking yourself up? I watched an interview you did a few years back with CBS where you talked about some of the downs and the low points in your life and then how you picked yourself up. Part of what you point out is that nobody does it alone, but how do you keep going forward? People ask me that question all the time. I don't have a choice. There wasn't a choice in the matter for me. There's never been a choice in the matter for me. But I also have an inspiration, a huge inspiration in my mother who, has been disabled her whole life. And, it's degenerative. And when you live around something like that, I lived with her. I watched her body deteriorate over the years. And, and I watched her as her body deteriorated. She showed up for her life more and more and more and more. Mm-hmm. And I just, I always think of her because it's like, if she can do it, I have the full activity of my limbs. I have no excuses and I have no complaint. Well, just do it.
What's the advice you have for, youngsters who might get to see this about doing what you've done with your life, chasing your dreams?
You just have to show up. It's not easy. It's a daily fight. Put one foot in front of the other every day. Take the time limit off. Take the need for outside validation away and do the work. It's about the work. Find the work and do the work.
Coming up, from hedge fund billionaire to Mr. Met, Steve Cohen reportedly is in talks to take his talents to Citi Field. The details on the possible sale just ahead. Plus, take a look at how cryptocurrencies are doing right now.
Let's take a look at some trending tickers from YahooFinance.com. We start with Kroger, the big grocery store chain. That company's earnings and sales missed estimates, even as comp sales rose by 2.5%. Kroger has struggled in a more competitive grocery environment, particularly with getting its online strategy right. We are also watching shares of Slack. They've been bouncing all over the place, and I wanted to take another look at them because earlier when we checked them, they were little changed. Now they're up by 3%. That company said its loss was narrower than estimates. Revenue beat estimates, rising by 60%. There are some concerns on the part of investors about potential future losses, but the share is doing a little bit better right now. And then we've got RH, aka Restoration Hardware, earnings and sales, earnings beating, sales matching estimates. And the company raised its forecast of the shares bouncing in a big way. They're up by about 11%. You can see the year has been kind of all over the place, although it's resulted by now in a 90% gain for RH. And if you're following today's trending tickers, make sure you're watching the ticker. It's right here at 2 p.m. on Yahoo Finance.
Reunited, and it feels so good. CBS and Viacom complete their merger. They did that yesterday. The entertainment empire built by Sumner Redstone split apart 13 years ago, but is once again one company. The deal combines CBS, CBS News, and the Showtime cable networks with MTV Networks, Nickelodeon, Comedy Central, and the Paramount Movie Studios. So, where does this officially merged company stand in the media landscape? And let's talk about streaming. That's really what it's about.
Well, they got a lot of old stuff that...
they got a library.
What can you make out of that? I mean, we discussed this with Discovery, too, after its acquisition of Scripps. You know, all these giants are thinking, do we throw our hat into the now comically overcrowded streaming landscape? I mean, everyone will tell you, based on whatever report or survey they've done, that we're still at a time when the average American TV viewer is still willing, if they like the content, to add subs, which seems crazy, but that's where we are. But any minute now, that pendulum will switch and turn to the other side, and people will start to say, too many. So I think we might see some of these media giants say, you know what? We're actually not going to launch another kitchen sink all-in OTT product, but we'll see. CBS and Viacom would like to take on Disney, and in some ways, it's a very fair comparison to compare CBS plus Viacom to Disney plus Fox. But man, there's just too many of these things at the moment.
I don't think that's a fair comparison when you look at the kind of content that's there, right? I mean, if anything, this is just kind of out of necessity. Isn't it? I mean, don't you have to have that consolidation?
Combined to stay alive, sure.
And you know, you look at CBS Viacom, what that market cap is, it still pales in comparison to a Disney or a Netflix.
Well, and I love how Dan says, oh, they've got the old stuff. Well, Disney has the old stuff too.
And that old stuff,
but it's still, they keep cranking it out.
Well,
Yes,
hold on
exactly.
a second. So they're already streaming. There is the CBSN.
Yep.
And it's that old stuff.
All access.
And that old stuff. Okay, Disney's got Star Wars. CBS has Star Trek. And they, you know, that is a franchise that gets recreated and split apart. And there's a Star Trek streaming now. I'm not watching it. I am a geek.
The appeal is not as broad, though.
Star Trek, not where Star Wars is, but sure.
But you've also said before, right? It just takes one big show.
Yes, I have said
to
that.
really sort of break the door open. And so if that consolidation could lead to some kind of sort of strategic initiative to sort of go for a younger audience, I mean, maybe that works. That's a long-term project.
Speaking of younger audiences, Apple apparently has now paid Billie Eilish, or is going to pay Billie Eilish, $25 million to make a documentary about her. And obviously that's a play for younger viewers. Dan is looking pained at this.
I don't want to talk about that. I don't know. But it's just fine. We can sort of take that into account with the conversation. But I just want to respond to one thing, which is if you're CBS Viacom, I mean, there is a question for them now. They've got CBS All Access, which they've got shows that are only on that. You know, Jordan Peele's Twilight Zone, which some people have said is good, and yet people aren't subscribing to CBS All Access just to watch that. So do you take all this great content, well, I don't know if it's all great, but some from these, you know, Paramount, Comedy Central, the channels they're getting from Viacom, and throw that onto CBS All Access, and now you just say, well, the whole kitchen sink is there, and if there's any of that stuff you like, well, come to CBS All Access. Or do you split it up a little bit, or do you do a separate app for each one of these channels?
Or do you do licensing agreements?
None of that
with
is that appealing.
Maybe what's going to happen is you're going to see licensing agreements with some of the platform distributors. You know, I mean, that's what Viacom was, essentially.
All right, coming up, a first-class snack. One airline is looking to cut down on waste by making its coffee cups edible. Plus, take a look at some of today's winners on Wall Street.
So let's take a look at the top trending stories on Yahoo Finance right now. Elizabeth Warren drafting a bill that will ask regulators to review 2 decades of mega mergers. It will also ban similar deals in the future. This comes after Warren's staff proposed anti-monopoly legislation to check the power of big tech. Tesla and SpaceX CEO Elon Musk, worth $20 billion, yet he said he didn't have much cash. This was in his testimony before a federal jury in Los Angeles. It's over calling that British cave explorer a pedo guy during a tweet back in 2018. Musk's testimony lasted roughly 2 days. An unlikely partnership. Ford is recycling old coffee waste from McDonald's to make car parts. The food waste will be engineered into bioplastics to make parts for 20 to 25% lighter, which means less petroleum used and lower carbon dioxide emissions. This, of course, after Ford, Volkswagen, Honda, and BMW reached a deal with California to increase fuel economy and reduce emissions from their new vehicle fleets through 2026. We're going to be right back.
It's time for our Buzzer Beat Around. 3 stories, 1 minute each. We're going to start with the Mets deal. Hedge fund billionaire Steve Cohen is reportedly in talks to purchase a majority stake in the New York Mets Major League Baseball team. Deal has not been completed. Cohen awaits approval from Major League Baseball owners. The team was valued at $2.3 billion. I'm throwing this to you. Does it matter if it's Cohen?
Well, no. I mean, he's keeping his day-to-day job, but especially of note in this announcement from the Mets. And by the way, it's rare that the team basically confirms, but the official statement was, yep, we're in talks with him.
5 years.
So sure sounds to me like it's a done deal. But yeah, he already has 4% ownership. I want to make sure he said it. I think a lot of people, as they've covered this story, haven't mentioned that. He bought 4% stake back in 2012. He is reportedly expanding his stake to 80%, and yet this guy's going to own 80% of the team. But the Wilpons get to stay on for 5 more years and run things? That is quite a condition. And if you're a Mets fan, as soon as you saw the news the team was selling, I think you probably thought, all right, goodbye Wilpons. Nope, not the case.
Something tells me, though, as he owns 80% of the team, he's not going to keep quiet if there are things that he is unhappy with.
He's not going to keep quiet, but they're saying that Fred gets to be the person in control still. After all that Madoff stuff.
We'll see about that.
I don't have a stake in the Mets at all in terms of whether I want them to win or not. But if it means, reversal of fortune, then I won't be happy because I have another team in the NL League.
Right. According to a new college reaction Axios poll, presidential hopeful Bernie Sanders tops other Democrats as the preferred candidate among college students. Importantly, Elizabeth Warren had been on top in the last round of polling, and now Bernie is overtaken.
Well, and also, if you look at all the candidates they listed in the election, President Trump's also pretty high there.
But also, do college students vote?
Yes. Well, I hope they vote. They should be voting.
Well, not enough last time.
Their rates were lower. You know what I think is interesting about this? I mean, I think we've been talking about this since 2016, but when you look at this generation, if we're talking about college students, this is the generation that came after the 2008 financial crisis, right? I think that does influence a lot of thinking in terms of where they believe the country should be headed, and I think that's how Bernie Sanders got his rise, obviously, in 2016. It looks like it's still holding.
Yeah, they liked Bernie last time. They liked Bernie this time. It is interesting, though, because I just wonder whether there are people who are thinking about age. I mean, I just think a lot of these candidates are of a certain age that you want to elect someone to serve 4 years who's already of a certain age.
Well, also, I think
no, it isn't, because you want to elect someone who's 80.
If he yells loud enough, you'll forget how old he is.
Air New Zealand is becoming more environmentally friendly. They introduced new edible coffee cups. The airline partnering with New Zealand-based company Twice to create the vanilla-flavored cups. Good idea, bad idea? I mean, does anybody expect food
I love
on an
the
airplane to
idea.
taste good
I
anyway?
mean, you're eliminating waste and you get to eat something good, right?
Yeah, why not? They already actually apparently have gotten rid of little plastic packets for salad dressing and soy sauce on the plane, and they have reusable bowls.
Yeah, but they already say don't drink the coffee on airplanes.
Well, as long as it holds. As long as it holds. If it's like
No
the
ice.
paper straws, then that's not going to go well.
Obviously,
Yeah,
that'll be a
that's nice. Help the environment, although it does change the equation if you order one, because it's a very different proposition. Do you want a coffee, or do you want a coffee and also a little snack, a little thing you're going to
You
have to
don't
eat?
have to eat the thing.
Sure.
Because it's
You could just let it
biodegradable.
But it's like the difference between getting an ice cream cone or a small cup of ice cream.
Oh, this is true.
Are you a cone guy, or do you get the
No, I get a cup.
Yeah,
I don't want to
do the
eat.
cup, too.
If I want ice
You
cream, I
always
want
get
ice
the
cream.
cup, too.
Not something to chew on.
Yeah.
And eat.
But I don't know, with coffee, why not?
I like the
the
drink
idea.
coffee on a plane. I need my coffee every day.
Okay, thanks so much, Dan and Akiko. I'm glad we got that all hashed out.
Yeah.
Let's take a last look at the markets before we leave you. We're seeing stocks down, but it's a very slight decline in today's session.
The trading session continues, and Wi-Fi PM is going to take you through the next hour of trading. Don't forget, influencers. The guest is Adina Friedman. We'll be on with Andy Serwer. That's 5 p.m. right here on yahoofinance.com.
It is 1 p.m. in New York City, and all three major indices are a little changed today after a whipsaw start to the first trading week in December. On tap for today, Commerce Secretary Wilbur Ross telling Yahoo Finance that getting the right deal with China matters more than meeting a December 15th deadline, how that could impact ongoing negotiations. Plus, yet another shakeup in the C-suite with United Airlines CEO Oscar Munoz announcing he's stepping down from his CEO role, what that means for the company moving forward, and getting paid to park your crypto. Why a new startup backed by the Winklevoss twins and Peter Thiel is paying crypto holders more than 6% interest on Bitcoin. The founder behind that project joins us to explain how it all works. All that and more. This is Wi-Fi PM. Good afternoon, everybody. I'm Zach Guzman, and join me on today's show is Yahoo Finance's Kristen Myers, along with Blackhawk Financial founder Leanna Hawkins. Guys, good to see you today. Interesting updates on the trade front. We're seeing that play out in the market action we're seeing so far today. A little bit more muted than what we've seen from trade news earlier this week. The Dow off by about 42 points, and the NASDAQ, as you can see there, off by just about 0.13%. But first, digging deeper into those trade developments, China is offering reassurances in the latest round of trade talks with the U.S. According to China's Commerce Ministry, the negotiating teams from both sides are maintaining close communication. And it comes as Yahoo Finance's Sabeel Marcellus sat down with Commerce Secretary Wilbur Ross earlier this morning and got his take on the latest negotiations.
The most important thing is that we get a proper deal. We're trying to roll back decades of inappropriate trading relationship with China. That's a hard task. And it's more important to get it right than it is to get it on December 15th or any other particular date. The President has announced that if nothing satisfactory happens comes December 15th, he'll put more tariffs on more products. So that's not a set in cement deadline, but it's a data point for which they will pay attention.
So there you go, guys. I mean, not exactly a ringing endorsement of the idea of getting things solved before December 15th. Not at all. Kind of quite the opposite.
Right. I mean, to some extent, of course, we all agree that if you're going to be signing a trade deal with another country, of course it should be a proper deal. It should be a good deal. However, I think that we're at a point where the president's rhetoric and also just his methods of negotiating, slapping on tariff after tariff after tariff, some of the tweets that he's pushed out, we are actually at a risk of not getting a deal at all. Like, forget a bad deal or a good deal. We just might not get any deal. This is a path that he started down. He should obviously try to finish it, and he should do it to the best of his ability. And I'm not sure his negotiating tactics are ones that are going to get us that deal that the Commerce Secretary is saying that he wants us to have.
Yeah, the right deal and putting in that effort to get there. But I mean, they are kind of addressing, you heard in that interview with Wilbur Ross there, I mean, we heard what they're pushing for, and that hasn't changed throughout the negotiations when you talk about IP theft being top of mind here and forced technology transfers. I mean, maybe getting there at some point, but the idea that we're just a couple weeks away from tariffs coming back in, we saw how the market reacted before when things didn't go well, and then we saw the boost that it got back in November when those tariffs slated for November were suspended. So, I mean, what are you seeing shape up here as we get closer to that date? Because December 15th, not that far in the future.
I mean, in terms of what we saw today, obviously it's not moving the markets that much. This isn't major enough news to do that. I think the important thing for all investors to remember, if you are a long-term investor whatsoever and not very close to retirement, is that none of these little bips and bouts and moves in the market every day based on these small pieces of news is really going to make a difference. So I think it's important to remember that and not get drawn into that hype because, when it happens, and hopefully it's sooner than later. But yeah, like you say, I mean, there's no clarification here from Trump's side. So.
Yeah, I mean, President Trump is often kind of quick to point out when the stock market's at all-time highs, and he's kind of noticed, I mean, we heard from him this week say that the drop to start the week was just peanuts when we think about the 200-point drop to kick off the week. But I mean, when we think about it, the concern's maybe not just in the stock market, but how companies are investing in the future when we talk about tariffs. And that seems to be what investors are focusing on the most in what that might do for employment, down the road and companies not investing in things to keep this expansion going.
You can't plan in amid chaos. I mean, you just can't. If you have no idea what tomorrow is going to be like, it makes it incredibly difficult for you to hedge your bets or to make a decision on the kind of investment that you should be making for your own company, for your employees. You don't know what's coming next. And I think we've routinely seen that lately, but particularly even if with this trade war. One day we are literally getting, okay, we're going to be increasing those tariffs by the 15th, and then the next day it's, oh, actually, we're going to be getting a trade deal soon. If you're a company, if you're a CEO of a company, how are you supposed to guide, your company through those waters? You have no idea what's coming next.
And now we just have 10 days to wait before we get that next update. But if you are a CEO, 2019 has been a very interesting year, not just because of the trade war going on, but we've seen a lot of departures. And we got another one out today. United Airlines is in the spotlight after its CEO announced that he will be stepping down. You can see the stock there slightly off today, off by about 0.37%. The company announced CEO Oscar Munoz will step down in May 2020 and will be replaced by current president Scott Kirby. Munoz will then become executive chairman of the airline. And guys, we've seen major changes, and now we got another one in the airline space.
Yeah, we were actually just talking about this yesterday with Expedia. I mean, they also had a C-suite shakeup, and we were saying, oh, maybe it's done for the year. Maybe, that's it, because we're now, almost approaching halfway through December, and we're hitting the holiday season. And now this news today with United, with Oscar Munoz going to be stepping down. However, it's a little bit interesting with what's happened with Munoz, like over his tenure as CEO. I mean, United was not necessarily doing very well when he took the helm of that company. But even under his leadership, I mean, United's been pretty badly slammed, at least within the headlines, and I feel like their brand has really taken a huge
hit. I mean,
hit.
You remember the image of that man being dragged off the plane.
Right, and then there was
that was 2017.
Exactly, and then just a year later, a dog died apparently in the overhead bin, and some of the initiatives that Kirby actually was in charge of have really paid off very well for United. So it makes sense, especially with all the rumors that he was going to be leaving, going over to American. It makes sense that they might want to keep him and just tell Munoz, give him the executive.
Over the last 5 years, the stock's up 40%. So even with all those things we're talking about, with the dog dying and a man getting dragged off the plane bloodied, I mean, the stock was up 40% over the last 5 years. So you can't really take that away. But you do talk about Kirby, and Yahoo Finance's Adam Shapiro recently spoke with the United president and soon-to-be CEO of United, Scott Kirby, about the company's growth plan. Take a listen.
We, have got all the building blocks in place, running a great airline, great customer service, got the growth plan going, and the next phase is to really get customers to choose to fly United. And so making more and more investments in the customer experience and in the product so that people don't just fly based on price and schedule, but choose to fly United Airlines.
So, Leanna, I mean, when we talk about shakeups, this one seems pretty mild. Munoz will stay on as executive chair. And you just heard from Kirby. He's been with the company since 2016. Stepping into the role, things have been going well.
I mean, there's no doubt that this guy has been through some major crisis management over the last 4 years. In his first month when he stepped in 2016, he had a heart attack and then ended up having a heart transplant. And he's done all of this with the David Dow scandal, the security scandal, and the dog passing away in the overhead bin. There's been a lot going on. I don't think anyone can blame him for moving into a new role. And they want to keep Scott Kirby on, and they don't want to lose him to American Airlines, even though sources say that that's not the reason for this change up. But I think it's a good move for United, and he's definitely proved himself in their net profitability growth.
Yeah, for sure. I mean, it's December 5th. We'll see if we get any more shakeups to end the year. You got to think they're stopping now.
We really might.
But some new ticker news to get to as well, because we've got a deal finally finalized. Viacom CBS shares began trading on the NASDAQ under the ticker symbol VIAC today. And the first day of trading under that ticker, as you can see there, a red day of trading, off 1.3%. Guys, of course, CBS Corporation and Viacom first merged back in 1999 and broke apart in 2005. But now, back together again. Sherry Redstone got what she wanted, and now this is back. Interesting in terms of the strategy here, kind of selling the content to other streaming providers rather than positioning itself like the other people are doing, the other companies in the space being a streaming provider on its own. I kind of like the strategy.
Really? Why?
I kind of like the idea. I mean, we just saw
I don't necessarily disagree, but I'm interested.
We just saw them
why.
sell, South Park, $500 million they got from that by selling that. it seems like a smarter way to go rather than all the people that we're seeing on the flip side pay so much to get content.
Right. I don't necessarily disagree with you. And we talk about this a lot, right? With every single platform and almost every single network like coming out with like their own like streaming service, you do have to ask yourself, will consumers actually want to pay, right, for all of that? So it actually might be a smarter strategy as all of these different like brands go out there and try to create or jump into the streaming wars to just sell the content out and not have to worry about taking it on yourself
And going up against Netflix
and then
the Disney
exactly and
world
going up
everybody
against
else.
Apple and Disney and Netflix and who like why, you know what, like, it's like let them fight that out.
Yeah.
We're just going to sell our content elsewhere.
And now as one big happy family.
Yeah, and the whole difference between what they did 13 years ago with separating the two to allow growth and expansion is the opposite of what they're doing now. They're expected to cut about 2,000 positions, save $500 million in costs. So they're really scaling back a lot so that maybe they can have more allowable expenses for content creation and things like that.
Well, it's an exciting liftoff for the combined company now here.
Oh,
Although not really liftoff.
You're a pivot, Zach.
My pivots.
They
People say my pivot game's strong. And speaking of liftoff, ladies and gents, we have liftoff today. Today marks the 19th commercial resupply launch for SpaceX. And just moments ago, SpaceX's Dragon cargo capsule launched from the Cape Canaveral Air Force Station in Florida, carrying over 5,500 pounds of crew supplies and cargo en route to the International Space Station. The mission marked the third flight for that particular Dragon capsule, this time transporting some very interesting goodies, including barley for beer as part of an ongoing experiment to study the beer brewing process in space, and 40 live so-called mighty mice, or mice genetically altered to be more muscular, to study how muscles degrade in space. Today's launch marked number 12 on the year for SpaceX, with launch number 13 slated for mid-December, when the company will look to put a telecom satellite in space for broadband services. Not exactly as exciting as mice or beer, in space.
The mice shocked me.
beer.
Yeah, I was like, what are the mice for? When I first read that and into doing further research, I saw that they're doing this so that they can try to help other astronauts in doing testing so that they can limit their muscle and bone loss while they're up in space. So
Wasn't it Mark Kelly? Because he was an astronaut. Doesn't he have a twin brother? Didn't they do that experiment as well? They checked his like height and muscles like when he went up and came back. Did I make that up? I didn't make that up.
A lot of experiments into this. But I mean, the thing is...
I was right. Mark and Scott Kelly.
The thing is, though, I mean, I was looking at space. Let's not forget Virgin Galactic with their listing a month ago, well, the end of October. That's green today, up 1.6%, which is interesting just because the kind of excitement over the space travel. And, you know, this is kind of the first chance to invest in a company that is looking to put people in space.
Well, who do you think is going to win the space wars?
I mean, you look at what
with a name
SpaceX
like
is doing. You can do it out.
Dragon Cargo.
What have you seen?
Let's be clear. Let's be clear. When it comes to Elon Musk, because I think we slam him a lot sometimes. We're very critical of him when it comes to Tesla. But when it comes to SpaceX, what he is doing there is incredible, and he is absolutely beating the competition.
Yeah,
absolutely beating the competition when it comes to the space wars.
I think the branding of SpaceX is overlooked when we think about Blue Origin and all the other competitors in the space race. There's a space race. We can say it's a space race. There hasn't been one yet.
Well, that
Still
was
a race.
It's been a lot of the topic of conversation around investors in Tesla, though, saying, well, you know, why is he spending all of his time at SpaceX? Like, how is he adding value to Tesla? That's been a big part of conversation too. So maybe SpaceX is more his thing. He should stick to the space.
It certainly.
I mean,
is
it's doing
today.
well.
Today was
better
a good day.
than Tesla does.
If you watched that launch, we
so.
just showed you a little bit of it, but they did successfully land the booster back on the platform as well. So a very successful mission so far, though that rocket is still en route to the International Space Station. So maybe I shouldn't speak just yet, but all things good so far. Coming up, Senator Elizabeth Warren drafting legislation to make good on her campaign promise of cracking down on mega mergers, why it could also freeze any future acquisitions on the part of tech behemoths like Apple and Google. And Wi-Fi PM returns. Well, Senator Elizabeth Warren is taking aim at mega mergers. Bloomberg reports the 2020 presidential hopeful is drafting legislation calling on regulators to probe roughly 20 years of these previous monster acquisitions and halt any deals like them moving forward. It reportedly includes companies that generate more than $40 billion in annual revenue, or when both businesses have sales surpassing $15 billion, though there would be exceptions for companies in financial distress. But obviously, the target of these companies, or setting it up like that, would be the big tech giants of the world that she's been bashing and threatening to break up. Google and Facebook, among the likes.
I mean, it makes sense. Again, to your point, she's been threatening to, she wants to break up big tech. It makes sense that she was going to try to create legislation to prevent these big tech companies from even existing in the first place, right? So take it
growing even bigger.
Right. You have to take it to its genesis, I guess. And I think she's actually going to be going back and investigating like the last 2 decades to see how some of these mergers happened to prevent them from happening in the future.
I mean, when we talk about it, it's kind of shifting. Again, this is just a draft of legislation, that hasn't even been approved or anything like that. Certainly hasn't been brought to the floor for a vote. But I mean, when we're looking at it, it's interesting because it's kind of a shift in the way that they have traditionally looked at mega mergers. When you think about what are the harms to consumers and what might impact prices when we're dealing with monopolies here, this is kind of shift that to look at how entrepreneurs and other businesses are impacted as well. So it's a change to the rules, basically, in thinking about, is it just about consumers?
And I think a lot of what brought this on is that Warren and other people have noticed that financial regulation of banking has eased since some of the initial new rules were put in place back in 2008, and that people want to make sure that 2007, 8, and 9 doesn't happen again, and that investors are going to be able to be more secure in investing in some of these big banks as well as the retail consumer and clients.
I mean, to me, we've talked about this before when she was threatening to break up Facebook and, Amazon and all of these things. I mean, I could see when we're talking about Amazon, the idea of selling their own products through the platform might actually be harmful when we think about product quality and pricing. When we talk about Instagram and Facebook, I mean, outside of, I guess, the data problems there and kind of not knowing what companies have on you or how they're using the data is one thing, but I'm not entirely sold on across the board saying that a lot of these mega mergers or big companies are necessarily harmful to the consumer.
So here's what's really interesting, actually. Some of these big tech companies actually exist because of antitrust regulations going after Microsoft in the early 90s. And Microsoft actually being taken down a peg was actually what allowed some of these other companies to grow and flourish. And I think what Elizabeth Warren is saying here, well, no, she has said this, is that these big companies, their very existence means that new entrepreneurs cannot rise up and create their own businesses. Other small businesses are suffering because of these large, massive corporations. And we've heard this a lot, particularly, for example, with Amazon, that other small businesses just cannot compete with Amazon's marketplace. And so she wants to make sure that other businesses, other entrepreneurs can get their shot and grow their business as well.
The other piece of the legislation as well, when we talk about big tech companies, Uber being one of those, is kind of positioning, strengthening, I should say, the gig workers at some of these companies
allowing
as
them to unionize.
Allowing Uber workers, contractors, workers, depending on which state you're in, to unionize and battle big tech power that way. But again, just a similar theme that we've heard from Elizabeth Warren throughout the race and now kind of leading it with legislation, delivering on her campaign promise to battle some of these big tech companies. Meanwhile, though, when we're talking politics, obviously immigration has been in the focus when we talk about Donald Trump on the flip side, pretty much the antithesis to everything that Elizabeth Warren's trying to get done. And a look at the Immigration and Customs Enforcement Agency is cracking down on immigrants working illegally. When you look into that, the Wall Street Journal reports that ICE agents are focusing on workplace probes, opening about 4 times the number of investigations under President Trump when compared with the close of the Obama administration. More than 6,000 new workplace cases were opened in fiscal 2019, which is up from the roughly 1,700 cases during fiscal 2016. So that's a big jump.
I mean, look, they've been given a mandate by the administration to tackle illegal immigration, and I guess if you're going to use this as a metric, the ICE is successful. They're increasingly successful. We can argue about whether that should be their mandate, and if this is the trend that we want to see. That's obviously a very different conversation. But again, I mean, the administration has said that they want to crack down on people being here illegally and
doesn't
working
come without
here.
a cost either, though. You
No, it
covered
does.
this.
No, it absolutely doesn't. I mean, it costs billions to house people on the border, children, families, people that are just working, just living their lives, not necessarily criminals, because in the same turn, by the same reporting, the other arrests have actually decreased for gangs. Transnational, like gang-related arrests have actually gone down. Those investigations actually have decreased. And we've already seen the administration, I know I'm sure everyone saw the headlines recently about how ICE had kind of set up these fake schools, and when students went to essentially apply or enroll, they just did massive sweeps to arrest them all. Again, we can have an argument about whether the people we are arresting, the people that we are, investigating every time ICE goes through and takes workers from their jobs, if that's necessarily good for our economy, as opposed to getting criminal action, people committing like violent crimes off the streets. That's a very different conversation. Some people say no, it's actually not worth it. We're taking workers away from their jobs, and they're not able to participate in the economy anymore.
That was interesting, though. I mean, despite focusing and the clear focus on immigration, ICE handles other things too, and they did have arrests.
There is
for
the C and the E in ICE.
You can't forget that. But they did have a 10% increase from the prior year when we talk about criminal arrests for some of those other things that they're on the lookout for too. So I guess able to do both, but clearly the focus being on immigration so far.
Yeah,
Customs and enforcement. That is something else that they do.
Don't forget those.
Yeah, and the weapons and financial crime, gang-related inquiries have decreased. And I think this is, as you say, it's a very specific conversation to what's going on in politics right now and Trump's stance on immigration, obviously. And then, of course, there's all the rest of us that are thinking like, well, what about gangs? What about weapons? What about financial crime? Those things are really important to have focus on as well. And how is ICE supposed to balance that when they have this mandate to be doing something else?
Yeah.
They've been, it's funny that ICE says, people only focus on the I part of ICE.
It does come first.
Yeah, but it's also like the administration focuses on the I part of ICE. So
Yeah, for sure.
That's why you're seeing this now.
But very important to point out those other tasks.
They do other things.
I mean, yeah, like you say, a lot of people might say, I might say, I think gangs and weapons are more important to be looking into than children going to school whose parents are not legal immigrants and they aren't either, and all those types of issues. So.
Or setting up that school is another thing too.
Right,
There's a lot
setting
of,
up
a
the
lot of
school in the
effort
first
going
place,
into that,
yeah.
for sure. All right, well, this week on Influencers, Yahoo Finance editor-in-chief Andy Serwer sits down with NASDAQ CEO Adena Friedman. She discusses everything from the current interest rate environment to what investors are watching as companies go public. Let's watch.
As companies start to mature and get ready for the public markets, public investors are really focusing on profitable growth. And that has become more and more of a focus for those public investors this year as the year has progressed. And I think so as some of these larger tech companies come out, that's become more of a dialogue than maybe they were expecting as they were entering the markets.
All right, you can catch the full episode tonight on yahoofinance.com. All right, well, just after the break, jewelry conglomerate Signet Jewelers surprising investors with a stronger than expected third quarter and an upbeat forecast for the year. CEO Virginia C. Drosos will break down what's working at Zales & Kay and all the diamond trends you have to hear about. Wi-Fi PM is back in 2. Welcome back to Wi-Fi PM. We are checking the market action we're seeing right now. Still red across the board with the Dow off by about 25 points and the NASDAQ off just 0.1%. Well, Signet Jewelers is shining after posting better than expected quarterly results. You can see their shares are up by about more than 5.5% right now. The parent company of Kay Jewelers, Jared and Zales, posted a smaller than expected adjusted loss per share of 76 cents on revenue of $1.19 billion. Signet also boosted its annual guidance above even the most optimistic analyst expectations. Joining us now to discuss is Signet CEO Gina Drosos, along with Yahoo Finance's Julia LaRoche. Gina, good to see you.
Thank you.
Thank you for being here. A very strong quarter, I guess. So we'll just dig into what worked so well when we see comp sales up 2.1%.
You know, we've been on a transformation journey really for the last couple of years. We're in year 2 of that journey, not quite to the end of that. But we've put a number of initiatives in place that are really beginning to take hold, starting with customer first, much better product marketing, and a transformed media plan for this holiday season, better omni-channel, iPads in the hands of every jewelry consultant, and better websites. And we're driving out costs in the business that we've been able to reinvest to drive growth.
I want to dig in on omni-channel. I find that so interesting because you all have this big brick and mortar footprint, but you also have the e-commerce. You're blending the two. What is the opportunity there, and what is driving that? Is it the young millennial shopper? How do people like to shop now?
I think people's shopping journeys have changed dramatically. I mean, if you go into one of our jewelry stores, it might feel a lot like it did, a while ago. I mean, there's a lot of jewelry to choose from and fabulous consultants to help you. But what's really changed is the research that people do along the journey. So we know that more than 70% of people start their jewelry journey looking online, seeing what's available. They go into store, they get great advice. They then go back online, compare prices, look at things. So it's a really very integrated journey. And in this context, we think our store footprint is a competitive advantage, especially when we match it up with great mobile technology and really fast websites.
So we've obviously seen brick and mortar stores just closing down. I know that Signet also has had store closures, but there's certain products that people just don't want to buy online. I think jewelry, diamonds is one of them. You know, people talk about mattresses. They don't necessarily want to buy online anymore. So how are you thinking about the future as everything transitions more and more online, having a product that people still want to see and touch and hold before they purchase it?
I think it's about creating the seamless integrated journey. So as I was talking about people's journeys, how they're in store, they're back online, et cetera, I think it's important for us to recognize that and to be able to give people the opportunity to touch and play with products in store. You know, we bought one of the fastest growing online retailers, James Allen, a couple of years ago. We used them as a test and learn place. We launched a James Allen store in Georgetown about a year ago. And what we have there is a great big table that people can come and touch and play with cubic zirconium, brass, and mix and match rings. It's been so successful that we rolled out in Zales for this holiday a Vera Wang equivalent of that. So you can go in the store and play with things and customize what you want.
Jenna, you're certainly no stranger to transformations, turnarounds. Just from your vantage point, what would you say, because a lot of companies are going through this, what is the most critical part to get right in that process?
Yeah, I think you have to see it as a path, which we have, and our paths are brilliance. And you have to remember that you can't leap for the stars from a foundation of quicksand. So you've got to get the fundamentals right. And that's really where we've started. We fixed things that, that needed to be. I mean, systems that were antiquated, we've gotten, significantly better. And then we focused on the fundamentals of product, of marketing, differentiating our banners, making sure that our customer insights are meaningful. We're leveraging data to really make our media plan much more targeted and more efficient and effective. So getting the fundamentals right is important. And then as the jewelry leader, we should be bringing breakthrough innovation.
Well, let's
beginning to do that.
Yeah, because you say it's a path. I mean, the stock down about 40% year to date. But I mean, today you surprised people with upping the full year guidance here when we're looking at it. You got Kay leading the way higher when we look at same store sales growth, Zales, Signet, or your overall growth, 2.1%. Jared, the one in the negative there. So, I mean, when you look at the brands themselves, is there any differentiation on what's been working well and you carry that over to the other brands?
It depends. So we know that we have different customers who are interested in our different brand banners, and we differentiate them that way. So our Zales customer is a very style-oriented customer. Vera Wang does very well there. Disney K is very much for sentimental gifters, and so we have some very romantic gifts and great opportunities for that over the holiday season. So they're different.
Yeah.
But yeah, so there's some things that carry over. Absolutely. I think one of those are trends. So gold is a big trend right now, colored center stones for bridal, fancy shapes. Those are the kinds of trends that we see play across our banners.
Interesting.
So we're getting into engagement ring season with holidays just around the corner. I imagine this is a huge time of year for you all. The consumer's been looking really good in the U.S., and I just want to get your viewpoint. Since you're selling jewelry, how does the consumer look from your vantage point, and what kind of data or insights are you gleaning from the consumer?
So in the jewelry category, the consumer market is healthy. I mean, we feel good. We've seen over the last number of years low single-digit growth in the category, and we expect that to continue. So I think all of that bodes well. I think some of the interesting things going on with customers would be in the bridal market. We expect that 40% of the people who get engaged over the coming years will be Hispanic or LGBTQ+. And so we really have transformed our marketing and our product offering to make sure that we are very relevant to all consumers who want to express their love. So that's been a trend. I think another really interesting one is reciprocal gifting. It turns out that the partner who is giving an engagement ring often wishes that he or she was getting something in return.
Selfish, a little bit selfish. You're supposed to be getting marriage in return for a lifetime partner.
And so when we do the survey of partners who've given the engagement ring, they wish that they would get a watch or a gold chain or something like that to go along.
Certainly doesn't hurt sales growth either. But Gina Drosos, thank you so much. Julie LaRoche, thank you as well. Got to take a quick break, but we're back with the market's biggest movers on Wi-Fi PM right after this. Welcome back. Let's check in with Scott Gamm on the floor of the New York Stock Exchange. Scott?
Hey there, Zach. Well, here are the best performing stocks in the Dow Jones Industrial Average right now. Nike, Apple, and United Health. Of course, all of these stocks are up about 1%. The laggards in the Dow right now are names like 3M, Cisco, Home Depot, and Boeing. So there you have it once again, this tug of war going on in the Dow among the two really most powerful Dow stocks, Apple and Boeing. Apple's up, Boeing's down, that kind of move really canceling each other out. And that's one reason why the Dow really isn't getting much traction today, down about 30 points, eating away at some of the gain we saw yesterday, although even with today's declines across the major indices, it's looking a lot better than it did earlier this week when we saw triple-digit losses in the Dow. Now, outside of the major indices, we're also keeping an eye on shares of retailer J.Jill, down over 7%. The company releasing quarterly earnings, including a 7% decline in comparable store sales. Also, news that the CEO, Linda Heasley, is stepping down from her role. Board member James Scully has been named interim CEO. Zach.
Yet another shakeup in the C-suite to watch. Scott Gamm on the floor of the New York Stock Exchange. We'll check back in with you later on in the show. But next on Wi-Fi PM, cover Elizabeth Warren's ears. We're taking a look back on some of the biggest deals and mergers of the decade. AT&T and Time Warner Kraft Heinz making the list, the good, the bad, and the ugly, when we're back in 60 seconds. Good afternoon and welcome to Wi-Fi PM. I'm Zach Guzman, and joining me today is Yahoo Finance's Kristen Myers, along with Blackhawk Financial founder Leanna Hawkins. Guys, we got to check the market action again. I'm being told we got to do it. And look at this. The Dow has
Literally
turned positive.
no one was saying that.
That is why the Dow now up in the green, up about 4 points. The S&P in the green as well. The Nasdaq now the lone major index in the red. And we'll see what happens in the second half of the show. But today, here at Yahoo Finance, we're taking a closer look at the last decade during the last month of 2019. And joining us to break down the best and worst deals of the past 10 years is Yahoo Finance's Crystal Hu. And Crystal, what are the notable deals to take a look at over the last decade?
Yeah, so there's very hard to judge whether a deal is good and bad from the business sense. So the way we looked at it is to look at the deal size. So that we can put a price tag and actually run the deals in number. And then we found one of the largest deal is Verizon, our parent company, bought Verizon Wireless from Vodafone, the European wireless, who used to own 45% of Verizon Wireless. And then we have DuPont and Dow Chemicals merged together. And then we also have Kraft and Heinz, which a deal I heard that you don't like much.
I'm not saying I don't like it. I'm just saying, I mean, we've seen stock performance hasn't been there. Stock performance hasn't been there. Even Warren Buffett hasn't been the greatest fan of that, and he played a large role in how much money he's put in that company. So that one just stood out to me in terms of size and kind of disappointment.
Yeah, another interesting one is AT&T buying Time Warner, because that's an attempt of a carrier basically want to expand and diversify its business and go into the content world. So it's a very interesting horizontal play, merger play.
So let's talk about it. What were the best mergers, at least in terms of the company doing much better after they merged, and then companies that just did terribly after that happened? What were the biggest failures, I guess we'll call it?
I think the biggest failures could be the deals that never happened.
How would you take that take? Huh? What do you think about that? I mean, when we talk about these deals, though, we're talking about mega mergers, and we were just opening the show with pressure from Elizabeth Warren to kind of prevent some of these deals from happening.
Yeah.
And I mean, there's a good chunk on this list that wouldn't be able to happen if you think about it.
Oh, yeah, totally. And in the past decade, the deals we were looking at actually are facing more scrutiny than it was before, because a lot of the mega deals are done by multinationals, and they need to gain approval from the antitrust regulators from each market they operate in. So before, they only need to look at regulators in the US and EU, and now other countries like China and Brazil have been increasingly play roles in that. China, for example, blocked Qualcomm's bid to NXP, which is a Dutch chip maker. So yes, and also in the US, the antitrust law hasn't been changed much in the past decade. So now we're seeing Senator Elizabeth Warren want to propose some changes to block some mega mergers. So that's what will be some challenges on the horizon.
I mean, you can't expect that the T-Mobile Sprint deal would have gone through under President Elizabeth Warren. That just wouldn't have happened.
Well, I guess it's a good news for T-Mobile and Sprint.
Well, if it goes well, it doesn't.
Through,
We go
right?
back
We
a
actually
decade
haven't even. That's not been finalized.
Who
but
knows?
They say they can't exist without
10
it.
years from now, maybe Crystal will be back on the couch saying maybe it wasn't a good merger. We'll see what happens.
Yeah,
We'll look back on that. 10 years from now, you got to come back. Crystal Hu, thank you so much for breaking that list down. After the break, the startup paying crypto holders more than 6% interest to park their Bitcoin with them. The founder of the company, backed by the Winklevoss twins, and Peter Thiel joins us to explain how it all works when Wi-Fi PM returns. Well, getting paid to park your crypto. We're breaking down the new way to trade cryptocurrency in this week's Startup Spotlight. BlockFi is backed by the Winklevoss twins and Peter Thiel and just launched a new zero-free trading platform that allows users to trade, borrow, and earn interest on their crypto out there floating around in the ether. The exchange currently can do trades between Bitcoin, Ether, and the Gemini dollar. And joining us now to discuss is Zach Prince. He's the founder and CEO of BlockFi. Zach, good to see you, man.
Thanks for having me.
You have raised money from some pretty noticeable investors here when we talk about the Winklevoss twins and Peter Thiel, but now introducing free crypto trading. So what was kind of the evolution to get there?
Yeah, sure. So we've had this platform for a while now that's the leading wealth management solution for crypto investors, enabling them to do things with their crypto that you would expect to be able to do with traditional assets in the traditional financial system. Mm-hmm. So we had an interest account, and we had the ability to borrow money secured by your cryptocurrency. And the number one requested feature that we got from our existing clients was that they wanted to be able to trade these assets on our platform as well. They're already sitting there. It's a volatile asset. Sometimes you want to rebalance your portfolio. And so we added this feature partially as a result of those requests, but also because as the company continues to grow, we want to have an ability to onboard net new users into the crypto ecosystem. So being able to buy and sell is a core component of that.
It is a volatile asset, but it seems like it's gotten a little bit quieter recently when we look at kind of the day-to-day moves. So it's kind of interesting if it does get quieter. I think that the interest being paid, because we're talking about 6% here, granted it's not FDIC insured, so there are some risks involved. But when you're talking about that, if it does become less volatile, I would assume that that would become more attractive to people to actually gain interest like that.
Yeah, absolutely. And crypto is still relatively volatile, especially when compared to traditional assets. I mean, it's up 200%. Bitcoin, at least, is up 200% this year. It's had days where it's up and down 30, 40% throughout the year. But in exchange for that volatility, you're compensated with what's the best performing asset literally in the last 10 years. And if you compare it to other unicorns, it's the largest unicorn out there with a market cap over $100 billion today. And the ability to earn interest on something and grow your wealth passively obviously is a trend that never stops happening in financial services. So bringing that to the crypto space is something that's enabled us to grow very, very quickly.
So talk to me about your typical user, because I think when we talk about crypto a lot, we talk about a younger audience being far more interested in it. But are you seeing now older people getting interested in trading something like crypto because it might seem a little bit more familiar to what they already do with their traditional
Especially
assets?
with the idea of 6%
Right.
interest as
Right.
well. That's something that even someone who's older
Right.
can understand.
Yeah, so it's definitely expanding. Our core user is a younger individual, probably lives around the coasts of the U.S., We do have some clients outside the US, and then we also have an institutional side to our business. So the way that we're generating the interest that we're paying to folks is by lending cryptocurrency to institutional borrowers. And so there are firms who are providing liquidity to these markets who can't get the traditional prime brokerage services that they need when they're trading traditional markets in the crypto space. And so we also step in to provide that service on the institutional side, in addition to the retail-facing side of our platform where you're primarily earning interest.
And looking at like how much money you've raised, it looks like you're approaching $80 million in terms of money raised. Is a good chunk of that going to paying interest on these crypto holdings? I imagine that would be a loss leader to kind of attract customers on the platform and then trade there.
Yeah, so it's actually not a loss leader, but that headline can be a bit misleading because we raise capital for two purposes, both for equity, to hire people, have an office space, legal counsel, all of that good stuff. We also raise capital specifically going towards lending. So the 80 million, about 30 of that has been equity capital, and about 50 of that has been specifically dedicated towards making US dollar denominated loans. But we'll be raising more capital soon because the business is doing really well.
Is there any, I assume that the fears would be, because we've seen this even from other lenders and banks out there cutting their interest rates when we think about attractive yields or interest rates to get people on board, markets being one of them, and then we see it drop and drop. So is that 6% in the future probably going to be less?
It depends a lot on how the market evolves over time. Right now, the crypto sector in general is capital constrained, primarily because you don't have participation from traditional banks and other large financial institutions. So we think there's still a long way to go with interest rates that are, when compared to traditional markets, much higher and much more attractive. But as the sector matures, I would expect that it starts to trend closer to what you see in the normal space.
All right, Zach Prince, the CEO of BlockFi. Thank you so much for joining us.
Thanks for having me.
Appreciate it. All right, well, coming up, 2019 has been a year of culture disasters, with WeWork and Boeing proving to be poster children of bad company culture. More on how other companies have been able to avoid the same mistakes right after this. Welcome back to Wi-Fi PM. We are checking the market action as the indices continue to swing from green to red to green, as the Dow is up 5 points right now and the S&P up less than 1 point. We'll see what happens as we approach 2 p.m. Eastern time. Well, companies like Under Armour and WeWork have been thrust into the spotlight this year over reports of their workplace culture problems, from leadership shakeups at Expedia to employee walkouts at Google. Our next guest is focused on helping companies reimagine their workplace from the inside out Joining us is Kit Krugman, Head of Organization and Culture Design at Co-Collective. Kit, good to see you.
Good to see you too. Happy to be here.
Yeah, it's been an interesting year when we talk about some of these companies that have had problems, right? And Boeing stands out to me because we've heard from employees saying that moving too quickly has been problematic. WeWork, I think you can also put in that case. What do you think is kind of at the heart of some of these companies running into these culture problems?
I think part of the challenge is when you grow really quickly, you deviate from what you originally designed as like your culture, your values, your mission, and then you need to think about how do you actually go farther upstream to ensure and have intentionality around bringing that through as you grow.
So how does a company's culture, because this isn't necessarily something that we talk about a lot, or maybe something that investors don't necessarily even care about, but as you're looking at it, how can a company's culture actually impact how well or how poorly, on the flip side, a business can actually do?
Well, the first is talent. In a really competitive talent market, in order to attract, retain, and actually grow and keep top talent, you really need to make sure you have a culture where they can thrive, right? I think that's number one. The other thing is the more public a scandal about culture not aligning with your values, you can see actual stock damage in that as well.
I mean, yeah, and when we talk about the investor front, I mean, Boeing is a good example to point to when you're thinking about trying to meet production quotas or move full steam ahead, and the problems that might ensue when you do that, trying to appease investors as companies often do, and then the problems that you can run into that.
I mean, full disclosure, I am an investor in Boeing. But that being said, I think what you were talking about at the beginning, when I was looking at your website, you were talking about story doing versus storytelling. And I think a lot of the times, like with some of these big growth plays, people get wrapped up in the story that they're telling and not necessarily the profit or path to profitability or what's really going on inside the company. So how do you guys focus on that story doing so that companies can perform better?
Yeah, that's a central belief for us. We think there's a lot of people who are actually talking about what they are in the world, but not actually thinking about how do you do that? How do you think about, so let's take mission, for instance. A lot of companies have really amazing mission. Facebook has a great mission to make sure that to not have a divided world. It's kind of ironic when you think about what has actually happened, right? So if you think about laddering mission down into what does that actually mean for behavior? And so when we think about story doing, we think about how do you take story and actually turn belief into behavior or your ideas into practice?
Well, no, go ahead, Zach.
No, I think you should get in
It's
here.
your show. So, I mean,
Go ahead. You go ahead.
All right. Well, Kit, so Zach earlier in the intro had kind of mentioned a couple of companies. And so I'm wondering if you can actually say, these are the companies that I've seen that are doing this incredibly well, and which companies in your mind are actually doing a terrible job, at least on the culture front?
Yeah, it's a great question. One thing I would say is culture is really complex. So I don't like saying that one company has a great culture and one company has a bad culture. I think companies have had real challenges with their culture, right? So I think if you look at the Boeing example, and I appreciate that you're an investor, but one of their values is safety and valuing human life above all else. And so if you look at what happened, somewhere along the line, someone in a leadership position potentially behaved in a way that indicated to an employee that it was okay to not prioritize human safety above all else. And so that's where you go to, like, how do you avoid those gaps? Because the consequences, as you know, can be really bad.
Yeah, and it's one of those examples that kind of deviates from the norm when we talk about WeWork or Uber. Some of these tech companies have grown very quickly in a short amount of time. Boeing's been around for quite a long time. Not exactly an excuse that you can point to there, but Kit Krugman, very interesting insights there on culture. Appreciate you bringing that to us.
Yeah.
All right, well, Leanna Hawkins, we got to let you go. Chris Myers got to let you go, too. I got to read one more thing, but then we're done for the day. Thank you for sticking around. And don't go away yourself. We're headed to the New York Stock Exchange in 60 seconds' time. All right, let's check in with Scott Gamm on the floor of the New York Stock Exchange. Scott?
Zach, thank you. I am joined now by Jonathan Corpina of Meridian Equity Partners. And Jonathan, the market looking much better than it had been yesterday, but I guess, how do you view the situation right now in terms of the trends we're seeing?
I think the trend is the same trend that we've seen all along, is that the market's dictated by any headline that comes out about U.S. and China. Clearly, a lot of volatility on Monday and Tuesday, rallied back on Wednesday. It seems, today we've got a nice stability here as we're trading relatively flat. But I think, as we get through the end of the week, everyone's looking at the jobs numbers and the economic data. That's going to be the focus for Friday. I think investors are looking for this as an opportunity just to kind of see exactly, how our economy is trending and what to expect towards the end of the year here. But seasonal jobs always adjust those numbers. We're looking at, hours worked year over year, month over month. We're looking at wages. So digging down into the numbers tomorrow, I think will help investors get a better sentiment moving into next year.
And it may also help the Fed too, right? This is the last jobs report before the Fed's December meeting. But do you expect the numbers tomorrow to materially change their plans for December?
I don't. I think they've made up their decision already. They've claimed that they're going to remain data dependent and look at everything that's out there. Clearly, the uncertainty as to what's going to happen with tariffs is some sort of ammunition that they can kind of hold on and hang their hat on as far as not proceeding forward. But I think from an economic point of view, clearly our numbers have shown that our economy has gotten better.
With the tariff threat kind of always here, isn't that in a sense kind of good, because to your point, it kind of keeps the Fed, supportive of the market? So I guess what's the more important factor, tariffs or supportive Fed?
I think the Fed is going to be more important, right? Because the tariff conversation is going to continue for a while. We started the week off with our president saying that he doesn't need to get anything done until after the 2020 elections. And then we've got headlines today saying that we are inching closer to some sort of agreement. So somewhere in between today and November of next year, something will certainly happen. I don't think we can hang our hat on any of that at this point right now. I think we need to focus on the fundamentals of individual companies, sectors, and the overall economy.
Jonathan, thank you so much. Zach, back to you.
All right, coming up, Commerce Secretary Wilbur Ross tells Yahoo Finance that getting the right trade deal with China matters more than getting a December 15th deadline met. How that could impact ongoing negotiations. The ticker all over it starts in 2.
Good afternoon and welcome to the ticker on Yahoo Finance. I'm Shauna Smith. Let's check in on the market action so far this afternoon. We're seeing not a lot changed actually across the board. The Dow up just slightly here, up 2 points. The leaders in the Dow so far, Nike, that is a big winner. That stock up just around 1.7%. Apple also moving to the upside. We'll talk more about that stock later in the show. The biggest losers, though, in the Dow so far are 3M. That stock off just over 1%. Well, first, let's get to the latest on trade. We have President Trump telling reporters that U.S. officials are having meetings and discussions with China right now. He notes that talks are going well, but said that, quote, we'll have to see about the looming December 15th tariffs. Now, this comes after China's Commerce Ministry said that the negotiating teams from both sides are maintaining close communication. Earlier today, Yahoo Finance's Sabeel Marcellus sat down with Commerce Secretary Wilbur Ross and got his take on the latest negotiations.
The most important thing is that we get a proper deal. We're trying to roll back decades of inappropriate trading relationship with China. That's a hard task, and it's more important to get it right than it is to get it on December 15th or any other particular date. The President has announced that if nothing satisfactory happens comes December 15th, he'll put more tariffs on more products. So that's not a set in cement deadline, but it's a data point for which they will pay attention.
Joining us now for more on this is Craig Allen. He's president of the U.S.-China Business Council, along with Yahoo Finance's Akiko Fujita. Thank you both for being here today. Craig, let me start with you. We just heard from Commerce Secretary Wilbur Ross. What do you make of the latest that we've heard about trade, and what's it going to take to get some sort of deal?
Well, clearly the negotiations have been relatively choppy. There's been up days and down days, but attentions are focused on the December 15th deadline, and that is driving both sides forward towards at least enough progress such that the tariffs will be delayed. If possible, as Secretary Ross just put it, a phase one agreement will be announced. So I think that the momentum is positive. We're moving in the right direction, but will we be able to get there by December 15th is a question, the answer of which I do not know.
Craig, one of the things that we've seen is the U.S. increasingly kind of putting the social issues aside. We saw the president sign the Hong Kong bill, and we also saw the House this week pass what is essentially a bill that would condemn what the Chinese are doing with the Uyghur Muslims. What are you hearing from the Chinese side in terms of how that could affect the trade negotiations?
So there's a public response and a private response. The public response is that the Chinese are furious at what they consider to be intervention in their domestic affairs. The private response seems to be more constrained or restrained, and the question of whether or not this will impact the negotiations, the trade negotiations, is unclear. It appears as if the Chinese have compartmentalized this and that the trade negotiations are continuing apace, and therefore that makes me more optimistic that we will be able to get to some form of an agreement by December 15th, or that if failing to do that, the additional tariffs will be postponed.
It's been interesting to see how the markets have responded to some of these headlines. You know, regardless of what happens with whatever a phase one deal looks like, what we have seen on the outskirts is sort of this decoupling. If you look at even a company like Huawei, you know, earlier this week we found out that they have been able to push forward on their products without U.S. components in place as well. Do you get the sense that maybe investors in the market is discounting that change that's actually happening, these structural issues that have much more of a long-lasting impact than any kind of trade deal?
Well, I think we need to be careful about conflating really different subjects. Tariffs are one subject. Technology, I would argue, would be yet quite another subject. And
but the administration has essentially lumped those two together, right?
Well, but I think that they are under very different legal jurisdictions, and it's very likely that the trade issue, the tariff issues, are much shorter term than the technology issues. The technology issues, the export control and national security issues, will certainly last much longer than the tariffs. and therefore we should be careful not to mix our vegetables and our fruit here. They are different. The trade issues could be resolved without affecting the technology issues. Again, they are under different legal jurisdictions and will be handled on a different timeline.
Craig, at this point, it's kind of gone back and forth between the U.S. and China, obviously, numerous times. At this point where we stand right now, who would you say has the upper hand?
Well, I think that both sides have successfully hurt each other. Both economies are under a little bit of stress. Both private sectors, and particularly small, medium-sized enterprises, in both countries are hurting. So I would be reluctant to say who is winning or losing. I think both sides are losing with the trade war. And indeed, that's the way that most trade wars go. The sooner that we are able to resolve this, the better. We agree completely with Secretary Ross that a good agreement is more important than a quick agreement, but we need both so as to mitigate the damage that has already been done. And to get us on a more equal footing in the very large and rapidly growing China market with our Japanese and our European competitors. Right now, they are enjoying this little fracas between the United States and China, and they are surging ahead in a relatively healthy Chinese market where our companies are crippled. And that's not a good place to be. We want to get to the end of this as soon as possible.
All right, Craig Allen and Akiko, thank you so much for joining me today.
Thank you.
Well, coming up, the potential fallout for the airline industry after the surprise resignation of United CEO. Stay with us. Welcome back. Let's get to our big three tickers. First up, the unexpected resignation of Oscar Munoz as United CEO is sending aftershocks throughout the airline industry. We also have Slack revealing strong growth in new high-dollar corporate clients. And the grocery wars are taking a fresh bite out of Kroger. Well, first, let's get to the latest on United. The airline announced that CEO Oscar Munoz will step down in May 2020, will be replaced by Scott Kirby, United's current president. Now, Munoz will then become the executive chairman. Brian Chung is with me. And Brian, the big question is, when you take a look at United stock, the stock has been doing fairly well over the last couple of years, especially when you compare it to some of the other airliners. Why do you think United is making this change now?
Well, United's making this change mostly because everyone expected that this was going to happen. So Oscar Munoz came in as kind of a last-minute fix to what was a replacement at the head of that company in 2015. Keep in mind that at the time, it was Jeff Smisek, who at the time was the head of United Airlines. He resigned abruptly in September 2015 amid a federal investigation into whether or not he had actually improperly traded favors with the chairman of the Port Authority of New York and New Jersey. It was not at the time a good headline for United. They needed to find someone quick to put at the head of the company to try to fix things over for a company that was, quite frankly, struggling in the United, or rather in the American Airlines space. It was not competing well against American Airlines, was struggling globally, and when they finally managed to get Oscar Munoz on, there was concern within the investor community that they didn't even find someone from within the airline community. Actually, Oscar Munoz, keep in mind, was formerly the CEO of CSX, the train rail company, so a lot of concerns at the time, but Shauna, as you mentioned, what we've seen is that over the last few years, it's actually been United Airlines that's been outperforming its relative competitors like American Airlines, like Southwest, like Delta Airlines. And one reason for that is because they've been able to shed their expenses and basically change the way that they run the business, but also because of the way that they've been able to attract talent as well. Keep in mind that the person who will be succeeding Munoz when he does step aside in May 2020 is Scott Kirby, who's the current president. But before that was actually from American Airlines. So this was United poaching him from American Airlines. That was in August 2016. So they have a lot of airline pedigree as they do make this transition in 2020.
Brian, let's talk more about Scott Kirby at Yahoo Finance's Adam Shapiro. He actually recently sat down with United's president, going to soon be the CEO, Scott Kirby, talking about the company's growth plan. Let's take a listen to what he said.
We, have got all the building blocks in place, running a great airline, great customer service, got the growth plan going, and the next phase is to really get customers to choose to fly United. And so making more and more investments in the customer experience and in the product so that people don't just fly based on price and schedule, but choose to fly United Airlines.
Brian, Scott Kirby has kind of been the architect of the company's turnaround, similar to what you were saying earlier. When we take a look at what United might be like under the direction of Scott Kirby, could we expect any changes or more of what he was kind of just saying in that interview, which was the focus on the customer?
Yeah, well, I think the focus on the customer is pretty much the main priority, and it's only clear because of the fact that they actually had a video that was sent to employees today announcing the transition, in which both Munoz sitting next to Kirby were emphasizing the way that they've been prioritizing the customer and the way that they've reshaped the business over the past few years, which, as I mentioned earlier, is a big reason why it's been able to do better than American Airlines. Keep in mind, this is in an operating environment in the airline industry where things don't seem to be getting that much better for the customer. If you've noticed over the past few years, it seems like it's been airlines kind of racing to the bottom on trying to have the most bare bones, stripped down airplane ticket fares that will charge you a very low ticket fare, but you also have to pay everything for basically any of the extras. That's a carry-on bag in some cases, early check-in, being able to actually select your seat. So this is definitely a very challenging operating environment, but I think that what we've seen is that United has been able to weather those changes substantially better than some of those other airlines. The question is whether or not Scott Kirby can keep that momentum going.
All right, well, we certainly will keep our eye on the stock. Brian Chung, thanks so much. We're also watching Slack today on the heels of their earnings report after the bell yesterday afternoon. Now shares are gaining. You can see the stock up almost 5% right now. The company beat on both the top and bottom line. The company also saying, though, that it is facing pressure in the short term as it focuses heavily on rapid growth at the expense of profits. Emily McCormick is back with me. Emily, this has been the story with Slack ever since the company went public. Lots of speculation out there just in terms of what the future profits will be for this company. When you take a look at Slack's earnings report, what's the number one thing that stuck out to you? Because when you take a look at the stock's reaction today, looks like Wall Street's pretty pleased.
That's right. And we did see that stock bounce around a little bit after market close yesterday, after that was first released. That was mostly because the bears were really latching on to that billings outlook. So one of the things that Slack said was that it expects its calculated billings to be between $745 million to $760 million. Midpoint of that range came in a little bit below of consensus for $754 million. And again, that's a closely watched metric just because it shows sort of the direction of revenue growth, since that's revenue plus the change in its deferred revenue. Closely watched for a subscription-based model like Slack. But probably the number one metric that stood out to me was something that they talked about heavily in the earnings call, and that was really the growth that they saw in these large ticket customers. So the company now has 821 customers paying more than $100,000 in annual recurring revenue. And then if we look at those customers paying more than $1 million a year in annual recurring revenue, that's up to 50. So that's an increase of 20 from a year ago. So we really are seeing a large engagement base from some of these heavily paying customers, and that's something that's really helping accelerate the top line. And we did see revenue climb 60% in the third quarter.
Emily, one thing that the street's also focused on is competition out there, namely Microsoft's Teams. When you take a look at Slack's numbers compared to Microsoft, obviously Microsoft's numbers dwarf what Slack has been able to do. How big of a deal is this for Slack? Because that is would guess to be a possible problem here going forward.
Right, and Slack is shrugging off that competition. One of the things that they pointed to is that of those large customers paying more than $1 million in that recurring revenue, 70% of them were also using Microsoft. So they aren't necessarily seeing themselves as a direct competitor to it. They're really talking about it being something that can be used both with Microsoft and Slack by some of these companies. So it isn't something that companies have to necessarily choose one or the other. It isn't a zero-sum game. It's something that can coexist. And the other thing that they're talking about is that engagement with Slack is much higher than for the Teams platform. So with Teams, yes, they have 20 million customers as opposed to the 105,000 that Slack has. But Microsoft is really counting a daily active user as someone who might just use it for a single video call, for example, where Slack might see 90 minutes of engagement. That's their average for the actual messaging platform. So they're talking a little bit more of a higher engagement on their customer base.
All right, Emily, thanks so much for breaking that down for us. Let's also talk about Kroger. Another earnings report out today. Now shares are slumping after reporting earnings that missed expectations. You can see the stock off just over 3% so far. Still, though, the supermarket chain's comp sales did rise about 2.5%. Heidi Chung is here with me to break all this down. And Heidi, the big question for Kroger is whether or not it will be able to keep up with some of the other new competitors out there like Amazon. Did this report kind of call into question that exact fear?
I think that's exactly what this report sort of called into question, Shauna, whether or not a grocery giant like Kroger is able to weather the storm and all the competition that we're seeing when it comes to the retail and grocery space. Like you mentioned, Walmart and Target, even Target is also in the fresh food space as well. So whether or not this company is going to be able to find out what kind of strategy is going to work going forward is the number one question. But looking at the third quarter, it was a miss on the top and bottom lines. But like you mentioned, identical store sales, which is also known as same-store sales growth, was actually better than expected. A couple of things really stood out to me in this report, though, Shauna. Its pharmacy business continued to weigh on the company's profitability, and that's why we saw this company miss estimates for the adjusted earnings per share during the third quarter. Now, the company did say on the conference call, though, that they don't necessarily see the pharmacy profitability issue continuing to be a headwind into 2020, so a little bit of optimism on that front. Now, Kroger also announcing that it is selling its interest in Lucky's Market. Now, Kroger invested in Lucky's Market 3 years ago. It also announced that it would be taking a $131 million impairment charge as a result of that. So that was excluded from the adjusted earnings per share from this past quarter. But like you mentioned, competition seriously brewing in the space. Walmart is the number one competitor at this point. But I think when we think about Kroger, one thing that we do also have to give them some credit for is the fact that their private label business is doing a lot better than a lot of people are thinking right now. It grew about 3.4% during the quarter. And also back in September, the company announced that it would be launching Simple Truth, which is sort of a direct competitor to Beyond Meat and Impossible Foods. As we know, that plant-based meat craze right now is all the rage. So if that really succeeds and takes off here, I think that could be a really, really big tailwind for Kroger going forward. But whether or not this company is going to see the same problems in the fourth quarter when they report, I think that will be a really telling sign here.
All right, Heidi, thank you. Let's talk about This Week on Influencers. Yahoo Finance editor-in-chief Andy Serwer sits down with NASDAQ CEO Adena Friedman. Now, she discusses everything from the current interest rate environment to the advantages of listing international companies on U.S. exchanges.
In our opinion, it's in the U.S.'s interest to keep those doors open because there are other exchanges out there in the world that could also be the home to international listings. But for us to be the place where companies from all over the world, whether it's from China or Israel or Southeast Asia or Europe, for them to congregate here in the United States is in the U.S. economy's best interest in order to make sure that we stay that land of opportunity.
Well, you can catch the full interview tonight right here on Yahoo Finance. Well, coming up, why it was anything but a glittering quarter for Tiffany. We've got the details. Stay with us. Welcome back to The Ticker. Let's get to Scott Gam on the floor of the New York Stock Exchange. Scott.
Hey there, Shauna. Well, the Dow has flipped from the red to the green, up a mere 9 points right now, being led by names like Nike, Apple, and United Health. The laggards in today's session are 3M, Cisco, and Home Depot. Now, when the Dow was in the red just moments ago, Boeing shares were down about 0.7%. Now, that stock has pared the bulk of its losses, and it's now down only 0.5%. So that little spread is one of the reasons why the Dow was able to move into the green. Boeing is that powerful of a stock for the Dow. Outside of the major indices, Shauna, we're also keeping an eye on shares of J.Jill, down over 7% right now after the company reported disappointing earnings, including a 7% drop in comparable store sales. They also announced that CEO Linda Heasley will be stepping down, and a new interim CEO has been announced. And then, of course, Tiffany shares is the other mover today. The stock is roughly flat right now. The company reported earnings that came in below estimates. Revenue and same-store sales also fell short of what Wall Street was expecting. Now, this was kind of a lame duck quarter, you could argue, because it was just over a week ago that the company agreed to be acquired by LVMH for just over $16 billion. Shauna.
And I think that's a big reason why investors are being able to shrug off this big earnings miss that we did see today. Thanks so much, Scott. Well, coming up, why businesses may soon start cutting back on jobs if the U.S.-China trade negotiations drag on. We've got the details. Stay with us. Stocks are little changed today after President Trump telling reporters that U.S. officials are having meetings and discussions with China.
It's moving along very well. Will the tariffs go into effect next week? Well, we'll have to see. But right now we're moving along. We're not discussing that, but we are having very major discussions. On December 15th, something could happen, but we are not discussing that yet. We're having very good discussions with China, however.
This comes after China's Commerce Ministry said that the negotiating teams from both sides are maintaining close communication. Joining us now is Francis Newton-Stacy, Director of Strategy at Optimal Capital. And we also have Jeffrey Kleintop. He's Chief Global Strategist at Charles Schwab. And Jeffrey, let me start with you. When we talk about the trade negotiations, lots of back and forth that we're seeing in terms of the market's reaction. How important do you think a potential trade deal is for the markets?
I think it's very important to the markets. You know, one thing we have not seen yet are job cuts. Businesses have pulled back on capital spending, trade has slowed down, manufacturing has hit a wall, inventories have piled up, but businesses have been slow to cut their staff. But I think that could be coming if we don't get a deal by December 15th. Businesses could finally decide that enough's enough. Inventory levels are back to where they were in 2009 at the end of the last great financial crisis. So businesses may begin to decide enough's enough, start to trim staff in order to bring those inventories back down. That could happen as soon as January. Very important since it's the consumer that's been holding up the global economy, and any signs of weakness in the job market could undermine that confidence.
For instance, Jeff talks about the potential for job cuts here. What do you think we'll see in terms of the reaction for the markets?
Well, I think that the trade deal is mostly priced in, and we're expecting a trade deal. I think that there will be a violent repricing of the markets if we don't get the trade deal on December 15th. And I can just say that from the headlines 2 days ago when Trump said, oh, I don't know if we're going to do a deal until after 2020, which I think he was playing hardball and bluffing a little. You know, the VIX just jumped so incredibly. And we've had record short VIX trades, and people have been short volatility. And you just see that jump so much, even though the market didn't sell off remarkably well. So we're waiting till December 15th. I think these guys are going to push it right up to the end. I think both countries have to do a deal. They just have to do a deal. In China, you've got the local credit markets breaking down pretty badly. In the United States, as you know, Jeffrey said, we have so many consequences coming, and Trump knows that. Trump's been taking responsibility for the markets hitting all-time highs repeatedly, and the market's going to tumble as well as other things are going to occur. And the longer this takes, the more damage is done as manufacturers start to move out of China and consider other Asian countries or India. And so both of these guys know that they have to get a deal. It's just about saving face for their countries and looking like they're not going to bend in the process.
Jeff, when we take a look at the markets, we were down to start the week, but again, we have slightly recovered. We're still off of our highs, but 11 of the trading days that we saw in November, the market hit new all-time highs. Where we stand right now, do you still think that there's reason to buy?
Well, I think there are reasons to buy certain parts of the market. One of the things I'm excited about is the new leadership we're seeing. The market made those new highs, not only old growth stock leadership, but on value stocks. Financials even have been leading. Even today, financials are one of the better performers. They bottomed somewhere in mid-August, and since then have been one of the leading parts of the market. That's maybe a second wind for this market that hasn't been appreciated. Value stocks in particular have been the ones that have helped us lift to new highs. They are not overvalued. They may have some momentum there, but we've got to see a few things fall into place because they do tend to be more cyclical than growth stocks. So it would be helpful, certainly, if we got a trade deal or if we got more fiscal stimulus. We've been hearing more of that from countries around the world. I've tracked about a dozen countries that have announced new fiscal stimulus measures in the last couple of months. That could be the handoff from monetary policy that could help lift growth in 2020.
Francis, what's attractive to you in this type of market right now?
Oh, I'm still sitting there with utilities, REITs, and energy, even though they've pulled back a little bit. I think that that's going to be the safer way to go into the end of the year. I think that we see some of the commodities, and we can even see a little bit of an uptick in inflation unless we have a credit event, and then so much more of that risk is going to be priced in. You know, obviously, tech has been the big story, but remember, the Dow Jones has doubled since the high in 2007. The S&P 500 has doubled since the high in 2007, and the NASDAQ has tripled because it didn't recover in 2007 from 2000. So this would be an obvious place for people who are a little bit contrarian to kind of, you know, trade the opposite side of the market, and it just hasn't happened. The volatility's been fairly muted apart from Monday because of the China trade deal. So it's going to be interesting to see how this falls into place.
Yeah, it certainly will be. And of course, we have the December 15th deadline, not too far away right now. So that will tell us a lot in just over a week. All right, Francis Newton-Stacy and Jeffrey Kleintop, thank you so much for joining me today. Well, coming up, a major production threat from Saudi Arabia is rattling global energy markets. A top expert weighs in to join us to analyze what all this could mean for energy. We've got that next. We're checking the closing price of oil right now. Crude is relatively unchanged, just a slight tick to the upside, up around 0.2% at $58.57 a barrel. Now this coming as Saudi Arabia threatens to boost oil production as some OPEC nations continue to defy the group's output limits. This is according to a report from the Wall Street Journal. Now OPEC and allied nations are meeting today. Joining us now to discuss what this could mean for the energy markets, we have Chris Midgley. He is the head of analytics at S&P Global Platts. And Chris, when we talk about the meeting that is underway right now, what do you expect will happen at this meeting? What will we get out of it?
Well, the news we're hearing today is quite exciting that they're talking about 500,000 barrels a day of cuts. So that's got the market a little bit more excited. That's speculation. That's why crude has rallied up a little bit. But it all really happens tomorrow when the non-OPEC members join and see whether they can all get an agreement. Right now, I think it's looking likely that we'll see an extension of the current cuts. Whether we'll get the 500,000 barrels a day cuts that we're hearing they're talking about, I think is going to be a little bit hard. I think as you mentioned there in your introduction, a lot of it is about compliance. Iraq and Nigeria. If they commit to comply, if Saudi continues to underrun, they've been running 500,000 barrels a day below their quotas today, then maybe we'll start to see the market believing that OPEC can hold back production and give the price support that the market's been looking for.
How important is the timeline? Because right now we could see the production cuts extended through June 2020. That's likely. If we see it extended even beyond that, how important is that to the market?
I think it's important to the market because at the moment people have this uncertainty about how much oil can come onto the market pretty quickly post June of next year. So giving that certainty that the market will stay tight, I think gives some confidence for the investors to go a little bit longer in the oil commodity. They've been very short. They've been worried, obviously, about the macroeconomic concerns. You talked about that before this session around the China-US negotiations. So the markets really has lacked confidence to get behind crude. Should it give them that certainty for 2020, then we'll see the investors taking a longer position. That will give the price support it's looking for.
What does this mean for prices if we do see production continue to be cut through 2020? How high could we see the price climb?
Well, I think this is a good time for them to give us the production cuts, partly because US shale cannot respond or won't respond because of capital constraints. We also see limited upside from many of the producers because of some of the geopolitical concerns we have in places like Libya and Iraq. So I think we could see prices pushing past the current resistance of $65, which is where a lot of the call options are placed, and moving then towards the next resistance point of 70. The fundamentals feel constructive to a sort of 65 to 70 world if they were to do those cuts. I'm still doubtful and fairly skeptical about that. I still think there's a lot of new production coming on in the non-OPEC countries such as North Sea, Brazil, Gulf of Mexico. So I still think the market is going to struggle to push to above 65, probably trading next year in the 60 to 65 range. But that's really the opportunity that OPEC has in this round of discussions to really give the market the support that it wants.
And Chris, big news really in the energy markets today, Saudi Aramco pricing at the top of the range. What is your reaction to this and what's the potential, what does this really say about the energy market right now?
Yes, I mean, pricing at the top of the range of an adjusted range, which originally was above $2 trillion. So they've revised it significantly, partly because the back of the curve has dropped by $8 a barrel since they've been talking about it. But I think what it shows is that people realize that there is still a need for oil out of Saudi Arabia. It's the cheapest production in the world. It is also the lowest energy intensity barrels in the world, and it can compete with any oil. And so I think it's a vote of confidence to recognize that we still need oil for a long time, even though there's a lot of talk about energy transition. So I think it's a vote of confidence. And that vote of confidence, I think, came also about the way they responded to the attacks on Abqaiq in Saudi Arabia, where they were able to commit to the customer deliveries and to get production back up and running. So I don't think this is, the current negotiations is not about the IPO particularly. No one's going to buy based on short-term prices. They're going to buy on what their long-term view of oil prices is.
All right, Chris Midgley, we'll leave it there. Thank you so much for joining me today.
Thank you very much.
All right, well, coming up, Beyond Meat wins a major retailer to start selling its plant-based burgers. Details on the potential impact to its bottom lines, we got that next.
Welcome back. Let's get to our next group of tickers today. We have General Motors announcing a landmark electric battery venture. Beyond Meat may soon be coming to a Costco near you. And we also have Warren Buffett's bet on RH is paying off after the luxury furniture retailer reporting its latest results. We've got the details on all three of those stocks. But first, let's get to General Motors. Now, the automaker is teaming up with LG Chem to mass produce batteries for its electric vehicles. The two companies are investing a total of $2.3 billion into the project. Emily McCormick is back with me. And Emily, when you take a look at this, we've been talking about the importance of electric vehicles for these automakers. What does this partnership mean for GM's business?
Well, what GM is saying is that this is really going to improve the profitability of those eventual electric vehicles that it's bringing to the market. And of course, it already does have one with the Chevy Bolt, but really trying to roll out 20 new models within the next couple of years. And this is really going to help accelerate that and bring this to the mass market like Tesla had done with the Model 3. So we're really starting to see competition rev up in this space. I mean, Volkswagen had said in June that it plans to spend $1 billion on battery production. They'd also initiated a joint venture with a Swedish startup actually in order to do that. And Tesla actually has a partnership with Panasonic for its Gigafactory in Reno, Nevada for its own battery. So the joint venture approach isn't unheard of in the electric vehicle space, and it's something that GM is now capitalizing on as well.
One thing, though, that a lot of these automakers are dealing with is the fact that they're trying to lower the cost of producing these batteries. There's lots of speculation just in terms of when they will be able to do that, the potential timeline. What do you make of that sort of race? Because as it stands right now, there doesn't really seem to be a clear winner there.
Right, and I think that's something that all of these automakers are trying to race to. I mean, now with the splash that Tesla had made with the Cybertruck and just the marketing that had come with that, we are now seeing GM really trying to ground break this new factory with, with their chip makers and with the battery makers in 2020, really then trying to release its own electric truck in 2021. So we are starting to see a definitive timeline emerge for a lot of these major players. Whether or not they'll be able to hit them remains to be seen, but at this point, all of these automakers are really seeing that this is going to be a really huge space, not only in North America, but of course in China as a major electric vehicle market, and that's where they're trying to play.
Yeah, and there's also just a lot of speculation, or I guess just question marks out there in terms of a lot of these automakers are focusing on electric pickups and just if there even really will be a large demand for that type of vehicle in the U.S. market.
Right, and that's something the analysts seem to be going back and forth on, especially after the Cybertruck. Of course, the design and the functionality is a big question mark as well. But again, a question mark, but an exciting new area for the electric vehicle market.
All right, Emily, thanks so much for that. Well, we are also watching Costco and Beyond Meat this afternoon. Now, the plant-based meat will now be available in select Costco stores nationwide. This comes as Beyond Meat stock is up roughly 10% year to date. Now, we saw a bit of a euphoria going back to the middle of the summer. The stock has kind of crashed back down to earth since then. Heidi Chung is back with me now. And Heidi, I know that you follow Beyond Meat very closely. This seems like a huge win for the company to be in Costco stores. What do you think?
Well, Shauna, it's certainly not a bad thing. Now, back in the day when Beyond Meat started announcing all of these different partnerships, the stock would essentially go parabolic on those days, right? We're not seeing that sort of stock reaction today, or even just recently as of every time we hear about these different announcements. But when we take a look at the chart, like you mentioned, the stock was up about 800% from its IPO price at one point in July, but the stock has since fallen more than 70% from those levels. And so if you look at that chart right there, it just looks like the stock hasn't essentially done anything since its IPO back in May. But Costco is a good thing for Beyond Meat because, one, you want to be able to you want to be able to get this product out to as many people as you possibly can. I mean, a lot of people already out there know about Beyond Meat, are very interested in trying it. Now, Costco is going to be selling it in a 4-pack, which includes 8 patties, and the suggested retail price there is going to be $14.99. But Costco is also a wholesaler, so you see a lot of smaller mom-and-pop restaurants coming to Costco to buy a lot of products. So the fact that it's going to be accessible to them is also a very, very good thing. Now, Costco is also carrying a competitor of Beyond Meat in some of its stores, and that is Nestle's Sweet Earth Awesome Burger. Now, we've tried that burger here on Yahoo Finance. We had the owners of Sweet Earth, Brian and Kelly Sweetie, come into the studio and kind of tell us about their the fact that they had been acquired by Nestle and what that sort of meant for them. But the Awesome Burger actually tastes very, very similar to the Beyond Burger because they both use that pea protein isolate. At the end of the day, like I said, for Beyond Meat, this is a good thing because they're just expanding their partnerships and making sure that a lot of people know their name and are able to try the product. But whether or not this translates into being available in all Costco stores, I think that will be a true tell. And Costco is not going to start selling one product and then stop carrying the other. So I think it'll be interesting to see what other companies they plan on carrying at their stores.
Heidi, I know you closely follow Beyond Meat. It's kind of been an incredible story. You talked about the fact that it hit an all-time high back in the summer. That all-time high was $239.71 on the stock. Right now, it's trading just above $73. When you parse through the recent analyst commentary, is there any hope or optimism that maybe Beyond Meat could regain and push above that 150, 200 level anytime soon?
Overall, analysts on Wall Street, all of their notes, even if they have a market perform rating or a holds rating on the stock, they're overall really bullish on the actual space. And they think that Beyond Meat has an advantage because it was the first sort of pure play in this alternative protein space. Everyone is essentially saying that this is not a hype, it's not a fad, it's not going away anytime soon. So while Beyond Meat is still not that attractive in terms of valuation, they think that the long-term growth story is there. So in terms of what the total addressable market is, now that's up for debate, but a lot of analysts say keep an eye on it. We could see it potentially go higher. Of course, there's more room to run, but we may not see it run up 800% above its IPO price anytime soon.
All right, Heidi Chung, thank you. Well, let's take a look at another stock that's on the move today, and that's RH. The stock is soaring despite mixed quarterly earnings results. Now, the company is up almost 12% so far today. Now, this company, which is formerly known as Restoration Hardware, beat on profit, but it did miss on sales. RH also announced plans to launch internationally in 2021, and that, they hope, could push its valuation towards $20 billion. Brian Chung is back with me. And Brian, it's interesting to see a stock up almost 12% when they reported mixed results. Do you think the street is more focusing on its future expansion plans and kind of canceling out the fact that they did miss?
Yeah, well, it's the expansion plan plus the margins that they projected for the next fiscal year. So keep in mind, as you mentioned, they did miss on the top line. They reported earnings of $677.5 million. That did miss the street's estimates of $680.1 million, but they did beat pretty handily on the bottom line. They reported earnings per share adjusted diluted of $2.79 versus expectations of $2.27. But look, this is a company that's had a lot of bottom line growth when you consider that $2.79 on the bottom line represents a 74% year-over-year change versus what they reported in the same quarter last year. And they're saying that the good times should continue to go on. So they said in 2020, they're actually projecting at least 200 basis points of operating margin expansion. It seems like analysts were really interested in that and were really grilling the executives on the call last night after they reported these earnings about how exactly they would do that. But at the end of the day, RH is a very interesting company. They have a very eclectic way that they report their earnings. And actually, interestingly, in their release yesterday, they said that the company will do well in what they call a post-WeWork era. And they actually used the failed IPO as kind of a straw man to claim that investors are sobering from the idea that growth without profits warrant these high valuations. RH saying, well, we're profitable right now, so we're being rewarded for that. Kind of an interesting, weirdly non-related factoid that they threw in there. In addition to that, the CEO also said it's becoming clear that retail brands birthed online desperately need a store lifeline to survive. So he's saying that those online brands that seem to be so hot right now, they're saying brick and mortar is dead, that maybe that death is too early to call so far.
Brian, another thing that stuck out to me in RH's report was they did mention China tariffs just in terms of how it could potentially hit their business. And they were saying that they actually don't expect it to hit its guidance. But they did say, though, that they had gotten some pricing accommodations from vendors, but that they also have raised some of their prices because of this. This is just another example to me of the fact that the U.S.-China trade war, it's really having an impact on the American consumer.
It is having an impact, but I think for a company like Restoration Hardware, for that matter, any other type of luxury goods, it's not going to be as impactful on these companies because they can just eat the margins. When you're selling a bed frame that's already $2,000 to $3,000, you can eat a little bit of that margin and it wouldn't hurt the investor too much because those wealthy clientele that you're targeting are not as price sensitive. But look, at the end of the day, this doesn't appear to be scaring investors. When you think about Warren Buffett, for example, putting in 1.2 million shares into this company as of a disclosure disclosure that we saw from the SEC on November 15, that announcement sent the stock up by 8%. So regardless of how you look at it, this company has been pretty well hedged against the trade risk when you consider that year to date, despite all the trade headlines that we've had in the last 11 months, the stock is up 95%. That beats the S&P at 24% and well beats competitors like Ethan Allen, which have actually contracted by about 3.5% during the same time period.
Certainly has. They're doing something right over at RH. Brian Chung, thank you. Well, coming up, investors are eagerly awaiting tomorrow's November jobs report. A top economist joins us with his preview on what we should expect, and that's next. The Street is bracing for tomorrow's jobs report that will be out at 8:30 a.m. Eastern Time. Now, economists are expecting, this is according to a poll by Bloomberg, that they're expecting 184,000 jobs to be added last month and that the unemployment rate will hold steady at 3.6%. Well, joining us now for more on this is Anthony Chan. He is a former J.P. Morgan Chase economist. And Anthony, when you take a look at what the expectations are, one thing that the Street has to keep in mind is the fact that we had the ADP report out yesterday. It was the weakest report in 6 months. What are you expecting tomorrow?
Well, I'm expecting a decent number. I'm looking for about 160,000. I know everybody got spooked when they saw the ADP report, but I've done some research on that report. And first of all, it's very noisy. It's got almost a 70,000 standard deviation, which means that when you look at the ADP report and you look at the first print of the employment report, you're going to get a lot of volatility. But I found something very fascinating, and that is that when the ADP report is very weak, below 100,000, guess what? The employment report comes in much, much stronger. Because historically, the ADP report is a little bit stronger than the employment report, but not when it comes in very weak. And remember, we got the GM strike, which was going to add another 46,000 or so, roughly. And then you have the fact that the ADP report came in weak. So all those things tell me you're going to get a good number. And don't forget, the initial claims are telling us, don't even focus too much on tomorrow's number. Look at where the trend is going, and the initial claims are suggesting we still have a pretty good head of steam on employment over the next couple of months.
Anthony, when we talk about where the labor market is heading, one thing that stuck out to me was earlier in the show we were talking to Jeffrey Kleintop, and he was warning that if we don't get some sort of deal between the U.S. and China, we could see job losses here in the U.S. What do you think of that?
Well, there's no question that when you look at the two most important economies, China and the U.S., it's going to not only have an impact on the world economy, that's 40% of world GDP, but it's certainly going to have an impact on us. And you've already seen weakness in capital expenditures. So all these things would suggest that business sentiment will continue to sink lower and lower if we don't get some sort of a trade deal. My suspicion is that we'll get at least a small trade truce, and we will be able to forego the negative effects of a loss of employment.
Anthony, what about labor force participation? Last month, we had it the best reading since back in August of 2013. Do you expect another uptick here this month?
I'm a little bit nervous about labor force participation rate. I think you can see it slip a little bit down to maybe 63.2. So just maybe a tenth of a percent, a little bit lower, because it was so strong last month. I still think the trend is positive. So I would say over the next couple of months, you will continue to see the labor force participation rate inching higher. Again, that's a little bit of a noisy number too. Mm-hmm. But the trend is positive, but you might get a little bit of an offset or a little bit of a break tomorrow.
How about average hourly earnings, just because we know that that is something that the street watches very closely and has had an impact in terms of the market's reaction in the previous couple of reports?
I think it's pretty healthy. Right now, I would expect average hourly earnings to rise about 3% year over year. And by the way, inflation is not rising either on the core personal consumption deflator or the consumer pricing. They're not rising. It's not rising at 3%. So a 3% year-over-year gain in average hourly earnings is not bad at all. I mean, we all wish it was 4%, but it's certainly positive, and that's one of the reasons why consumers continue to spend.
Real quick, just in terms of what the Fed could possibly do, not so much next week at its meeting, but really looking ahead into 2020. The market right now is pricing in about one cut. What do you think that we will likely see from the Fed?
I think that right now the Federal Reserve is laser focused on what's going to happen with some sort of a trade truce. Mm-hmm. If that situation were to unravel and we have nothing and business sentiment starts to slip, then I think we easily get not only one, we might even get two. But if we get some sort of a trade truce and the economy is doing well right now, it looks like the fourth quarter is going to give you a number of in excess of 2%. Right now, there's no reason for the Federal Reserve to do anything. They're taking care of that repo issue by adding reserves or purchasing Treasury securities. So they don't really need to cut rates at the moment.
All right, Anthony Shan, thanks for joining me today. Well, coming up, why the holiday shopping season may be even bigger for Apple than many are expecting. We'll explain all of this next. It's time for our last tick of the day, and it's Apple. Now, Citi raising its price target on the tech giant stock from $250 to $300. It also reiterated its buy rating. Now, the analyst there at Citi also noted that the holiday season will be different for the tech giant this time around. Yahoo Finance's Brian Chung, Emily McCormick, and Heidi Chang are all back with me. And Brian, let me go to you first. We've heard lots of talk just in terms of an increase in demand for its AirPods and also for the Apple Watch. What's the potential growth there for Apple's wearables segment?
We'll look no further than what we saw this Black Friday. The demand for the AirPods, and specifically the new AirPods Pro, the noise-canceling model, shows that this is really a big piece of growth for the Apple story. When you consider the fact that also they saw a 54% revenue increase in that division in the fourth quarter, that means that it's a very favorable, very hot part of their revenue stream. Keep in mind, despite all the tariff issues, Apple stock's been up 68% year to date. That does beat the S&P 500 at 24% during the same time period.
Heidi, do you think that this will enable Apple really just to, I guess, not be as reliant clearly on iPhone sales? They have really been pushing their wearables business. They've been pushing their services business. Looks like the company's taking a step in the right direction.
Yeah, Shauna, and I think rightfully so, because as we've seen Apple say time and time again, they have to stop being so reliant on just the sale of its hardware and iPhones. Now, like Brian mentioned, these AirPod Pros are seriously all the rage right now. Every single analyst on Wall Street is super excited about it, saying that, finally Apple is catering to people with different ear sizes, which seems like a long time coming, to be honest with you. But I'm excited to try them out myself, and I know a lot of people were super excited to buy them when they were launched.
Emily, real quick, you've gone through a ton of analyst notes recently on Apple. From what you've seen on the street, is that likely the sentiment here, that they don't think that maybe Apple will be as reliant clearly on iPhone sales, and that it could really surprise to the upside when it comes to wearables this season?
Well, what Citi is actually saying is that the wearable segment could by itself surpass $10 billion in this quarter, so really topping that double-digit billions dollar sales. So a lot of growth potential here. Also, just the fact that Apple has more than 1 billion connected devices around the world means that they're able to actually connect all those with services and really bring on a more recurring revenue stream.
They have a very strong ecosystem, that's for sure. Emily, Heidi, and Brian, thanks so much for joining the show today. Stay right here. The final round is next.
Everyone, I'm Jen Rogers in New York, and this is the final round. Stocks treading water here with healthcare and consumer staples, the market laggard.
Now, Miles, other than this, as initial claims coming in better than expected ahead of tomorrow's big monthly jobs report. We'll have more on that in the market action coming up in just a bit.
Plus, Rent the Runway President Maureen Sullivan joins us to discuss what's next for the company and its big deal with W Hotels. And Goldman goes all in on Nike. It's our call of the day. Plus, Ducati's going from the racetrack to the bike lane with its newest product. It's not exactly what you're expecting. We'll have more on that coming up. With us now, Yahoo Finance's editor-in-chief, Andy Serwer, to talk about all of today's market action. Stocks right now reversing earlier losses. Oh, well, the S&P 500 pushing higher in the final hour of trading. There goes the Dow. There goes the Dow. Just did it. You know what's helping on the Dow? Nike and Apple. We're going to be discussing both of those. Financials, materials, technology, really helping on the S&P 500 here to the tune of. We're back to this. We're due for this, though. It's fine. It really is.
I agree.
Now I feel like I'm already all about the jobs report. Are you?
Yeah, I mean, of course. I think the market is as well. If you look at what's happening, there's really no conviction out there, which isn't a total surprise. But I think to the point of what to expect from tomorrow's jobs report, to some extent, we have a little bit of the give back from the GM strike, so that might make the number a little bit funny. Some analysts are concerned about the weather, as Black Friday changing things. But ultimately, I think that it will likely just affirm that we know where we stand as we come towards the end of this year and this decade, where the economy is doing well, not amazingly. The labor market is doing fine, not as well as it had been doing. Wage growth is okay, not as good as some would hope. But there shouldn't be too many surprises because, Andy, I think the market has looked at all of the different surprises and anticipated many of them, and they just simply haven't come to pass.
Well, you know what's surprising me today?
What?
That you guys haven't even talked about the most important news of the day. Seriously, it's a historic day in this country. The Speaker of the House announced impeachment proceedings against the President of the United States, and yet the market completely shrugged it off and ignored it. Now, of course, that's because it was widely anticipated, and we've been leading up to this point. But still, it's pretty amazing. I mean, if you had told me, a couple of years ago the president was going to be impeached and it was a non-news event, I would have been shocked by that.
It's kind of something that Michael Lewis told us, was that on Tuesday he was here?
Yes.
And he said, he wants to work on things that aren't about Trump, but he can't find himself sort of justifying that project. And I've been thinking about that for the last 2 days, because to your point, Andy, it's like the market actually is thinking about things that aren't Trump, but it might be one of the only spaces where you see the world kind of cleaving those parts, right? I mean, the market is able to look at things that aren't explicitly Trump related and react to them, but almost nowhere else does it feel like we can act in any way or think in any way without that vacuum being filled by Trump.
Well, we can't do it in sports
anymore.
Right. We can't do it in
entertainment.
Entertainment. No, absolutely.
Everything has been politicized.
Right. Yeah.
I actually have that decade story that I just wrote. I wrote one 10 years before that, and I just sat there and typed it. And with this time around, this decade, every sentence I wrote, I was so conscious of, is this going to reflect any sort of political bias?
Right.
So conscious of that, which was so different from 10 years ago, which was a big change over the past decade.
See, I like when the market doesn't do anything. We can have these sort of wider conversations about what we're thinking, because we don't have to worry about stocks.
Thank goodness we didn't talk about trade, because
well, another one, right? But
we can't.
No, I
Except
can't.
we do, but we have to.
Well,
but
not on this program. Not on this program.
This is a trade discussion-free program.
Yeah, we don't like getting whipsawed by it.
No.
But to Andy's point, let's get more on what's going on in Washington, D.C. House Speaker Nancy Pelosi did indeed announce the next steps in the ongoing impeachment process, asking House committee chairs to begin drafting articles of impeachment against President Donald Trump. Yahoo Finance's Jess Smith is in D.C. with all the details. Jess.
Well, Speaker Pelosi says the president has abused his power, put the integrity of the elections at stake, and undermined the U.S. national security. And because of that, she instructed the Judiciary Chairman to go ahead and begin drafting those articles of impeachment. Those charges could include abuse of power, bribery, obstruction of Congress, obstruction of justice. Republicans have argued that this is politically motivated, that this impeachment process is very partisan. A reporter asked Pelosi today if she hated President Trump, and things got heated. Let's watch.
This is about the Constitution of the United States and the facts that lead to the president's violation of his oath of office. And as a Catholic, I resent your using the word hate in a sentence that addresses me. I don't hate anyone. I was raised in a way that is a heart full of love, and always prayed for the president. And I still pray for the president. I pray for the president all the time. So don't mess with me when it comes to words like that.
President Trump responded on Twitter saying in part, Nancy Pelosi just had a nervous fit. She hates that we will soon have 182 great new judges and so much more, stock market and employment records. She says she prays for the president. I don't believe her, not even close. So looking ahead to the next steps here, on Monday, the House Judiciary Committee will hold its second impeachment hearing. This time, they'll hear from the lawyers that were involved in the House Intelligence Committee's investigation when they were handling the first part of this impeachment inquiry. So we'll be watching that hearing very closely, 9 a.m. on Monday.
So just a little bit more on the timeline. I mean, when do we expect a vote? I mean, is this before Christmas? Is it before New Year's? Any sense of that?
Yeah, it's not quite clear yet. But kind of the talk around here is that it would be sometime before the end of the year. And we know that the House is scheduled to be here through at least the 20th of December. Of course, that could change. The Senate has kind of blocked off all of January from their calendar. So we'll be watching to see if we get any kind of guidance on when that could happen, but presumably before the end of the year.
Jess Smith with the very latest from Washington, D.C.
All right, for more on today's stock market action, let's go to Scott Gamm. He is live on the floor of the New York Stock Exchange. Scott.
Hey there, Miles. Well, we wanted to bring you news about Saudi Aramco and their upcoming IPO. The stock, now we can say, pricing at the equivalent of $8.53 a share. That would mean it would raise about $25.6 billion, making it the largest IPO in the world, more than the $25 billion that Alibaba raised when it went public back in September of 2014, right here at the New York Stock Exchange. Now, that would push Saudi Aramco's valuation to $1.7 trillion. That is less than the $2 trillion that officials there had hoped to get, but still pretty close to that goal. Now, the listing is due on the Riyadh Stock Exchange later this month. They're going to be listing 3 billion shares. It's about a 1.5% float. We, of course, have been awaiting news on this IPO for really years now, and more details are starting to trickle out. Now, staying with energy for a moment, there's also an OPEC meeting going on right now in Vienna, Austria. Investors are waiting to hear if the cartel will extend those production cuts that are set to expire in March of 2020. You've got West Texas Intermediate, that's the U.S. benchmark for crude, up again today. It's really been up all week, every day this week. Prices are now above $58 a barrel. Still range bound, you could argue. The high for 2019 was back in April at about $66 a barrel. But remember, OPEC and non-OPEC members have been cutting 1.2 million barrels per day of oil so far this year. And again, that deal is set to expire in March of 2020 unless the cartel could agree to extend those cuts at that meeting that continues tomorrow. There is talk that perhaps an extension would be moved to June of 2020, so you'd get a little bit more runway there, guys.
All right, Scott Gamm live on the floor of the New York Stock Exchange. Coming up here on the final round, we'll have stocks to watch in this market, but first let's take a quick look at where the European markets closed on this Thursday.
Now let's take a look at some stocks on the move today. Slack, after the office messaging platform, lost 2 cents per share in its latest quarter, smaller than expected loss. A revenue beat predictions. The company also raised its full year outlook. Tiffany, after the jeweler reported earnings of 65 cents per share for its latest quarter, falling 20 cents below estimates. Revenue also missed analyst forecasts. And Apple, after Citi reiterated its buy recommendation on the iPhone maker, raised its price target on the stock by 20%, taking it to $300 from $250 per share. In separate news, an analyst at TF Securities is predicting, brace yourselves, that Apple will abandon the charging plug on its highest end phones by 2021. This would make it a completely wireless experience. So remember when they got rid of the headphone part?
Yep.
Well, and then that's created everyone getting the
Well, there's been this would be the fourth movement.
AirPods.
Or the third movement.
See if you can track this.
So movement one was going from the old charging port to the lightning cable.
Okay.
So a USB kind of.
Yeah, there was the wide
the
one.
wide thing.
Yes.
Then you went to no headphone jack.
Yeah.
And now you'll go to no cords at all.
You know what's so? I mean, just think of hotel rooms and airports and all the
Everyone has to
USB
buy
ports
stuff.
that they put. Yeah, and you have to buy more stuff, and then all the stuff you have to throw out. And actually, you know, it really is a thing. Like all the waste, the electronic waste, the gear that it's a huge environmental thing. Huge. I mean, that is a lot of worthless stuff. In fact, I have a drawer. Probably all do. Filled with all that stuff I haven't really thrown away. I need to throw it all away.
I have that drawer too.
Right. Think about that.
You have that drawer too?
Box.
You have a box.
But why don't
One
we
of those
throw that
cloth
stuff
boxes.
out? Why, because you always think, oh, I might have an old one that I still need to charge. I got, I'll keep it.
I might need to access
Right.
something.
But as you know,
right.
the problem with those storage places is there's one thing in there that you might actually need one time.
Right.
Then you
And
go in and you can't find it.
I know
because
that.
It's too cluttered.
God, we are
I
all
still have
just
like
the same.
CDs in there. Why
Okay,
do
I'm
I
not
have
quite that bad.
CDs?
I'm not ready to get rid of the cord.
I'm ready to cut the cord.
After the pads, it's going to be that other thing where we interviewed those people where your battery charges through the air.
Yeah, and this would be like from your LSD prediction the other day. You'll be able to like charge your phone with your own energy. This is Jen's prediction.
I forgot the Jen Rogers LSD prediction.
Oh, you know, I'm trying
that was a
tap
big
it.
one.
Going to
Just like
be
hold it
a
up,
decade
and it's like going to
of
charge your
psychedelics.
phone.
Also in that City note, it's another big Jen Rogers trade in there. They're just selling a ton of AirPods. And now they're more expensive. Now they're $200 a pop.
Yep.
And you lose them at just as high a rate.
But you have the string now.
Yeah,
You're going
the
full
string.
circle.
The Nordstrom string,
Yeah,
that's
the
right.
string for
That's
the
right, $60 string.
It's clever how Apple creates its own demand. So
You could
get rid
imagine-
of
That's all
the
life
cord,
But if
now you need the
had
AirPod.
one little product off of that, you'd be a multimillionaire. Like if you just had one thing that hit it, you'd be set.
Yep.
I'm not ready for it.
Okay.
Coming up, is it you?
I
It's
got
you.
this. You got it.
Gen trade.
No, it
Another
At the
Gen
runway,
trade.
President Maureen Sullivan will join us to
It's a Gen
discuss
trade.
what's next for the company and its big new deal with W Hotels. But first, let's take a look at some of the trending tickers here today on Yahoo Finance.
Hate checking luggage, Rent the Runway. The clothing rental company is launching Closet Concierge at select W hotels around the country. Beginning today, guests at W Aspen, South Beach, Washington, D.C., and Hollywood can choose 4 styles to rent for their stay at $69. Maureen Sullivan is president of Rent the Runway, joins us now to discuss
How's this work?
this new initiative. How's it work?
Yeah.
Okay, well, I'll let her explain
Yeah.
it. I think I have a good idea, but I want to know.
Andy,
Yes.
you probably travel a lot.
Yes.
Haven't you always dreamed of just walking on the airplane
Yes.
without your fancy
Okay,
clothes?
I know where this is going, and I kind of like this. Go ahead.
I know. I
Yes,
think
it's a fantasy.
It's a fantasy of just like this, bag-free
Yes,
travel.
right.
And W is a super innovative company, and they came to us, and this has really always been a dream and a big request from our customers to have your dream closet ready for you at your
clothes
hotel
are there.
room.
That you.
The clothes are there. So you
Okay,
check
I
into
like
your
this.
W hotel room in
I really
Aspen
like
or
this.
South Beach or West Hollywood, and instead of it being kind of that empty, boring closet in your hotel room, it's filled with kind of your dream wardrobe of what you want to wear in your weekend in Aspen or your time in West Hollywood or your business trip to DC.
And you don't have to pack, and you don't have to unpack, and you don't have to lose the clothes and forget some. Oh my God.
Totally. So
You get it now.
I get it. I like it. I like it.
I'm
sold.
sorry that they don't have men's clothes.
Oh,
There was
not quite
There's a
reasonable.
catch. I have to cross-dress.
Oh, exactly. Only Jen can take advantage of this.
So I already have like my little hacks where I have sent things ahead. I
Oh,
mean, I
yeah.
know. So I was kind of thinking, who is this for?
Yeah.
Because the unlimited customer right now, you can send clothes ahead. I've done that, sent them to a hotel, then I just pack them up and I send them back.
Yeah.
Is this to try and introduce people and then hope that they're going to become an unlimited member, or do you think unlimited members are going to do this?
I think we're going to see both. I think it'll be very interesting to see. I think we have a lot of unlimited members that would like even more inventory. So you can obviously add spots to your account, as I'm sure you've maybe done or know people that have. But just this idea of the exact 4 things that I want to wear on that trip and making sure that it's there and turnkey and as easy as possible. But I think the other piece of this is while there are, many women that understand how powerful it is to have your closet in the cloud and kind of the freedom and convenience and hopefully value that creates for our customers, we think this is a really clear use case for people who maybe haven't tried rental to experience the ease of rental. So we do think that it'll be a great catalyst for new customers when they go to book a W hotel stay and they see that this is an option for them. It's a great kind of risk-free way to try. And maybe they'll overpack and they'll be a little nervous, but hopefully the experience will be so magical that they'll realize this is something they should be doing in their everyday life.
Now, going back to the core service, a couple months ago, you had these, I guess it was the warehouse switch out to New Jersey from New York. There were a few hiccups around that, but a few months have gone by. Yeah. If you think back to what's happened to this company in 2019, the steps you've taken, the growth you've seen, where do you feel like you guys stand as you head into 2020 and you start building beyond, I think, the core service that most people know Rent the Runway
Yeah,
for?
I mean, it's just been a year of incredible growth. I think we built the subscription service to hopefully have a role in her daily life, but that was an aspiration. Like we hoped that she would depend on us, 365
I'm in my lobby every
days.
day, and I'm pretty sure they do.
They do. So, that is such an amazing opportunity that we have. It also comes with a lot of pressure and that we have become a utility in her life, and getting dressed as women is something that we have to do on a daily basis. So, obviously it was a huge learning moment for us as a company, and I think it just shows the power of the role that we're playing in our subscribers' lives. And for us, the commitment to having a perfect customer experience always has to be front and center and will be the most important thing for us continuing to grow at the pace that we want to.
Will there be men's?
Yeah, I know. I was just going to ask that. I know you get asked that all the time. So why do men work? I mean, for you guys?
We just wear the same blue blazer every day.
This is one point. Well, men.
I got like 2.
Here's a stat. Women, since casualization of the workforce, women used to spend 2.5% of their take-home pay getting dressed for work. Now, since we can all kind of wear whatever we want to work, we spend 6.5%. So there's a greater tax for us as women. Maybe you spend 10% because you're so well dressed, but most men can kind of get by with wearing the same thing more frequently. And as women, unfortunately, we're still judged for how we show up and our visible appearance. And we just feel like we have a massive opportunity to serve women and really solve this problem for them in their daily life and make getting dressed as easy and simple and fun as it should be.
So if we spent more money on it, if we kind of were more sartorial, then it would be more worth serving.
You need to do their shoes. That's where all your money's going.
Oh yeah, my shoes are. I'm wearing bad shoes today.
Yes.
Sensitive subject.
Maureen shoes. Those are good shoes.
As a subscriber and a user, and I know lots of people in my building, all the bags get mixed up all the time because there's another Jennifer, and I'm like, do you have my bag?
She does that on purpose.
Yeah, she does. Still, when I have conversations with other women, they're like, how do they make money? How are they making money off of us using this so much? Is it a process where you're really making money on the people that don't use it as much, like the gym or the subscription that people have, and you're losing money on everyone in New York City that's like going to the store and there's a line in the morning? I literally like trying to figure this out.
I think the fundamentals of our business are we have to be really, really good at turning inventory and as many times as possible and having it be in perfect condition every single time that it goes out. And we've gotten really good at doing that over the past 10 years. And inventory is an asset for us as a company. I think for a lot of companies, it's a liability. For us, it's an asset. And I think we are very fortunate that we serve very different types of women with very different tastes and different styles and brands. You know, the brand matrix, we work with over 600 designers. So, you know, I think there's a diversity in how people want to use the service that is helpful for us as how we think about how the business is going to continue to scale. But, you know, the power of playing a role in someone's daily life and having a role in a fundamental daily behavior. I mean, the engagement that we have is like nothing I've seen in my business career. And, you know, I think we believe if we are that indispensable in her life, then that's going to be an incredible lifetime value of that customer that we are excited about.
And then just a part of the business, which I don't know how large it is, but I suspect it's somewhat smaller, is the actual buying of the stuff. If you want to buy something, is that a space that you guys are more interested in, or is that like, oh, we have it, and some people do it, but it's not a thing you really want to build out where it's just more traditional retail?
Yeah, I mean, we had to build that capability because women would rent things and fall in love with it and like not want to send it back. So we, you know, call it keep it forever. And if she wants to keep what she has at home, we let her keep it. So that's kind of the only way you can buy from the Rent the Runway, you know, unlimited closet today. I think that long term, you know, we believe that a huge portion of the closet is going to be rented, but people will continue to buy things. And I think you'll see us continue to evolve around how do we are going to curate and make sure that she is finding the brands that she loves, the designer styles, the silhouettes that work for her. So, you know, I think there's a lot of things that we could take on in the future. But for us, what's most important is we've created this new behavior of clothing rental. I mean, that didn't exist. And it is a normal behavior that women all across the U.S. are doing that is, you know, not a niche behavior. It's a new way to consume. It's a smarter way to get dressed. It's more sustainable. It's more cost effective for that customer. So we want to make sure that behavior, we all know how to buy things. Right. We were all trained growing up to buy things. I think the consumer is saying, do I need all this stuff?
Right.
You know, 80% of our closet is worn 3 times or less. Like we don't, you know, thank goodness for Marie Kondo. Like she reminded us all that more things don't mean more happiness.
Is she a customer?
You know what? We have dressed her for a couple. She had that great TV. She did our
Makes
good
sense,
Netflix
right?
show.
Yeah.
So yeah, we love her.
Yeah,
She's, you know, a huge proponent of a more sustainable way to live.
Right.
I think you have a customer here.
I would do it. I would totally do
We'll
it.
put you in a pilot.
I would do
I'll
it.
remember that when we
can
get
rent
our
a
act
suit
together.
at Men's Warehouse, Andy. I just don't think it's a suit that you want to rent.
He wants our fashion curation.
I need
He
it
wants
bad,
the
believe me.
runway
Thank you, Mom.
version.
I got that.
Those are expensive. I've had to do it.
Maureen Sullivan, president of Rent the Runway. Great to see you.
Thanks for having me.
All right, coming up here on the final round, Jared Tingle and John Henry of Harlem Capital will join us to talk about their big new funding round and how they're helping women and minority-led businesses right here in New York City. We're back with that right after this.
Harlem Capital began in an effort to democratize entrepreneurship for women and minorities, and it seems the firm is on the right track. Its debut funding round recently closed with $40.3 million, making Harlem Capital one of the largest venture capital funds with a diversity mandate. And joining us now to discuss what's next for the firm is Jared Tingle, Harlem Capital's managing partner, and John Henry, a partner at Harlem Capital. And we've had you in before, so it's great to see you back now, kind of having this closed.
Absolutely.
So, you know, it's been a year of IPO intrigue.
Absolutely.
And I'm kind of curious how the funding went. Like, was it easy to go out and raise money right now for you guys?
Yeah, absolutely not. And one thing that drove us personally is this 2019 has been a record year for IPOs. And those obviously generate so much liquidity in the market, but the percentage of that capital that went to women and minorities were surely a fraction of it. And so we are really excited and elated to now be in a position where we can set up diverse founders to capitalize on any future IPO waves. But I will say, as far as how it was on the fundraising trail, you know, diversity, I think, can be seen as a fluffy category of investing. And so it was a slow roll at first, but once we got some premier top-tier institutional backing, it's kind of paving the way, and I think it's a turning point for how people will view diversity-focused investing in the future.
So Jared, what is the roadmap going forward? I mean, how are you planning to use your business model?
Yeah, so I'll be honest, we've been laser focused on fundraising, but unlike some funds, we were actually investing while we're fundraising. So we've always been sourcing opportunities, meeting people, and thinking about where we want to go. But now we're super excited to have this behind us. Now we're focused on just finding the best, top, talented entrepreneurs wherever we can, whether in New York, whether in LA. We just really want to get it done. So we have a strategy of investing in 30 companies. We've already done 8. So I want to do 2 more this year, and then 10 in 2020, and then 10 the year after that. And one thing we want to do as well is we've had a really strong media presence, but not a strong physical presence. Henri and I were in Harvard Business School in Boston, so happy to be back here. Just want to have a dominant presence in New York, get people together and build a community.
So you're putting the call out.
That's right.
Here.
That's right.
Yes. Send us deal flow, everybody.
You know, when you guys look at the landscape, and you mentioned New York, LA, Jared, we've heard a lot from founders about, you know, Nashville. Everyone knows Austin is basically San Francisco South at this point. Geographically, what are the opportunities that are interesting to you guys? You know, you were up in Boston, but you came to New York. Everyone kind of knows the tech scene here, but is there other geographic areas that you see really up and coming right now?
Sure. So we believe that talent is distributed equally, but opportunity is not. So there are very qualified entrepreneurs all over the country. The issue, though, is that in VC, people tend to aggregate in clusters. And so Silicon Valley, Bay Area, New York, Boston, LA, there are where the capital has been and where people tend to locate their companies. There's great universities around there, so you can really build a business and do well from that. So we are focused on looking all across the country. One thing that helps is that we have a partnership with Techstars, who actually has accelerators in a lot of the first and second tier markets. But one thing we do want to keep in mind is that even if we find a great entrepreneur in Nashville, in Birmingham, you still have to be thoughtful around when they go to raise their next round of financing, they'll eventually have to work with people in the Bay Area or in New York. So you have to think about what will be marketable to these markets as well.
Right, like Steve Case is doing some of that work as well, right?
Exactly.
And an interesting anecdote around geography is valuation. So folks say that the true valuation of the business is coming from the Midwest, and then as you go out to the coasts, the cost of living and what have you drives these valuations up. So what happens when you can find an undervalued business in the Midwest, and then in their later rounds kind of get that pop? That's what we call the inclusion alpha, which is what we're very much seeking.
So,
yeah, seeking that alpha.
What themes have you excited right now? So besides the geography and getting different places, what is it? You know, D2C, is it food, is it health, is it fintech? Where do you think you're going to be able to deploy most successfully?
So we're focused on diversity as a business case, and that is where we start. And it was funny when we started fundraising, we actually did get some pushback. Okay, but what sectors are you focused on? And we said, no, the problem is so bad. Women and minorities only receive 3% of VC funding. We can't afford to be very focused on industries. No one even knows where these entrepreneurs live or where they're starting companies. We're actually a thought leader. We've done a report. We actually found 200 Black Latino founders that raised over $1 million. But to this point, no one's ever done it. So we think you first have to map where the opportunities are, and then you can get a focus from there. But as a strategy, though, we are a generalist firm. So we invest across all industries. We do stay away from things that are very capital intensive or things that require a ton of domain expertise. Where can we get up to speed with ourselves or with our network? But from there, it's really just trying to find the best and brightest women and minority founders and really trusting them to find and build a team and really scale their business.
And kind of building on that, in terms of what excites us, the majority of M&A activity is really driven when you look at the numbers by B2B versus consumer companies. And so the enterprise companies are not necessarily as high ticket of acquisitions, but it's the majority of the M&A in the market. Whereas consumer exits, if you look at the graphs, they seem outsized, but it's really being driven by the IPOs of Uber and Lyft and what have you.
Right.
And so we're also thinking about our portfolio from a consumer versus enterprise standpoint and what percentage do we want of each.
Right, and so you do have consumer and B2B right
We're targeting 60% B2B, 40% consumer.
Well, congratulations on getting that funding behind you. Hope you'll keep us posted as you move along. Jared Tinkle and John Henry of Harlem Capital, great to see you.
Thank you so much for having us.
All right, and coming up here on the final round, we'll have more. Plus, NASDAQ CEO Adena Friedman will tell us why investors are pushing back into equities as 2019 comes to a close. We're back with that right after this. Welcome back to the final round here on Yahoo Finance. Miles Alden with you in New York. I'm joined as always by my co-host Jen Rogers, also joined today by Yahoo Finance Editor-in-Chief Andy Serwer. Let's take a look where we stand right now. 24 minutes to go in the session. Not a whole lot going on. All three majors are in the green, though none of them with a move larger than 0.2%. For more on today's market action, let's go to Scott Gamm live on the floor of the New York Stock Exchange. Scott, kind of a quiet session. It seems traders are waiting for tomorrow's jobs report.
Yeah, that's right, Miles. Although with about 20 minutes left to go in today's session, we're watching a couple of retail names, including the plunge in J.Jill shares, down over 27% after J.Jill reported a really disappointing quarter, including a 7% decline in comparable store sales. And I think the big worry for investors right now is the fact that the CEO, Linda Heasley, is stepping down and leaving the board. Current board member James Scully has been named interim CEO as the company continues to search for a permanent CEO. And it was almost 3 years ago that J.Jill went public right here at the New York Stock Exchange. With today's decline, the stock is trading a little bit over $1 a share and is down more than 70% so far this year. That IPO, by the way, was back in March of 2017. And then we also want to bring you up to speed on what's going on with Tiffany shares. The stock is roughly flat, even though it reported an earnings, revenue, and same-store sales miss for its most recent quarter. But clearly investors shrugging off this news just because it was just about a week ago that Tiffany agreed to be acquired by LVMH for just over $16 billion. Now, when that news was announced last month, the stock surged, and the stock has really been able to maintain most of that gain. The stock has been pretty stable over the past week or so since that acquisition news, guys.
All right, Scott Gam, live on the floor of the New York Stock Exchange.
The markets have spent parts of 2019 making record highs this year, and if there's one person looking things over, it's NASDAQ CEO Adena Friedman, and our Andy Serwer sat down with her for his latest episode of Influencers. Always a good person to talk to.
Yeah, Adena's really, I mean, first of all, she's a black belt in karate. Yeah. Okay, so I never mess with her.
Not like mental karate, like literal
She
karate.
would just chop me up or whatever they do. I'm not going to fight her. But she's a fascinating person and just got this really interesting perch running NASDAQ. So she sees IPOs, she sees the strength of the economy, she sees issues when it comes to the U.S. government trying to block Chinese companies from the capital markets. So it's a pretty interesting conversation. And I also talked to her about equity valuations. And, you know, she was making this point to me that low interest rates are kind of an underappreciated force when it comes to keeping stock prices high. Here's what she had to say about that specifically.
I think in general, though, obviously the interest rate environment continues to be extremely appealing as an equity investor, right? So if you're thinking about where are you going to get a return, you're going to get a return in the equities markets more than you're going to get a return on a debt instrument. So therefore, it kind of pushes people into dividend-paying companies and companies where they can get a good, steady return with obviously the equity risk that comes with that. And so therefore, I do think that's just kind of pushing investors to come into the equities markets and underpin, kind of using that as a marker for the health of the U.S. economy.
You know, it's surprising the yields on blue chip stocks that are still out there. I mean, you know, you look at something, AT&T, well, they've got some issues, but our parent company, Verizon, I mean, still, you know, a hefty yield over the 10-year, I mean, by hundreds of basis points. And I guess what that suggests, though, you guys, is that your capital is probably at risk, which is to say that equity valuations are high, because otherwise that wouldn't be such a freebie, right? So it's all connected, but it's kind of an interesting perspective that she has, not caring so much, of course, about fixed income, we should say, right?
Yeah.
Right? It all just helps her out.
Well, I agree. Stock should be a lot higher, but that's fine. It's me and Sam Rowe. We'll just sit there all. You've overheard us talking. About this stuff.
I have.
Maybe we'll have Sam Rowe on Influencers one time, and he can lay out the case. He can lay out the case for really high stock prices.
That would be the real influencer.
He is a real influencer. Well, tonight, Adena's a real influencer as well, and you can catch Andy's full interview with her 5 p.m. Eastern right here on Yahoo Finance.
And coming up here on the final round, we'll have some stocks to watch in this market. But first, let's take a look at some of the most active tickers here on Yahoo Finance today.
Obviously.
All right, stocks on the move today. We've got RH, the home goods retailer, reported earnings $2.79 a share. That beat consensus expectations. You see the stock significantly higher today. We talked about this a little bit on yesterday's program. Tremendous letter from CEO Gary Friedman talking kind of more broadly about the world after WeWork and how that impacts businesses like Restoration Hardware. Another stock we're watching, Peloton. JMP Securities raised its price target on the exercise equipment maker to $38 from $34 per share. This coming a day after the company cut prices for its digital-only subscriptions. Of course, we all know the real story with Peloton is all about the ad. Today,
We can't not talk about
the
it.
actor who played the husband in the ad has issued a 1,000-word statement you can find on Psychology Today because this story.
Oh, wow. Wait a second.
Yep.
Yeah.
The actor issued a statement on
reached-
Psychology Today.
They reached out to him. Psych Today reached out to him.
Good for them.
And he gave them like 5 or 6 paragraphs. And they printed the whole thing. It was great.
Can you imagine you just thought you were going for a
You're doing
day
a commercial.
job,
He's
like
a commercial
two-day
actor,
job?
right?
Does he even have any lines?
Yeah, he just sits there.
I think doesn't he say something?
She's
like-
talking.
He
He
says,
just
I think in the
looks
beginning
at
he says
her.
like surprise or something, or here it is, honey.
She goes
I think he says,
upstairs and she
"Here it
goes,
is."
a Peloton?
Yeah.
Does he say anything?
You know what? That guy never been more famous.
That's right. Well, maybe he'll springboard.
Capitalize.
He'll be in the rowing commercial. Another stock we're watching today, United Airlines. CEO Oscar Munoz will step down from his role next year. He'll be replaced by the airline's president, Scott Kirby. Andy, you and I discussed this earlier today. Scott Kirby, of course, an alumni of
American.
And maybe they wanted him
American
back to
Airlines,
say,
yeah, they wanted him
so
back. And Mr.
right.
Parker wanted him back because they worked together.
No
And-
relation. Who?
To Warby Parker?
Oh, no.
What
Or
Parker?
Nike CEO Mark
Parker Rolls? Oh, okay. I'm sorry. No, I'm sorry.
Oh,
It's the LSD.
there's the guy.
There he is.
There he is.
The decade's
There he
beginning
is.
early.
The man himself not speaking.
No, he doesn't. I swear he doesn't talk, you guys.
He's got psychological problems. Doesn't he? I mean, that's why he's writing for. Never mind.
We've got 16 minutes before the bell. We'll spend 15 of them breaking down what happened in that commercial.
I'm watching that ad.
Coming up after the break,
Don't watch
we'll
that
get
again,
some
Jen. You're driving me
holiday
crazy.
spending tips from Bonafide Wealth President and author Douglas Bonaparte. Why an investment account could be a top choice for a holiday gift this season. But first, let's take a look at where the big tech names are trading right now. 16 minutes to go in today's trading. Christmas, less than 3 weeks away. So as we work through our gift lists, what are the money mistakes we need to avoid along the way? Douglas Bonaparte is the president of Bonafide Wealth, and he joins us now to discuss. So of course, Doug, we're not going to take on debt. You know, we know that. Some people might be doing that. Now, an option that you had here on a potential gift is opening an investment account. Yeah. I know you have small children. Does that play with 3-year-olds or 4-year-olds to say, here, you got stocks, not toys?
I think it's a teachable moment. Might be an advanced money lesson for my daughters, right? One's 9 months and the other's 4.
She probably won't know.
Right. But
really advanced.
if you have tweens, if you have, let's say, a little older, 7, 8, 9 and above, I think you have a great opportunity to maybe buy a stock they like if you're, whatever they're
I've done
into.
that. As long as you don't write a kid's book about money.
Right.
Tell them you're not going to do that.
No.
Good. That's a bad.
No.
But I've done that a little bit. You've done that a little bit.
We've done that a little
right.
bit.
Yeah. And stocks that they're interested in. I had this portfolio for my daughter, my younger one, the stocks she's interested in was Tiffany's, Facebook, Shake Shack, Ralph Lauren. I mean, there's just a few shares of all those things. She's like, oh, cool.
Isn't it cool when they have something they really like, you put it in there and you teach them all about investment? It's great. Gives them a leg up.
Right. Now, as the holidays have become, I think, a bigger commercial event for all of us, in talking to people about their planning, are people being a little bit more deliberate on how they approach the holidays because they need to be, because they feel more pressure now than perhaps they did previously?
No, I'll take a contrarian view. I think people just do a terrible job of budgeting throughout the year, specifically in the holidays. I know that's very pessimistic. My personal take is don't wait. Don't view the holidays or a New Year's resolution to go empower yourself and get in control of your personal finances. If this is your call to action, fantastic. I don't want to ruin anyone's holiday joy or spirit, but I also don't want people getting to January, February, looking at their credit card statement and being like, what have I done? We're starting the year off in a bad way.
What about the giving piece of this as well? It's also the spirit of giving. We just had Giving Tuesday. Yep. What are some ways to get kids involved in that as well? And do you tell them the dollar amount?
I think
you're giving?
Yeah, I don't think there's a problem with explaining what you're giving, especially if it's something within your household, and maybe you explain, hey, don't go telling your friends what we did. And I personally like to keep our charitable giving to our family and ourselves. But some of my colleagues have done an amazing job this year of paying off layaway at Walmart.
Oh, I've been watching that.
Yeah.
I love that.
So shout out to my friend Tyrone for doing a great job with that. You can do that. I think there are plenty of moments to donate your time, not just your money, whether that's at a food pantry. I know there's a lot of homeless people that need socks, so you can drop that off at homeless shelters as well. You can get creative here as far as doing the right thing and teaching lessons, especially to your kids. Get them involved and spread that holiday joy to everybody else.
Can I tell you one thing? I mean, you probably know this, Douglas, but I had an account, one of these custodial accounts for one of my kids, put those stocks in it that I just mentioned. Yeah. And then when she turned 21, it automatically went over there. It disappeared from my view, and I had no access to it anymore.
Wow.
So
really?
Just be advised. Yeah, it's like gone. It's like out. And then she didn't have access to it very easily and had to
That's
you didn't do this
very
thing.
interesting.
Yeah, and this was at a brand name brokerage. I will do them a favor, not tell them what it is.
Talk about that.
But I mean, it was just like be advised.
Yes, be careful.
Right. Yeah. Right.
Now,
It's like, whoop.
Of course, the real reason you're here, Doug, is to talk about coffee.
Of course.
So this morning, our good friend downtown Josh Brown went on this rant about people who are really into the bean stuff. You know these people, they roast the beans, they grind them
Not from the
themselves.
Civic Cats.
Right. You're a big coffee guy.
I love
right.
coffee.
My father-in-law's a big coffee guy. I've had the coffee. It's fine. It's
Which
fine.
place?
At the house, at his house.
Oh, he
makes the beans, roast the beans. These ones are the special beans. I don't get it.
It's a personal choice.
Right, but is this a thing that all millennials are doing now to have an interest like that, like the beaning?
I mean, listen, for me, it's a hobby. I don't expect everyone to jump on board with it. At the same time, as much as I love Josh, I mean, it's one thing to go online and attack another man's religion, right? It's just something you don't do.
Wait, what do you do with it? What do you do? What do you mean beaning?
Well, I don't roast my own beans per se, but every morning I do prepare coffee by making a pour over. So I grind my own beans, I pour hot water over top, and I make a cup. I have basically a chemistry experiment every morning. I choose where I get my beans from. Look, it's my thing.
Yeah.
I wouldn't knock you for your thing. I don't know. It depends on what it is.
He's like Popeye's chicken or something.
Dunkin' Donuts is fine.
Oh.
Starbucks is fine.
All right, so you're not
Starbucks
into
is good.
coffee. Look, nobody's perfect.
That's right.
Dunkin'
That's
is,
fine.
yeah.
That's fine.
Wait, can we get back to the kids thing real quick?
like
What if
coffee.
your kid wants to buy Peloton stock or something that you don't think is
First,
a good
show them the
investment?
advertisement, and then
Where did they get that idea from, Jen?
Well, Well, listen, I think that when you're giving a gift, it's a gift. And perhaps you ask your child, say, hey, here's a certain amount of money to go invest in something that you appreciate. Say they pick Peloton or whatever it may be. They're going to learn a lesson either way, whether they make money or lose money. Try not to give them enough to where everyone's going to be really upset over it. $50, $100. Right. I know you got to buy at least one share, but you can do that for free.
It's like, honey, I'm going to put you in WeWork. Oops.
Trying to get you an allocation.
Right.
Yeah.
How did that work out for you?
That's cool, Andy.
It is.
Oh, man. All right, good stuff. Douglas Bonaparte is the president of Bonafide Wealth. Thanks for joining us.
Thanks
Happy
for having
holidays.
me. Happy
See you in
holidays.
2020. Andy Serwer, have a great evening.
Thank you,
We'll see you
guys.
next week.
Okay, yes.
Go discuss how to make this fancy coffee.
That's right.
I will. I'm on your side with that.
Learning along the way.
All about
I like it. French press or even the real fancy
Aero
ones.
press.
Yeah, those fancy ones.
I can't-
Chemex, going back.
That's what I do. Chemex. Go to buythedrip.com
Yeah.
and
Buy the Drip.
Yes, let's
gotta check it out.
Let's
no,
discuss.
seriously.
Great
Okay, well, we've got
website.
like two of us.
It's my,
We're
it's
gonna talk
my
about
own
this.
site.
Oh yeah.
Wait, it's your own site?
Absolutely.
Because it's a riff on Buy the Dip.
Yeah,
No.
buythedrip.com. You can go
I
see
love
how
it.
much you save per cup
I
of
love
home brewing.
Next
going
time he's coming on only as a proprietor of Buy the Drip.
Be a
Doing
barista.
this.
Yeah.
You don't have to come.
I don't even
We're
make,
going.
I can't make my own coffee. I'm going to go to that website. Coming up, the closing bell on Wall Street is less than 10 minutes away. But first, we're going to get technical with chartist Brian Shannon. Maybe we'll even talk to him about Peloton. I don't know. We're back after this.
All right, time now to get technical, breaking down the charts with Brian Shannon, CMT and the founder of AlphaTrends.net. So, Brian, last time we spoke, markets getting a little extended. You said it had become more difficult to find new ideas with exciting risk-reward profiles. Now we've had a little bit of a pullback. Anything changed in this market to you?
Well, Miles, we're actually kind of where we were about 2 weeks ago, maybe a little bit higher, and we're seeing a nice healthy digestion in the S&P 500. We've got a nice cushion from where we really broke out past the major resistance, that being at about 302, and we're about 3% higher than that still. So I like the way this market is slowing down, taking time to digest these gains, and building energy, I think, for probably new highs into the end of the year.
All right, so let's talk about a name. I know you were just listening to our previous conversation. I don't know if you're a big coffee guy or not, but you are looking at shares of Starbucks. What's that chart telling you?
You know, I drink my coffee and enjoy it, but I'm not a snob by any means about it. I think Starbucks is a good cup of coffee.
I agree.
Good enough for me. So, and even Dunkin' Donuts, as I think you pointed out, Miles.
That's right, East
But the
Coast.
stock's up to 30% year to date, so it's had a good year of gains already, but it's also 20% off its highs. I view this as a really just a healthy correction in this stock, right down to its rising 200-day moving average. It's settling in here, and I think building energy, you know, stabilizing for that next potential break past some resistance here.
And you know, you also think about this chart, Brian, on a longer term basis. You go back a couple of years, it pretty much spent that time going nowhere, and now we've had a pretty solid upside breakout just so far over the last 12 months.
Yeah, and here we are, you know, again, digesting at a reasonable place. That is the 200-day moving average. As even people like Paul Tudor Jones say, the bulls live above the 200-day moving average, and especially when it's rising like it is now. So I think we're getting ready for a rally to come here in Starbucks.
All right, Brian Shannon, go enjoy a new cup of Starbucks. We'll talk to you next week. Thanks for stopping by.
Thanks, Miles.
Coming up here on the final round, we'll have the closing bell on Wall Street, plus Goldman Sachs getting bullish on shares of Nike with a new conviction buy rating. That's our call of the day. We are back right after this.
Welcome back to the final round on Yahoo Finance. I'm Jen Rogers with Miles Edlin and Rick Newman.
All right.
Yeah.
Hey, what's happening, guys?
It is a whole lot of nothing. We are really close to the closing
Not anymore.
bell, though. Not anymore. Rick's here. Take a look. Well, live pictures, New York Stock Exchange and the NASDAQ.
Oh, the tree lighting.
Right?
Missed that last night. We had our holiday party.
Oh, yes. That's why there was all the traffic there today. But I got stuck.
That was
terrible.
Right.
But anyhow, there you go. We're closing out a relatively uneventful day. But after being told that there's no deadline anymore for trade and a crazy NATO meeting, maybe we're fine with just about nothing here. We are looking like, though, we are going to close in the green. There you go. Looking at the major indices right now. I think the Russell and the VIX both look a little lower here. You know, this is a day, maybe it's like closing early on holidays. Days before jobs reports, or days before Fed decisions.
Every fourth Thursday should be a half day.
Yeah. What do you think? Do you like that idea?
Yeah,
because everyone's
You would have no show.
No, we could do a half show.
We could do a half show.
That'd be
we're
perfect,
totally
yeah.
we're available for half shows.
Absolutely available
on
for a
days
half show.
before possibly market moving events. I think we're all just waiting.
Motion
because
passed.
Yes.
It is an event.
Yeah,
it's always a live event, but because of the way we're kind of set up with the Fed and what's happening with sentiment and the narrative and the end of the year, it's important tomorrow.
I think it's important. I would be surprised if it's a sort of a narrative changing event, right? I mean, I think we know there's going to be, at least forecasts are suggesting there'll be some kind of a give back from the GM strike ending. It'll be interesting to see if the ADP report, as some surmise, was completely a one-off, right? If that report just
Probably not.
wasn't consistent.
It's noisy.
Well,
why not?
What's interesting, though, is the survey data, manufacturing and services, the employment sub-indexes have improved quite a bit the last couple of months. So there was a real softness, if you go back to late summer, trade war uncertainty. And while I don't think the sentiment on trade has changed too much from corporate leaders, there may be a sense that there's a little more action, a little more confidence to go out and hire some folks. But we know, Rick, that the economy is in a slower gear for sure.
Yeah, and the thing I've been watching is, we've actually seen a decline in manufacturing jobs. So that's something, a job losses, actual job losses in manufacturing. And it's hard to tell, is that actual layoffs? Is that, retirees not getting replaced, which is not as painful? But that, that's a clear thing that's happening in the economy. And the question, the reason I'm watching that is because it's related to the tariffs and the trade war. And what economists are wondering, obviously, is that going to leak over into the broader economy? Because manufacturing is only about 10% of the economy at this point. So we may get some indications there. I think the narrative only changes if it's a very low number. It could be a very high number, and markets would be fine with that. Attribute some of it to the GM snapback. But a very low number, which I guess I would maybe say 50,000 or lower, you're expecting that snapback from GM. So if you don't see that, then you'd start to worry. We're going to have job numbers below 50,000 and perhaps like close to zero job gains in some months, possibly in the next year, I might say.
And it depends when those come. And it's very important to what's happening with the election. I mean, the president has said he's all about jobs, jobs, jobs. And so that manufacturing tick down, especially seen in some swing states, if you start to get bad prints in manufacturing, but you don't go into a recession, does that change people's mindset about the economy?
I think it also matters what kind of job reductions are they. If it's just retirees not being replaced, or if it's that we're losing people to other industries and we can't replace them, that's probably okay. If it's actual layoffs, I always feel like layoffs have a heavy multiplier effect, because if if one person gets laid off, it affects the confidence of 20 people, because they start, and if layoffs become widespread in some fashion, that crushes confidence, because everybody starts to worry, could this happen to me? Or I heard this is happening across town. What if it comes here? And then spending pulls in a little bit, but we're not there yet. So, odds are probably good we're going to get another decent number tomorrow.
Let's get some more on today's market action. Go to Scott Gamm. So, Scott, we were saying this kind of a ho-hum day, but actually when you go under the hood here, we got a lot of momentum names making some pretty big moves to the downside. Peloton off 5%. We had Cloudflare off 6.5%. Lyft off nearly 5% as well. So there was some action, right?
There was, and there was even action within the Dow, even though it was only up 28 points. Now, the gainers in today's session were Nike, Apple, and United Health, so you had some pretty powerful gainers in that list. The laggards were 3M, Cisco, Disney, and Boeing. Now, here in those lists, you have Apple and Boeing both there, so you kind of have this tug of war going on between the two most powerful stocks in the Dow. So with Apple up and Boeing down, the Dow wasn't really able to get any meaningful traction in either direction, and we've seen this kind of dynamic play out before, and when it does, you end up with a small, broader move in the Dow. Now, aside from the major indices, we also wanted to bring you up to speed on what's going on with United Airlines. The stock ended the day slightly in the red on news that CEO Oscar Munoz would be stepping down in May of 2020 to be replaced by the current president, Scott Kirby. And you really have to hand it to Oscar Munoz, who took over in September of 2015 when the stock was at about $57 a share. Today, it's near $90 a share. So both Mr. Munoz and Mr. Kirby have made significant efforts in turning around the airline. Of course, Scott Kirby came from American Airlines, and there was rumors that he would be returning to American Airlines, potentially to replace the current CEO, Doug Parker, but that, of course, not happening, guys.
Scott Gamm, we will talk with you tomorrow.
All right, Ulta Beauty's third quarter results are out. Shauna Smith has the numbers in our newsroom. Shauna.
Looks like a beat here for Ulta in terms of earnings per share, coming in at $2.25. The estimate on the street was for $2.13. Revenue coming in, it was a slight miss here for Ulta. The expectation was for $1.69 billion and came in at $1.68 billion. It does, though, it looks like the street is focusing on Ulta's outlook. As you can see, the shares up just around 6% so far on the heels of these results. A couple of revisions to its outlook. So Ulta now sees full year sales at about a 10% increase. Also saying that e-commerce comp sales will be an increase of 20% to 30% during the fiscal year. Also saying that comp sales, they're expected to be 4.7% to 5%. It originally saw an increase of 4 to 6%. So we see a little bit coming up to the upside here on the bottom line, but again, just narrowing that expectations for comp sales. Looks like the street, though, is satisfied with these numbers, with the stock up just over 6%.
All right, Shauna Smith, live in our newsroom with Ulta Beauty's third quarter results. His stock popping here, up about 6%. Jen, a name that has been a tremendous performer over the last decade, but kind of stalled out here in the last couple of years. Had some really spotty quarters along the way.
The 10th best performer of the decade.
correct.
And it was actually a big performer earlier this year.
Yeah.
It has kind of been the second half of the year that has been a little bit bumpy. So the company, noting here, they opened 31 more stores in the third quarter, still looking to open 80 new stores for fiscal 2019. I mean, look, it's beauty. And we've been trying to figure out, is this something that the teens want? You know, looking at the Piper survey, for a while it was like, okay, this is where people want to spend some of their additional income that they have. But then we've been seeing that what they call like the pigmented part of the space has been fading a little bit here. Am I getting too deep for you in the makeup?
Yeah, the pigmented. I saw a tweet.
It's all about
I just saw a tweet
skincare
that
now.
said they are putting lipstick on a pig with this latest earnings report. So you threw me on that. I mean, I'm looking at that big come down from the last earnings report at the end of August. I mean, it was a wipeout from 338 down to about. I mean, it was just a giant fall. And they're still down to 236 or so, almost by a third. So they're still down in that range. And even if this, now it's about a 5.5% uptick after hours, even if that sticks, they're still in the range after that big wipeout in August and not climbing back to where they were.
Yep. So Ulta Beauty shares up about 5% after their latest earnings report. We'll keep an eye on that stock through the after hours session. All right, let's go now, to our call of the day. Today we've got Goldman Sachs out on Nike. So Nike has had a pretty good run this year, and Goldman thinks it has more room there. Thank you, Rick. Thank you. More room to grow. So it was upgraded to buy, added to the firm's conviction list. Now Goldman says Nike is a unique asset thanks to its strong brand and disruptive, innovative strategy. I look at Nike and I think, we love to talk about new Rent the Runways, D2C plays, but old stalwarts like Nike are also huge D2C plays, and there's been so much, buzz about what they've done with their app and their website, and really, to the chagrin of Foot Locker or Dick's, for example, kind of cut those guys out.
I had to go look at the app because I hadn't used it or thought of it as really a driver
I have
until
two Nike
I
apps.
read this note. Really?
You got the sneakers app and then just the regular app.
You?
No, but I have a son who prizes Jordans. And what Goldman is saying in this note, to what you're saying, I mean, it's incredible that you can stay cool with young people for this long. And they're saying, we think they have a lot of room to run among 15-year-olds.
Yeah.
And they're also saying they have there's a lot of room for them to conquer in China. And I was kind of like, oh, not affected by the trade war? Nah, not really. They don't seem to be worried. Goldman's not worried about that. So China's got a great road ahead. I mean, Nike has a great road ahead in China, and 15-year-olds still love the product.
I like the detail of why they think China is still going to work. And it's kind of funny. It's like, do you guys remember presidential fitness? Do you guys have that at your school?
Oh, yeah, the presidential fitness test.
Yeah.
Yeah.
Okay. So basically, the Chinese
it's like
government.
push-ups, sit-ups, and like a run or something.
Yes.
Yeah.
So I don't know. That was the thing that everyone had to do in school. But one of the calls here is that the Chinese government is supportive of athletic participation and also of consumption. And they're like pushing people being healthy. They're planning. They have a 2-year action plan to actually boost national sports consumption. So this is it's not just like a Nike trend, but it's the trend of people working out more, taking hold in China.
So I hear that, and what I think, based on what I know about China, is they're not going to let foreign brands cash in on that. They're going to find a domestic brand. I mean, they'll do what they normally do, probably, which is what Trump is banging on them for, but you get the foreign brand to come in and show us how to do it.
Yeah.
Maybe, sneakers are just not that complicated. They don't need the foreign technology. I mean, they're not. They don't have moving parts for the most part. To me, though, China would want to build its own brands and give them the action instead of letting a foreign brand do it.
They mentioned Li Ning, they mentioned Anta. Those are
Yeah.
companies that do sponsor some professional athletes. Dwayne Wade was a Li Ning athlete, but Jordan brand is cool.
Nike just has it.
Yeah.
It's amazing how long they've had a cool factor.
And compared to our note that we had from Lulu earlier this week, just on the ad spend and the athletes that Nike has locked up around the world.
Friend of the program, Matt Fraser.
Yes, there you go. I mean, they've basically locked everybody up.
Yep.
And so if your advertising
I'm
dollar
not
can
locked
go
up,
so
Nike.
far.
I'm available.
golfer.
And you need some golf, and you can use some new golf shoes.
Very average athlete, a little bit overweight, goes to the gym sometimes.
Ran in college, you got that going for you.
10 years ago, I was good at running. That's it.
That's what they need. They're going to like
Low golf handicap.
More people like Miles.
Yeah.
Zoom videos, third quarter results are out. Let's go back to Shauna Smith in our newsroom for a breakdown. Shauna.
Hey there, Jen. So a bit of a mixed results here from Zoom. We have earnings per share coming in a little bit lighter, 1 cent a share for the quarter. The street was expecting 3 cents. Revenue, though, was better than expectations, coming in at 166.6 million, so 166 million. The estimate there was for 155.8 million. Now the 166 number, that's an 85% increase from a year ago. A couple of other numbers that are highlighted in this report. Zoom saying that they now have approximately 74,000 customers with more than 10 employees. Now that number is up 67% compared to the same quarter last year. They're also saying that they have 546 customers contributing more than $100,000 in trailing 12 months revenue. That number is up 97% from a year ago. But taking a look at the stock there, Jen, it looks like Zoom is moving significantly lower in after-hours trading, the stock off just over 8%. So I think the street is really focusing on the fact that Zoom missed on profit.
Shauna Smith with Zoom's third quarter results, as she noted, profit miss there. We're seeing the stock down nearly over 9%, close to 10%. Of course, it's a big IPO, that's sort of the stealth IPO that then came in and was this huge mover in the spring. Q3 here, hosting their Zoomtopia event, up 80% year over year. Look, this company's still growing. Total revenue up 85% year over year. But again, right now we're seeing it sell off on a little bit of a miss.
Yeah, I mean, the stock went public at 36, so
Still doing
still
okay.
almost a double if you got that early allotment. But since it closed trading, it's now only up low single digits. Mid-single digits. So for
And it's a face plant.
secondary market trading.
And it's a face plant from where it got up to in May, which was over, or rather in June, which is over 100.
And the funny thing about Zoom is that everyone was just like, when it went nuts, it's like, yeah, well, of course, it's an amazing company that's growing revenue and it's such a great service. And it is a good service. I think it's better than Google Hangouts, for example. But it's just caught up in this wave right now of the negativity towards the IPO space. I mean, Slack is a fine company, but I don't think the Slack business story is nearly as compelling as Zoom's is. But yet they're both sort of in the same, and those are just earnings we've seen in the last 24 hours, both sort of in the same boat of sentiment moving against them.
I'd be curious to see on this call, because the Slack call yesterday, so much talk about Microsoft Teams and sort of the competition there. What's the competition here for Zoom? Skype. Coming up, another Microsoft product. Stash's CEO on who they're changing the way, how they're changing the way. I'm going to go with that. They're saving and investing for retirement. But first, let's take a look at where the financial names traded today. more financial startups hit the scene to compete with the big banks, one company is expanding its investment teachings to its customers and rewarding them in return. That company is Stash, and it's one of the fastest growing banking and investing platforms in the U.S. And joining us now is Stash CEO Brandon Krieg. So for those people that aren't familiar with Stash, how does it work? And I guess also, how is it different than maybe some of the other products that people might have heard about?
Yeah, so Stash is a digital financial platform, and we help people invest, bank, and save. A couple of things that make it really different and very special to our 4 million customers is that we surround all these actions with advice and education. You know, you think about even this program, consumers will hear about all these stocks and all these things that most of the time they never learned about at school or from their parents, and we make investing very approachable for them. And then we make it so they can invest in things that they understand as they live their life. So we created something called Stockback. And so every time you use the Stash debit card and you go out and spend money, you become a shareholder. So if you go to Dairy Queen, you get Berkshire Hathaway stock live when you spend. Get your gas at BP and become a BP shareholder. And it works at 11 million places. So for us, it's really about just creating this awesome bridge to help people get into the markets, start learning, and really start saving for their futures.
So, I mean, as you see the landscape, and there's sort of unlimited ways to go with this, but it just seems like there's constantly areas like this, for example, which is basically education and rewarding customers that big banks have punted on, and they have no interest in actually doing this, even though it's, one, a pretty effective service, and two, I can't imagine that it's too much skin off your back to give someone a fractional share of Berkshire that, it's represented that they could get it if they wanted to, right? But it's really about saying, here's the path forward for you if you continue to kind of use our program.
Yeah, I mean, look, 86% of Stash customers are beginners or first-timers. And so we're creating a whole new market for people. And I think when you think about the big incumbent banks, it's not that they don't want to help their customers. It's just the companies aren't geared that way. It'd be completely transformational for them to say, I'm going to look after the mass market middle class of America. 80% of people live paycheck to paycheck in this country right now. And so when you can get someone off the sidelines, help them start with $5, get them on a journey to start making saving a really positive habit while they're investing, it's just so powerful and transformational for their life. And the stories that we hear are just incredible about people that were literally living paycheck to paycheck who now are far ahead of everyone else in America right now, just by doing something that's just really good for them, but making it educational and really fun.
How young can you go, do you think, realistically? I mean, financial literacy, the sooner you start people, the better off they're going to be.
Yeah.
As you're describing apps that you can use, it seems like tailor-made for teenagers. Can you go that low?
Right now, what we did is we built it so you have to be an adult, so 18 or up. But we do allow our customers to open accounts for children. So you could open custodial accounts for kids.
Yep.
And we're seeing every day thousands of accounts get opened for children. So I think the learning element that you mentioned is really important. And I think it's a societal problem right now where we're not teaching children at home or in school about money and about investing for their futures. So right now, the average age of a Stash customer is in the upper 20s. And I think it's really because people are starting to really think about retirement and savings, and they're kind of getting their financial life in order through life actions, and they're taking it seriously. They just needed access to start doing this because the unfortunate reality is most people in this country have been excluded from this, from investing and saving.
Yeah.
So we've seen the brokerages just go to zero already, and we've talked about sort of how they're making their money now, just sweeping through whatever cash you have. How do you make money in this environment?
Yeah, so we've never charged a trading commission ever. We always believed from day one that investing needs to be a subscription business. So you can get all you can eat in a subscription plan. So we have 3 subscription plans that a customer will choose. They start at $1 a month, and that's it. Everything else is included in that. I don't think the game of trading commission is relevant to us because I don't want our customers to actively day trade. And people are inherently really bad at actively trading. But long-term investing is a really good action for people to take, especially when they do it with diversification. And so it's not about trading for us, it's about getting all the financial things that you need in your life in a simple package, including banking. And a lot of people now are making Stash their primary bank. And having Stash as the financial home is just really good for the customer, and we're building a great business at the same time.
Are you FDIC insured like a regular bank?
Well, our bank, we're not a bank. Our banking partner offers FDIC insurance on the accounts, so yes.
Effectively, yes.
Yes.
Stash CEO Brandon Krieg, thanks a lot for stopping by.
Thanks for having me.
All right, and coming up here on the final round, a new healthcare study finds that costs are rising at double the rate of inflation. Rick Newman tells us about that after the break. But first, take a look at how some insurance stocks traded in today's market. Government data shows total healthcare spending in 2018 grew in the U.S. While medical costs continue to rise, wage growth does not appear to be keeping up. We've got costs rising, Rick, at double the rate of inflation. I think we all know that healthcare costs are going up a lot, but the numbers that are coming out on what it's likely to look like as people are in open enrollment right now have been a little bit startling.
Yeah, this is a surprise to absolutely nobody, but it's official. I mean, this is from the Center for Medicaid and Medicare Services. They track the numbers. So total healthcare spending in the United States up 4.6%. This is for 2018. So this is a giant part of the economy, a lag in the numbers. And we know that incomes are not going up by 4.6%. They're going up by maybe 3%. This is more than twice the overall rate of inflation. And then there's another set of data that just came out recently from the Commonwealth Fund, and they're trying to track total out-of-pocket spending as a percentage of median income. And we have it right there on the screen. The number at the top of that chart, it's just going up and up. So on average, paying for premiums and deductibles, that's out-of-pocket spending, 11.5% of median income, and that's the highest in this data series. So this is no surprise, and that's why this is a huge issue in the 2020 presidential campaign. I'm following that. I'm following who supports Medicare for all, who doesn't, who supports a public option. We've seen some of those candidates actually start to trip up, the ones who favor the total government program, which is Medicare for all. That's starting to hurt them because it would be a really expensive program that would require a lot of new taxes and take everybody out of the private health insurance system. Right. So it's kind of it's just a conundrum because the private health insurance system is the one where we've seen these costs going up by more than income basically for 30 years. And yet people are very reluctant to move into something unknown, an unknown government program, and give up that private health insurance. So we're stuck.
Yeah.
That's why we get the least bang for the healthcare buck among any advanced nation.
Yep, and it's going to reach a breaking point, but yet it doesn't feel like we're there.
Well, I mean, it is breaking some families.
It's breaking,
without a doubt.
That's the issue. What can't be taken in here is that everything's fine in healthcare until
you're
it's not.
Healthy.
And you're sick.
Well,
and then that year, you could be hundreds of thousands.
I'll tell you what drives me crazy is I've done stories on people who are let's say in their 50s. It's typically a couple in their 50s who does not get coverage through an employer, so they're not old enough for Medicare yet, so they have to go out and buy private insurance. It's insane what they have to pay.
So
$30,000 or more a year that's just premiums. And Congress could fix that. Yeah. Congress could fix that, and they just won't. Yeah.
And
parties just would rather fight about this.
They're small business owners.
They're small business owners or entrepreneurs or people, independent contractors. They don't work for big companies, which is why they don't have insurance, and they have to buy it. I mean, I think that inhibits entrepreneurship. I think that's a huge factor that limits risk-taking. Who wants to deal with that?
Yes.
Anyway, that's my rant for today.
That's good.
Good. Coming up, what we're watching in the look ahead, plus Pantone's Color of the Year is here, and you'll likely see it everywhere soon. We're back right after this. And now here's Miles with a look ahead at what will be making headlines on Friday.
All right, Friday, Jobs Day here in America. Expectations are for the final jobs report of the year to be a blockbuster. Wall Street economists are forecasting non-farm payroll growth of 184,000 in November. That'd be a significant uptick from the 128,000 jobs that were created in October. The unemployment rate expected to hold at 3.6%. Wage gains are expected to be solid, holding steady at 3%. This report, however, could be a little goofy. In October, we got the jobs report negatively impacted by the GM strike. That's now come to an end. Some analysts are also bracing for a poor print after ADP's private payroll data on Wednesday was a massive disappointment, just 67,000 jobs added there. But it's unlikely, ultimately, that Friday's report changes the story right now for the U.S. economy. As we noted earlier this week, the economy is clearly in a slower growth phase, but investors are okay with that, as is the Fed. And after many months of investors expressing deep uncertainty about the direction of markets and the economy, it seems we're heading into year-end with a relative calm about what we know and what we don't. So sure, all jobs days are exciting. It is, after all, the biggest economic report of the schedule. But Friday's report probably won't be too stressful because there's a pretty good sense of what story these numbers are going to tell and how the market will react. Elsewhere on the calendar on Friday, on the economic data side, we'll get the first look at consumer confidence in December from the University of Michigan. We'll also get data on consumer credit balances in the month of October. Then on the earnings side, no major companies are expected to report their quarterly results.
Friday. Are you feeling blue? Well, maybe that's not such a bad thing. The Pantone Color Institute has selected its color of the year, and their 2020 choice has been revealed as, that's it, you're looking at it. Apparently, this is classic blue.
Classic blue.
Did you know that that's classic
It
blue?
seemed like more like a Milburn blue to me, but that's just because I'm a Milburn Miller at heart, always.
I was going to say it was a Dresden blue. Also a Milford blue.
Doesn't do anything for me.
No, they're 2 years behind on this.
Really?
Okay.
Why?
Yeah,
Do
because in
tell.
2018, I bought that exact color car. We couldn't get it on the screen, but here, I'll show you guys.
Let me see.
That's my car, and it
You
is
drive
their
a-
color.
You drive
a Subaru?
You drive
Of course I drive a Subaru.
I don't know.
I'm
Can you see
Mr.
his
Pragmatic.
car?
Sure.
So you're ahead of the time.
Yeah, I bought that. I bought this
Sorry,
year's
guys.
color
Sorry, I didn't mean to do that to
2
you.
years ago.
Yeah, I don't think that color's not 19 point whatever the Pantone is.
It's
This
a
is
color
blue.
that anticipates what's going
My family
to
had a-
happen
I'm ahead.
next.
Oh, you're telling me
That's it.
I'm ahead of the curve?
That's
My
what
family
the
had
VP
a
of Pantone
My
said.
family had a Ford Windstar back in the day that was about
Can
that
I tell you
color.
something? I think
And
this
boy, was it brutal.
I think this makes me an influencer. Okay, I'm putting this on my Instagram,
there's a-
and I demand 50,000 followers for being 2 years ahead.
There's a lot of things that make you an influencer, including the color blue. Now,
Where are they? Where are all my followers?
Now I
then?
know you've done a lot of home renovation work in the last year or so. Any blue in there?
Oh no, everybody instructed me. I would have had that color blue in my house. Everyone said, no, you have to get bland colors for the resale value.
Yeah, so now your house is just
my
a
house is
boring
bland.
box.
If you
Yeah.
come to my house, if you're lucky enough to get invited to my house, it's bland. Because everybody told me it had to be.
Except you have a blue
Neutral
car.
colors. Yeah, so we'll go down to my garage and we'll go for a ride.
So the thing is, you know the house because you can't miss the car in the driveway. But then you get in the house, you're like, yeah, it's just every other house.
This was such a natural pathway for this topic to lead to what's in my house and in my garage.
It's true.
You brought it up.
I'm serious.
I just
though.
wanted to talk about the color blue.
Like I'm renting. I'm not painting anything. I'm not painting any rooms. I have no say over that stuff.
Well, then when you have them painted, make them blue.
When I buy a place, then I'll make them blue.
What do they say? Where is this color going to show up other than in my car?
It starts to show up everywhere. Now that you've
Rick,
seen it here, Rick,
it's a
gonna
color
be,
that anticipates what's going to happen next. That's what happens.
It's going to be
Are they
whoever the
predicting Trump's
Democratic
re-election?
nominee is. Maybe it'll be their color.
Oh, that's Praz is saying no. They're predicting a Democratic victory in the 20
Coming up,
presidential.
Coming
I'm
up,
gonna listen to
Italian
Pantone.
motorcycle maker Ducati going from the racetrack to the bike lane. We will have the bike in studio after this.
And we'll be right.
fun around here on Yahoo Finance. Miles Olin with you in New York. I'm joined as always by my co-host Jen Rogers, also joined today by Yahoo Finance's Rick Newman, a man who loves home improvement and the color blue.
All of it, and possibly this next thing we're going to talk about.
We're going to talk about that. Let's take a quick look first at where the market settled on this Jobs Day Eve. All three majors were higher, not a whole lot doing. The S&P leading the way, up 15 basis points, of course. 8:30 tomorrow morning, Jobs Report live right here on Yahoo Finance. Well, with a 93-year history and rich heritage in racing, you wouldn't expect this move, but here it is. Italian motorcycle maker Ducati's first electric bicycle is here. The MiG RR is coming to the U.S. market. Joining us now is Ducati North America CEO Jason Chinick. So the bike is here. It looks great. I am excited to maybe ride it when it's not 35 degrees outside in New York. Tell us a little bit about the bike and about the move you guys are making kind of into this space.
So we introduced the MiG RR to Europe last year, and we had a very, very positive response, overwhelming in fact, to the point where we knew, and myself being an avid mountain biker, that it was a perfect opportunity for us in North America. And this is a product as an e-mountain bike that is top of the line. And knowing a little bit about the bicycling world, top suspension componentry, and actually all the way through, there's some unique technologies that were developed with the supplier of the bike with us, with Ducati as well, in terms of the suspension. But also it's powered with a e-assist. So instead of it being, let's say, like an e-motorcycle that you twist the throttle and it's to help assist the rider to be able to climb and maybe to keep up with some people that are a little bit more skilled than the average rider.
So if I'm riding it uphill and I put it on, I'm not going to like take off like I'm in a motorcycle.
No, by no means. It's whatever input that you give it, it will add assistance to it into different degrees, whether it's mild, like an economical, or a boost, where you need a little extra push in order to get the climb.
So a quick technical question. Does this have any kind of regenerative power the way electric cars do?
No, it's actually strictly battery, and it's a 504 watt-hour battery, which, depending on how much you use the intervention, can determine on whether it's a 2 or a 3 hour bike ride.
So I'm wondering who you're going to market this to, and if you're going to manage to squeeze a little bit more money out of baby boomers who might say, oh, if I can get some help going up the hill, maybe I'll do it for another couple of years before I hang it up.
Well, our first target is our existing Ducati owners, because this is something that, as an extension of a lifestyle brand, they're looking at an opportunity for something to do when they're not riding their motorcycle. And a lot of our professional athletes in the world of motorcycle racing, when they're not racing, this is how they train. And I mean, from road biking to mountain biking, and the e-assist is really taking off here in North America. And I anticipate that will be our first audience. And then we're looking at the existing mountain biking community and being able to try and capture some of them to come in that maybe know the Ducati brand, but realize that there's a product that's for them.
So what is it, a couple $100?
No, but actually we're starting off with a scrambler version of the bike, which is basically more of a road-going trek, not mountain, and that's going to be at $4,000, and then it will go all the way up to this one, which is a little over $7,000, which is the top of the range.
Well, I spent a lot of money on mountain bikes already. Yeah. I mean, some people will buy it.
Well, I mean, I don't think the biking community is going to be shocked by that sticker price.
Not really,
those guys know what those things cost. I'm curious, Jason, just thinking about how broad this line could be, right? Because I don't think that I would want a mountain bike that's this intense, but maybe I would think more seriously about getting a bike to just go around the city.
Miles wants a beach cruiser.
Right, like a beach cruiser that so I don't have to get like in the prone position to like keep up with everybody in the bike lane. I could just sort of cruise along, but it would get me to 20 miles an hour or whatever.
Well, that's exactly where that scrambler comes into play, because it even has suspension and tires specifically designed to tackle what you have to ride around here with. But that assists so that if you decided you wanted to go over the Brooklyn Bridge and not have to worry about can you make it back, you'll be able to do so.
So talking about where you
sounds like he wants one.
Where you can go with this. Well, Praz and I just drove this sort of little electric motorcycle that's almost as small as a bicycle, but in the motorcycle class. So that gets to my question. Is it kind of going to build an electric motorcycle? Harley has one.
Yes, as far as the electric motorcycle is concerned, it's something that we've been looking at and have a lot of development that's been put into that thinking. But as it stands right now, the platform for us to deliver an electric motorcycle, it isn't there yet. We have too much as a brand.
What do you mean by that? It's
the battery technology for what people would expect for a Ducati.
Yeah. The performance.
And I say performance, it's not just speed. It's handling, it's weight, it's all those things. It would basically be 3 times the weight of an existing Ducati right now because the technology just isn't there for the batteries. Now, that doesn't mean that other brands can't do it, and that it doesn't mean that we're not looking at it. That's something that we're paying close attention to, but it's not right now in our cards because the technology can't deliver what we need to in terms of that product.
And how long does the battery last on this? Like, how far can you go?
It really depends on how much assistance you request out of it. So
a lot.
You probably find yourself out there for 3 hours, I'd say. Like if you're really utilizing it for the climb, because when you're going on the descent,
you
don't necessarily need it.
All right, great stuff. In the spring, we'll all get out there and we'll take some videos
we'll do a
of us
demo.
trying to navigate this thing. Jason Chinnick with Ducati, thanks so much for stopping by.
My pleasure.
And coming up here on the final round, we'll talk to PlushCare. They want to change the way that you get your health care delivered. The co-founder will join us coming up right after the break.
The 2020 election is on the horizon. One of the top concerns for voters is health care. And this has helped drive the growth also of digital health care. One company doing that is PlushCare. Joining us now to discuss the space is PlushCare co-founder and CEO Ryan McQuaid. So how exactly does PlushCare work? What services can you access with the company?
Yeah, Jen, thanks for having me on. So the problem that PlushCare is solving is 50% of people delay or forgo getting needed medical care because there's so much friction. And so PlushCare enables people to get same-day diagnosis, treatment, and prescriptions and any ancillary services that are necessary same day. And the really great thing about this is all of our physicians are trained at the top 50 U.S. medical schools, and on average have 15 years of practicing experience. So you're talking about meeting with some of the best physicians in the country. And on top of that, at a very affordable price. So we're contracted with all the major insurers, United, Aetna, Cigna, and patients just pay their primary care office visit copay for a visit. And on average, that's $25.
So Ryan, I'm curious, thinking about this exchange from the patient and from the doctor side. Certainly this market is changing very quickly. I think people are getting a little bit more comfortable with the idea of receiving doctor's advice over, laptop or phone or whatever it is. As you guys see it, does it seem like it's more you need to get the medical community used to treating patients this way, or do you need to get patients more comfortable with receiving care this way?
Yes, I think it's a combination of both. So what we've done on the medical community side is all of the PlushCare physicians work for PlushCare. So it's not an open marketplace where anybody can jump on. It's physicians that have been highly vetted and highly trained to practice virtual care. On the patient side, it does require some behavior change. If you look at e-commerce and Amazon, Amazon's been around 25 years, and e-commerce is still only 9% penetration of retail sales. So it will require consumer behavior change, but we're seeing an explosive adoption rate every year.
Okay, so the whole market size right now expected to reach $500 billion by 2025. And when you're looking at how fast you guys can grow, what do you see as the ideal scale that you would like to be reaching, and how quickly can that be achieved?
So historically, we've grown about 80% year over year, and we are obsessed over providing patients with a wow experience. And we, in the future, believe that we can continue to scale about 80% year over year and maintain that amazing patient experience. And a quantitative measurement of how we're doing there is today we have a 90 Net Promoter Score. And when we started the company 4 years ago, we had a 90 Net Promoter Score at that same time. And so the exciting thing here is we've gone from dozens of visits per week to thousands of visits per week and have been able to maintain the same quality and same patient satisfaction.
Ryan, Rick Newman here in New York. Doctors can prescribe medication through this platform?
That's correct, Rick. So doctors can prescribe any non-DEA controlled medications.
And what is the number one reason that people book their appointment?
So it varies. We lump it into 3 categories. So there's urgent care, which is flu, urinary tract infections, rashes. And so in that category, the most visits are coming from, there's some seasonality there. So right now we're in cold and flu season, and so flu visits are probably the highest on a ratio basis. The second category is preventative medicine. So patients are coming to PlushCare to ensure that they're staying up to date on the preventative testing that they need to get done. So lab tests, checking their blood pressure. Prediabetes is an epidemic in the US, and so we're making sure that we take care of patients preventatively. And then the third category is chronic conditions. And so that's hypertension, diabetes, high cholesterol. And in the chronic condition category, our largest visit reason today is hypertension.
PlushCare co-founder Ryan McQuaid, thank you so much.
Thank you very much for having me.
And Rick Newman, have a great
Bye,
evening.
guys. It's been a blast.
Rick, tomorrow.
Trumponomics, baby.
Trumpometer for all the viewers out there.
We're saving it for the jobs report.
That is going to be good stuff, as always. Coming up here on today's Final Round, we'll hear from author and columnist Michael Lewis. He'll talk about his latest book, and he'll offer some of his thoughts on Donald Trump. We're back after this.
Michael Lewis is the best-selling author of books, including The Big Short, Moneyball, Liar's Poker, and his latest book, The Fifth Risk, is now out in paperback. He joined us earlier this week to discuss. Take a listen.
The nature of the work is so important. There are people who understand what goes on inside the government, especially the scientists, but not just the scientists, do have a sense that, all right, yeah, the politicians are going to be shouting about how I'm a lazy bureaucrat. People aren't going to pay me that well. I'm not going to. No one's going to ever know what I did, but I will save the society. There are a lot of people who feel that way, and so there is still some appeal to a lot of the work, but it's crazy the way that we have made it kind of a second-class place. I mean, the stat that to me I can't get out of my head because once I heard it was that there are 5 times more people in IT in government, I mean, over the age of 60 than under the age of 30. So IT would be the one place where you would expect you'd find young people, and even there. And so it's like no wonder the IRS servers are crashing, and it's been, we are going to pay a price for having misunderstood the nature of that enterprise. People think of it as like dead weight, It is, not only is it like a machine for keeping us safe and for managing lots of catastrophic risks, it is also the engine of future prosperity. I mean, that if you look at almost every technological revolution starts with some moonshot investment from the government. We don't get the internet without the government. And so the idea like private enterprise is going to fill in these gaps is nuts.
When you talk about it unspooling right now, so the news of the day, President Trump on trade, that, hey, we might not have this phase one trade deal. Might not do it till after the election.
Why not?
I mean, but who do we have in there negotiating besides the president and Wilbur Ross and Lighthizer, the sort of the bureaucracy that you might expect to be there?
So Wilbur Ross, I don't think, is negotiating the trade deal. I don't think he has anything to do with it. I know he's on television talking about it, but he's the Secretary of Commerce. That's not trade. He's supposed to be running the census. And the National Weather Service.
Which we know he's not doing.
Right. No, the things he's supposed to be running, he's not doing. He's out there mouthing off about trade. But my impression, I have no idea, right? But my impression just watching the process is it's one guy in the White House deciding how he feels that day and tweeting. And it seems to get some personal excitement out of watching the stock market go up and down as a result of whatever he says. And he seems to feel kind of indifferent to the consequences.
So something that's interesting to me, I follow the Federal Reserve, and obviously President Trump bashing, the chairman, Jay Powell, who, by the way, was his own nominee.
Right.
And he's not the only person that's been nominated by Trump, but it has ended up a victim of the political rhetoric that Trump seems to tweet day to day. From your conversations with people down in Washington, D.C., how does that bleed into the work culture there, too? I used to work in Washington, D.C., and people who work in the federal government are used to the administration's turning. But what is it that makes the Trump administration unique?
They're not used to the administration they're working for not having their back. The general assumption in the civil service is that they're there to support the administration, whoever the administration is. So the idea that these people had dug in their heels against Trump when he had arrived was just nonsense. They were waiting to just take the orders. And the problem was that Trump didn't put people in place to give the orders. I mean, the idea that, I think there's some large part of America that actually believes there's a deep state, right?
Especially with the Fed.
Oh.
Right?
Especially.
And it's, we have, of all the democracies in the Western world, we have the most shallow state there is because it isn't run by the civil servants. It's run by the 4,000 people the president appoints. And they're waiting to be told what to do. I think the first response was utter confusion. They were sitting there waiting to brief. You're sitting at the CDC, waiting to explain how you dealt with the Ebola virus in case something like it breaks out again so that you can handle it. And nobody shows up for the meeting. Or you're sitting at the Department of Energy and you manage the nuclear arsenal. You want to explain how we prevent nuclear bombs from going off when we don't want them to go off, and nobody shows up for the meeting. So that's the first thing. And then what comes in after is just this hodgepodge of people who had a financial interest in being there, people who couldn't get jobs doing anything else, and nobody. I mean, there's still a lot of positions where there haven't been appointments. So what's the tone there? My sense, I can't speak for the whole bureaucracy. I have people who do kind of speak to the whole bureaucracy. And those people tell me that, well, this is going to surprise you, that they're surprised that morale has not collapsed even further than it has. And their sense is that the bureaucracy actually feels kind of important right now because they realize that with no one giving them the instructions of what to do, they need to step up. Right. Yeah. But how long does that last? That's no way to run a business. It is. I kind of feel like that someone might walk in after Trump leaves and write a wonderful narrative about bad management and the varieties of it and what happens to an organization when it's either unmanaged or perniciously managed or managed by someone who just wants to destroy it. There are things going on there that aren't good long term, but I think the mood in the bureaucracy, if there is one, is like, if you're still there, is we got an important job because no one's telling us what to, we're not getting the instructions we need. Mm-hmm.
So we're December 2019. It's been 10 years, no recession. The economy's done okay over that time. It's been about 11 years since the crisis really broke out. Story in Bloomberg today, 70,000 bankers in Europe have lost their job just this year.
Really?
When you look back at the decade of regulating banks, dealing with the fallout of the crisis, thinking about where Wall Street is. Has anything changed, or have things changed as much as you would have expected sitting there in 09 and 10 writing The Big Short?
No. I thought there would be radical cultural change. Like it would be not just some laws, but attitudes towards and on Wall Street would change. And what has changed is it is true that the banks are much better capitalized. It is true that they're not going to, they're unlikely to reprise the same kind of crisis. I don't think,
whatever private equity for that one.
It will be there'll be something different will happen, but it won't be the big Wall Street banks taking risks with subprime mortgage loans. It'll be and it won't be that they don't have enough capital. So that's been fixed. And briefly, I had a lot of hope for the Consumer Financial Protection Bureau. I think that institution, is underrated in terms of its importance, because what's happened in the society is that Wall Street opened up a whole new border between itself and Americans who didn't even have assets. They just had liabilities. All of a sudden, you're doing business with subprime mortgage borrowers or student loan borrowers or credit cards or payday loans, and it's really easy to prey on people, and you generally make more money giving them bad advice than good advice, or having them do bad things for themselves and good things. And that border really needs to be policed. And the Consumer Financial Protection Bureau it really serves that function. And the fact that the Trump administration can explicitly gut it, say we're just not going to let it do its job, and nobody, I'd have thought there'd been a revolution in the streets. I don't understand that. But on the other hand, it's all very complicated.
All right, and coming up after a short break, we'll recap today's market action ahead of tomorrow's jobs report. We're back after this.
One final look at where the markets finished for today. Green on the three major indices. S&P still holding above 3,100. They're able to get out of the red. Some after hours action. We had Zoom making some moves, and also Ulta, one of our best performers of the decade.
Yep. A little bit of a bounce back quarter there for Ulta. Zoom down big. Best performing stock in the S&P today, PVH.
PVH.
How about that?
There you have it. Tomorrow's a big jobs report, so you're not going to want to miss that. That's all for now from New York. I'm Jen Rogers with Miles Edlin. This is the final round on Yahoo Finance. Stay tuned for this week's episode of Influencers with Andy Serwer, Zadina Friedman. That's coming up in just 2 minutes.